infrastructure investment, university partnerships, and the lowest taxes in decades are creating a stronger economy and the right environment in New York State for business to thrive. Let us help grow your companies tomorrow, today, at esd.ny.gov.
I'm Vern, the Orange Money Retirement Rabbit from Voya. I'm the money you save for retirement.
Who's he?
Well, he's green money for spending today.
Easy to tell you apart.
That and I am better looking.
I heard that.
When it's time to get organized for retirement, it's time to get Voya.
This year, we've got 100 reasons for you to switch to Jackson Hewitt. Tell your old tax service to take a hike, and we'll pay you $100 to file with us. Plus, you'll get free IRS audit assistance. So maybe it's more like 101 reasons. Switch to Jackson Hewitt and get $100.
We're at Lockheed Martin today to take a deep dive into the F-35 Joint Strike Fighter program. This is the most expensive weapons system in the world. Defense stocks have been hot. Investors are very keen to know what's going on in this sector. After years of cost overruns and criticism, most recently from President Trump, the price of Lockheed Martin's stealth fighter jet is falling. We have had incredible, unparalleled access to take in the scope of this weapons system.
In short, a declining day following a rampaging bull run is actually a sign of health, especially when it's associated with a gigantic yet well-run IPO. It should ultimately bring out more buyers than sellers.
Clearasil Rapid Action begins working fast for clearly visible results in as little as 12 hours. Wow. But what other teen problems can it fix fast? Maybe it can quickly give this teen a thicker mustache. Doesn't look like it. Will Clearasil act fast to help this teen concentrate on his math test? Darn. Can it help? Nope, no. So let's be clear. Clearasil works fast on teen acne, not so much on other teen things.
When you're diabetic, one of the important things about keeping yourself healthy is keeping your skin hydrated.
Gold Bond Diabetics Dry Skin Relief. 9 out of 10 saw noticeable improvement in just 1 hour. Dry skin is under control.
Gold Bond really works.
Life's too great to be stuck with stomach issues. Get back to living. Kaopectate Multi-Symptom Relief treats more than diarrhea. It quickly relieves 7 different types of stomach problems, so nothing can hold you back. Kaopectate. Get back to life.
Time for Kramer and Stop Trading.
Over the weekend, Goldman came out with a hold to buy Alcoa. Now, this is the AA kind, and it's talking about higher prices for alumina and aluminum. $52 price target. Why is this important? I think also big dividend policy. You know, people don't have to understand the Chinese government's making some very serious decisions about health versus employment. And the dirtiest kind reason why Alcoa can go up here. That's a long-term trend.
What's on Mad tonight?
One of my favorite stocks is Domino's Pizza, and it's really just been remarkable. No excuses, way up story. And then Mr. Muehlhauser, people don't know him. That is the old Manitowoc Food Service. They came out as well built. I went by the bar last night. We don't use any of their stuff. These are, of course, big institutional. But they make Garland, which is, to me, the finest stove in the world. New guy, new guest.
Jim, good show tonight.
Thank you.
Good Monday under our belts, too. Mad Money, 6 p.m. Eastern Time. When we come back, we'll talk Trump and the economy with Austin Goolsbee, the chief White House economic advisor under Obama. Dow's down 45.
America, you are welcome.
I'm in a really sharky mood today.
Sounds like a big offer's coming.
Shark Tank, tonight starting at 6 Eastern. CNBC, get yours.
Hi, this is Cindy at Reverse Mortgage Funding. How can I help you?
I'm considering a home equity line of credit, but since I'm over 62 years old, a friend thought I should look into a reverse mortgage line of credit first. Can you explain the difference between the two?
Sure. Well, when you take out a home equity line of credit, you're required to make minimum loan payments every month. For a while, that payment may be interest only. But after a set period of time, you'll have to start paying back the principal as well, which means your monthly payment may be substantially higher. A reverse mortgage line of credit also allows you to borrow against the equity in your home, but it has a flexible monthly payment feature, giving you the freedom to pay as much or as little as you wish. You even have the option to make no monthly loan payments at all.
So if I wanted to pay, say, $500 a month, I can do that?
Yep.
If I want to pay as little as $50 a month, that's okay?
No problem.
Or if I wanted to make no payment at all, I can do that?
Absolutely. Since there are no required monthly principal or interest payments while you live in the home, a reverse mortgage line of credit gives you the flexibility to control and manage your loan.
That sounds great.
Nearly 1 million savvy Americans have taken it, and that number continues to grow. So now's the time to discover how a reverse mortgage from Reverse Mortgage Funding can help you take control of your finances. With the flexible payment feature, you have the option to pay as little or as much as you like each month, for as long as you live in your home. If you'd like to pay down the principal and interest of your reverse mortgage early, feel free to make monthly payments of any amount you'd like with no prepayment penalties. Or use the benefit of a reverse mortgage line of credit and choose to make no monthly payments at all. So if you're 62 years or older, contact Reverse Mortgage Funding today to receive a free information kit about reverse mortgages and the flexible payment feature. Just call the number on your screen or go online and visit flexreverse.com. Isn't it time to take control of your finances? Call now or go online at flexreverse.com and request your free reverse mortgage information kit today.
The greatest population shift in human history is happening before our eyes. 60 to 70 million people are moving to cities every year. At PGIM, we help investors see the implications of long-term megatrends, like the prime time of urban expansion, pinpointing opportunities to capture alpha in real estate, infrastructure, and emerging markets. Partner with PGIM, the global investment management businesses of Prudential.
Squawk Roadmap is sponsored by PGIM, the global investment management businesses of Prudential.
Good Monday morning. Welcome back to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli, David Faber at the New York Stock Exchange. Sarah's off today. Some widespread weakness this morning. Dow's down about 45 points. S&P down about 10. Waiting for some details on the new immigration order from the White House. Expect some details around 11:30.
And our roadmap this morning starts with the president's top trade advisor speaking out, what he is saying in terms of actions that will boost growth in the U.S.
Busy week in Washington, perhaps some new details on the immigration order, and the GOP expected to roll out a new health care plan. We've got the latest.
Plus, shares of Deutsche Bank tumbling after the German bank announced an $8.5 billion capital raise.
Let's get some factory orders from Rick Santelli. Rick?
Yes, factory orders for January up 1.2%. Sequentially, that's down a tenth from an unrevised 1.3. If we look at what's going on with regard to durable goods for January was up a little better than expected, up 2%. Now, if we look at the past numbers, unrevised 1.8, you have to go all the way back to October to find a higher number in the form of up 5%. Now, when we look at ex-transportation, boy, we lose all that growth. We were only expecting up 1/10. We ended up with a goose egg. Capital goods orders, non-defense ex-aircraft, down 1/10%, following an unrevised down 4/10. Listen, this is the seed corn. Those capital investments by business, something to keep strict attention on. And we've had now 2 minus months in a row. You have to go back to December to see it up 1.1. And even that is a little bit underwhelming. So that may be the weakness. If we look at shipments versus orders, that was down 4/10. Carl, back to you.
All right, Rick, thank you very much. Rick Santelli. As we said, a busy day in our nation's capital. We await the new immigration order from the president with an event now scheduled for later this morning. Our Eamon Javers is at the White House with more. Eamon?
Yeah, good morning, Carl. The White House took its first crack at this immigration executive order back on January 27th. That, though, has been tied up in the courts. The White House has said that it believes that its first immigration executive order was legal, proper, and effectively executed. However, they are pushing forward with this second revised draft. We expect that it's going to limit the number of countries impacted down from 7 to 6, taking the country of Iraq off the list. We also expect more details at 11:30 from the administration, so we'll be able to bring you a full menu of what exactly the White House is doing at that time. And then, Carl, we're also expecting this week at some point to hear from Republicans on Capitol Hill about their agenda for Obamacare and some very tough decisions that have to be made there in terms of the path forward to repeal and replace Obamacare. All of that in the mix this morning as the White House is dealing with the fallout from the president's tweets over the weekend, accusing former President Obama of wiretapping him at Trump Tower in intelligence officials have said there's simply no truth to that. We'll wait and see how the White House handles that one today as well. That's got Washington roiled this morning, Carl.
All right, Eamon Javers in Washington. Eamon, we'll be talking to you later in the morning. Thanks.
You bet.
Meantime, stocks sliding this morning. All 8 sectors are lower, but the market is, of course, coming off 6 weeks of gains. Key question now, will investors continue to buy at these somewhat high valuations? Joining us here to talk about that at Post 9, Joseph Labornia, Deutsche Bank's chief U.S. economist, and Brian Belsky, BMO Capital Markets chief investment strategist. Guys, good to see you here. Joe, you know, we heard in the last several days, Fed's not waiting. Fed's maybe going to get on with things in terms of lifting interest rates. Everyone now expects that for March. On the other hand, on the fiscal side, I don't know if we're now going to assess that maybe these policy help is going to be a little bit longer in coming. How do those things fit together? And maybe it'll be a test for how much policy is already baked into this market?
The Fed certainly made a concerted effort, Michael, to announce that they wanted to go in March. I haven't seen anything like that in a while. And it sort of came out of left field because look at the futures markets. The Friday before it was only around 20%. Now it's over 80%. So they're going. The only thing that makes sense to me is they're anticipating some fiscal stimulus, which is built into my forecast. But I've been very bullish on growth. I remain of the view that fiscal stimulus is coming, and sooner than what many investors believe. In my mind, the equity market pretty much has it right.
So, Brian, your base case is for a pretty good earnings rebound. Does it involve anything on the policy side? I mean, what are you actually seeing that allows you to think that S&P 500 earnings can actually be revised up from here?
Well, Michael, remember, last year was a tough year for earnings in the industrial base in those areas that really focus on international growth like industrials. Now we've segued growth in some of these areas from an internationally biased growth strategy to more domestically biased growth strategy, especially some of those industrial companies that are going to benefit from the infrastructure bill, from some of these tax bills. And so we do think that there's still upside to the earnings. Now, earnings in general have not gone up so far in the first couple months of the year like many people thought. So I think it's probably we're due for a pause. This is a chicken little market, right? Everyone's calling for a market correction every day. And with the market down 30, 40 basis points today, listen, markets go down for fundamental reasons. And if the earnings don't come through, that's when the market will most likely see a deeper correction.
When you mention infrastructure bill, what do you say to those who say, what infrastructure bill? There is no infrastructure bill.
I think stocks have gone up in anticipation of a tax cut in Infrastructure and Affordable Care Act. We think the longer-term secular positive, Carl, is less regulation across the board. We're already feeling that in several different sectors. When you're talking about infrastructure, then you're thinking, well, what industrial stocks, right? But across the board, less regulation, the FDA, the FCC, the SEC, the EPA, it affects almost every company. That's why stocks are up in our view.
And that's already happened.
Yeah,
that's already happened.
I just want to add, so if you get my 3 to 4% GDP forecast, 5 to 6% nominal type of growth, you're going to get the earnings that Brian's talking about. Now, you haven't seen it yet in the macro data, the hard data, but you've seen it in all the sentiment numbers, the Purchasing Manager Series, the forward-looking expectations, part of those reports, consumer expectations, business confidence. And what's interesting is you've gotten this jump post-election, but you had very little retracement in these series, which tells me there's something real behind the movement.
So you think 3%?
I'm very bullish, David. I was one of the most negative people on growth for 15 and 16, and then I changed because, to Brian's point, I saw a much more pro-growth, pro-business policy tilt coming through. And
I think you kind of both are hitting on it in a certain way. Regardless of what we see out of Washington, you feel as though they've been emboldened to conceivably feel better about things, and therefore there'll be improvement, even if we don't see the legislation on tax reform that some certainly many hope for.
100%, because the CEOs are the ones that are impacted the most in terms of managing their businesses and seeing this less regulatory pressure across the board. Remember, we are a market of stocks, and with the majority of sectors underperforming the overall market this year, you want to focus on those companies on a fundamental basis that are recovering faster than others. That's why we're in a stock pickers market.
When you go into a weekend and we get tweets like we got, right, that news flow's coming into the week, is that all noise from an investing standpoint? Showdowns between the executive branch and the intelligence community?
Listen, we know that politics are politics, so I'd give you 3 words, blah, blah, blah. I'm going to make a bold statement. I believe the correction has nothing and will have nothing to do with Trump. This is going to be fundamental led, a surprise. Oh, the GDP number in China is not as strong. Something that we're not accounting for. We examine this president more than any other president. We are incensed with it. Stop doing that and start investing, and then I think the market can do its thing.
Oh, the market's treating it, Carl, as noise. When was the last time we had a 1% down day in the S&P?
100 days. Almost.
So the market's telling you that it's just noise.
And it will remain noise? I guess that's the question.
I think, though, this is, to me, the big issue is if you get my forecast, and I'm guessing Brian has a much higher target for the market, what happens if the Fed feels like it's behind the curve late in the year, and does the bond market then move in anticipation of it? Then you have to countervail that view with who's running the Fed. Are there academicians running it? Probably not. These people are running it. Will they be more easy money people? Does the yield curve steepen? Do real rates then rise? And how does that impact stocks? But that, to me, is a late 17, early 18 story. It's not right now.
All right. Joe, Brian, thanks a lot. Appreciate it.
When we come back this morning, the president's top trade advisor, Peter Navarro, speaking out. What he says will boost growth in the U.S. Leisman probably talks to him a bit about the trade deficit as well. Ridiculously valued. That's Barron's on Snap. We're going to discuss that story over the weekend. A lot more Squawk on the Street continues in a moment.
Second best for the hustlers, gangsters, bad bitches, and your ugly friends. I cannot breathe.
Come to us to search for their ideal hotel. We get them to their ideal hotel, and then we show them where they can book it for the best price. Trivago is a very, very clear value proposition towards consumers. We don't only empower our consumers by giving them a great tool, we empower also advertisers, we give them a marketplace where they can bid, and we empower also our people at Trivago. When I look at all these amazing companies at NASDAQ we are now linked to, I see how amazing it is to be here.
Why do people invest? They invest for what's next. That could be a college dream, a new priority, an active retirement. Whatever next is.
Take a deep dive into the F-35 Joint Strike Fighter program. This is the most expensive weapons system in the world. Defense stocks have been hot. Investors are very keen to know what's going on in this sector. After years of cost overruns and criticism, most recently from President Trump, the price of Lockheed Martin's stealth fighter jet is falling. We have had incredible, unparalleled access to take in the scope of this weapons system.
Attention. Attention.
This is an urgent consumer alert from the Annuity Action Network. If you are currently getting or will be getting annuity payments, structured settlement payments, and lawsuit settlement payments, you may qualify for a lump sum of cash or an annuity exchange. You need to call 1-800-616-4881. Again, if you are getting or will be getting annuity or other payments from an insurance company, you may be entitled to a lump sum of cash. Federal and state laws have changed. Call us now to find out how they affect your annuity or insurance company payment rights and lump sum options. The number to call is 1-800-616-4881. To find out about your valuable annuity payment rights, you need to call the Annuity Action Network at 1-800-616-4881. The call is free. Call now for official information about your annuity payment rights. Call the Annuity Action Network right now at 1-800-616-4881. Or text the word ACTION to 99000 to get started today. This was an official consumer alert from the Annuity Action Network.
When I got to be 50, my doctor told me enlarged prostate happens with most guys my age, with frequent urination day and night. He suggested Urinozinc. Reduces frequency, and most important, supports a healthy, normal prostate. Take Urinozinc and take care.
It's IHOP's National Pancake Day, and to celebrate, we're giving away free short stacks of our world-famous pancakes. Join us in supporting Children's Miracle Network hospitals. Free short stacks on March 7th from 7 a.m. to 7 p.m. IHOP, eat up every moment.
If the current distorted market patterns continue, and to paraphrase Keynes, in the long run, we are all likely to be owned by foreigners.
He's concerned that foreigners are buying up the U.S. food supply chain, as well as accumulating assets when they run trade deficits with the United States, accumulating assets with which to buy key technologies in Silicon Valley. He said the Trump administration plans to increase the rules of origin for U.S. Manufacturing, as well as tax reform and reducing regulations should help create a better business climate for trade in the United States. And he needs to promote fair, free, and reciprocal trade.
The broader goal of a free trade policy based on fairness and reciprocity is not to raise either tariffs or non-tariff barriers. Rather, it is simply to encourage our trading partners to lower theirs.
Now, a lot of folks at the National Association for Business Economics, where Navarro spoke this morning, don't necessarily agree with the dire outlook for the trade deficit they see as part of a U.S. global trading system, that Americans getting cheap goods as a result of that, and don't necessarily see the dire consequences. But we'll see what kind of actual policies come out. David, they said he declined to say whether or not the administration would label China a currency manipulator, saying that's up to the Treasury Department, and that report is coming out in April. David?
What about this idea that you raised, I guess that he did, of our food supply being owned by foreigners, or this, I guess he's referring perhaps to purchases by, we had the Chinese buy something, but not a lot, and or our technology companies, of course, we're preeminent, but this idea somehow that the supply chain also could fall into foreign hands. Did he give any more concrete examples of what he's talking about?
He didn't. He talked about some individual countries and their trade deficits as being among those who the administration would like to address. But I think he is talking about some of those deals you spoke about, David, some of the ones you've obviously covered so well, where what happens, of course, people understand the economics of this. When China accumulates a large trade surplus with the United States, they have dollars and they have treasuries, which gives them a lot of money to buy assets in the United States. So they've come in and they buy things. And Peter Navarro takes a very dark view of this, that the U.S. food supply chain over time could fall into foreign hands. Is concerned about them buying up properties and technologies in Silicon Valley, as well as some of the defense issues, saying there's only one company in the United States that can fix or repair U.S. naval propellers. So that's the kind of thing. Now, some economists here would point out, you know what? We have a committee in this country designed to look at those foreign purchases for national security reasons, and that trade policy shouldn't necessarily be oriented to that, but by deal is how we should handle this.
Right, yeah, you're referring to the CFIUS review, which many deals undergo. And, of course, China did buy, Smithfield Foods a few years back, Steve, big pork producer.
Right.
Although I think
they own our spam, don't they, David?
I think the pigs remain in the country, though, right? I mean, it's not like they took all the hogs over there and are shipping them back to us.
No, I don't think so.
Maybe that's a little.
That could be trouble if there's
this
VAT.
Is a particularly. It's a very dark view. I mean, this is not the view of most economists in this room. Most of them, in a survey that was out this morning, said we should be increasing free trade, not putting barriers and tariffs on. And by the way, also they said we should increase immigration. Only 5% said we should spend any more money to deport illegal immigrants in this country.
All right, Steve, thank you for reporting from NABE. Steve Leisman.
Sure.
Meanwhile, shares of Deutsche Bank falling after announcing that $8.5 billion capital raise. John Cryan telling CNBC it was the right time to go to market.
We were listening to some feedback from the market where there were still concerns, which were to some extent shared by our clients and our counterparts, that we still didn't have enough capital.
Deutsche also announcing changes to the executive team, naming 2 co-deputy CEOs to work alongside Cryan. The bank will undergo restructuring moves in an effort to turn its business around. Talked to Jim earlier this morning about perhaps it marking a turn in Europe, as he said.
Yeah, at least representing part of that turn. I mean, the stock is up, 70% or something like that from last September. And back then there was talk of a much bigger potential need for a capital raise. So, yes, pulling back today off levels that really have been, much higher than they've been. So I guess you can kind of play it both ways, but it seems like it's, kind of part of a solution and maybe recognition of past problems, right?
Yep, taking the dilution, which is why the stock is down largely, I think. This morning. Of course, I mean, you go back, of course, 8 years from the bottom of at the Dow. You remember the stress test for our banks, and I think the introduction of levels in terms of assets and where things stood that the market believed really instilled confidence. And when they started to raise capital, that was kind of one of the turning points.
The fact that they could raise capital.
Yeah, and the Europeans never really got there.
Very much a belated process over there. When we come back, Snap has been soaring since its IPO, up nearly 60%. It's been around the flat line today, a little bit pulling back, actually. Barron's calling its share price ridiculously valued. Other analysts bearish as well. We'll discuss with GGV Capital Managing Partner Hans Tung. taking a look at stocks this hour. More broadly, we are pulling back. Dow down 64, and the NASDAQ somewhat underperforming, down more than 0.5%. Much more on Squawk on the Street. Stay with us.
More than 24,000 companies run their business in the Oracle Cloud.
Pinterest is the world's catalog of ideas. We help people discover and do what they love. So partnering with Oracle Data Cloud has helped us demonstrate how we drive new customer growth for our partners, a concept that couldn't be more relevant in today's competitive retail environment.
Oracle, more enterprise cloud applications than anyone else.
90 days free trading, up to 700 trades from Scottrade. 13 weeks of opening bell adrenaline and closing bell calm. There are roughly 2,800 companies listed on the New York Stock Exchange, 3,100 on the NASDAQ. And now is your chance to introduce yourself on Scottrade's dime.
The value of getting the correct diagnosis, then to get the right treatment, is almost unquantifiable.
When you come in with pain, it's not a standard algorithm. We're going to find out exactly what your history is, what your doctor is suspecting. You get interviewed by one of my technologists prior to even going in the scanner.
The quality of our film allows our expert radiologists to do a better job.
Radiologists figure out and show the surgeon or your clinician exactly what's the problem. The reading of that MRI is going to guide exactly what happens to you in the operating room and your eventual recovery from that.
Talks about his new comedy.
Trial and Error is a travesty of real-life crime documentaries.
Where were you the night Margaret was murdered?
I went to get gardening supplies.
One shovel, one tarp, and let's throw in the ski mask.
Nobody knows whether I did the crimes, not even the cast.
Trial and Error premieres March 14th on NBC.
Ridiculously valued. Barron's mincing no words in assessing the valuation of Snap, which made its market debut last week. Stocks up more than 50% since the IPO, but down 5% this morning. Its first loss since going public. Joining us this morning to talk about it, Hans Tung is managing partner at GGV Capital. Hans, it's good to have you back. Good morning.
Good morning.
We're in this obviously crazy period after the IPO, where retail's trying to get their hands on it. A bit of a silly season. How long does that take to break?
Well, it's hard to say how long it will take. Right now, given where the valuation is, on a equity value per daily active user basis, Facebook's trading at about $325 per daily active user, and Snapchat at the closing of Friday's price is already at $222. So it's already at 70% of the sort of monetization capability of Facebook is what the market's expecting. And it's given where Facebook and the gap between the two right now today, it'll take Snap quite a bit of time to catch up.
Yeah. So given all that, we've seen targets at 10. We've got a call today saying 19 to 23. Have you done any work at what reasonable value is?
For us, we're looking at what's the revenue per daily active user for Snap. At the end of last year, it's roughly around $2.5 per user. And for Facebook is roughly 22. And so what is the RAV value for Snap? Is it 1/10 of Facebook, which will make it around 40 billion? Or is it going to be lower just because it'll take more time for them to actually realize that valuation?
Yeah, Hans, it seems like part of that analysis, deciding exactly how much revenue per user Snap can eventually generate, it somewhat comes down to, well, has Snap just not even really fully attempted to monetize, or where they are on their path to try and maximize the revenue they can get from users? So what's your take on that? Have they basically been intentionally holding back and now they can accelerate that process?
Well, I'm a dedicated consumer internet user, so we track a lot of companies in the consumer internet space, selling ads to agencies and the brands. From what we have seen, Snapchat is making a concerted effort to beef up their advertising team, advertising approach, selling more bundle deals to the advertisers. But judging where Instagram and Facebook are right now, Snap has a ways to go to get to that same level of sophistication.
Needham this morning, Hans, looks at total addressable market, and their argument is that it's a fraction of Facebook's. I wonder what you read into that. Are we accepting some sort of unwritten rule that they can only appeal to millennials, or where do you think that narrative comes from?
There are two ways of looking at it. One is Snap appeal to millennials. That's where most of the users are, and half of them are based in the U.S. But the growth is coming from millennial users outside of the U.S., which is already probably growing at a faster rate than millennial users in the U.S. We do see, as an investor both in the U.S. and China, we do see there's a lot of commonality among millennials on a worldwide basis. So I think what the valuation Snap is assuming is that the growth internationally will happen, even if it doesn't diversify beyond just millennials. As you know, part of the attraction for the user being on Snap is that the parents are not on it. Parents don't get it. So there's more privacy and freedom for millennial users to express themselves on Snap.
Right. That plays into something we also hear. Kramer said there's something ethereal to the appeal of Snap. And then we also talked to some influencers the last couple of days who argue that even though I have a smaller following on Snap, it's more valuable than my larger following on Insta. Is that sort of where you're headed with that?
I think both Insta and Snap are very interesting assets. They are used differently. User on Instagram is more expressing themselves, but not in a sort of sharing secret with friends kind of way. It's more showing the best side of themselves. On Snap, it's more of a joke amongst friends kind of approach. So both usage are real and legitimate. It's just very different. And we think that both we should have interesting growth ahead. If Facebook ever break out Instagram on a standalone basis, the valuation for that property will also be very high.
Yeah. One last thing. GGV's not in it, are you?
We're not an investor in Snap, but we're investing in other companies that target millennial users, whether it's Bustle.com or Musical.ly, and we like that segment quite a bit.
Hans, it's good to get your take on this and a lot of other things. Thanks so much. Hans Tung, joining us today from GGV.
When we come back, former chairman of the Council of Economic Advisors under Obama, Austin Goolsbee, he'll be with us. We're going to get his take on the president's trade plans, that is the current president's, and as well, Yellen's next move. Squawk on the Street will be back right after this.
The future of business in New York State is already in motion. Companies across the state are growing the economy with the help of the lowest taxes in decades, a talented workforce, and world-class innovations. Like in Plattsburgh, where the most advanced transportation is already en route, and in Corning, where the future is materializing. Let us help grow your companies tomorrow, today, at esd.ny.gov.
The Range Rover Sport. Land Rover. Above and beyond.
I avoided steps.
I hated pickle jars.
Then my pharmacist recommended Capsaicin HP for arthritis.
Capsaicin quickly blocks pain at the nerve level for hours.
The more I use it, the better I feel.
Capsaicin HP. Take the pain out of arthritis.
The delicate skin on your neck can show age. Or not.
Gold Bond Neck and Chest Cream helps improve texture and increase elasticity. 97% had visibly firmer skin. Gold Bond Neck and Chest for visibly firmer skin.
If you're approaching 65,
Now's the time to get your ducks in a row to learn about Medicare and the options you have. You see, Medicare doesn't cover everything, only about 80% of your Part B medical expenses. The rest is up to you. So if 65 is around the corner, think about an AARP Medicare Supplement Insurance Plan, insured by United Healthcare Insurance Company. Like all standardized Medicare supplement insurance plans, they help cover some of what Medicare doesn't pay and could save you in out-of-pocket medical costs. So don't wait. Call to request your free decision guide and gather the information now to help you choose a plan later. These types of plans let you pick any doctor or hospital that takes Medicare patients, and there's a range of plans to choose from, depending on your needs and your budget. So if you're turning 65 soon, call now and get started. Because the time to think about tomorrow is today. Go long.
President Trump's rolling back protections for transgender students. More than 50,000 North Koreans rallied after the North Korean government launched 4 more missiles early Monday morning. North Korea has not officially acknowledged the launches, which were detected by South Korea, Japan, and the U.S., and has been universally condemned as provocative. Israeli police say a Palestinian militant has been killed in a shootout in the West Bank. The man headed a group planning attacks against Israeli targets, and when Israeli forces tried to arrest him, he opened fire. A study by Bankrate.com finds just 6% of American adults who expect to receive a tax refund will plan on splurging on a vacation or a shopping spree. A full 34% will save or invest it. Another 29% will spend it on necessities, such as food and utility bills. That's the news update this hour. I will send it back downtown to you, Carl.
All right, Sue, thank you very much, Sue Herrera. As you probably know by now, the Fed set to raise rates this month as it seeks to keep pace with the recent tide of economic optimism and the Trump rally that's followed. But just impact will a rise in rates and the Trump policy rollout have on the overall economy? Joining us this morning, the former chairman of the Council of Economic Advisors, Austin Goolsbee, now a professor of economics at Chicago's Booth School. And with us, as always, a CNBC contributor, Jim Pethokoukis. Guys, it's good to see both of you.
Hey.
We've mentioned
Carl,
sentiment.
good to see you again.
We talk about the stock rally all the time. Now people are looking at ISM prices paid, Austin. To what degree will inflation be the story of this year?
You know, I think you're seeing expectations of inflation are rising. That's one of the big motivators of the Fed. They're saying, well, we're getting close to our 2% target finally. I hope that inflation will not be the story, because inflation's got a bit of a sunburn aspect of, you know, once there's significant inflation here, it's too late for the Fed to act. It's going to be just a painful recovery. And that said, I continue to think the economy for the last 18 months, you've seen pretty strong job market. You've seen inflation coming back to the target, the Fed itching to get the rates higher. But as those rates go higher and all the other countries of the world are loosening their monetary policy, I think you're going to see continued strength of the dollar and a couple of things that put the brakes a little bit on the growth. So I don't think that there's going to be that much inflation.
Jim, you go along with that?
Listen, I hope we don't get, a surge of inflation, but we do see a bit of a reflation trade. And what I think we're actually seeing here is sort of, at least for now, the end of the sort of hard secular stagnation case. I mean, it was only a year ago when we were still in the full throes of this. We couldn't grow. Inflation was dead. Interest rates were going nowhere. Now I think that case is really weakened. Now I still think there might be kind of a soft secular stagnation case, which I think is a more structural case involving productivity, labor force participation, demand, interest rates are low forever. I think that has weakened, and I think that's being reflected in stock prices.
Austin, does hoping that inflation don't throw a lot of fiscal stimulus at an economy that's already, rolling at a pretty good pace?
Yeah, probably. There are two fundamental things going on that you got to ask yourself. One is, do you think we're approaching full employment or not? The president down to completely normal levels. He has a view in his mind, I think, that the labor force participation rate is going to go back to something like what it was when the country was much younger. So if you think that, then you, I guess, would be for some big stimulus. But I think if you view, like the Fed does, that we're kind of approaching the full employment spot, then a whole bunch of stimulus would mostly be inflationary.
But listen, I think there's a case, for fiscal policy at this point to boost long-term growth and our growth potential. I think the case that we need fiscal stimulus to boost demand right now is much weaker. I mean, I also mentioned the labor force participation rate. I don't think running the economy hot is what we need right now, but there are longer-term policies to help boost labor force participation. I think we can do better, but what I hear from the Trump administration is the idea that it's still, 2010, and we need a lot of stimulus to boost demand. I think the case for that has really dissipated.
That's what I think, too.
Shorter term, guys, we do have a jobs number coming our way on Friday. Some viewers are curious, how bad would it have to be, Austin, to get the Fed, to get probability on March back to what we saw last week before?
Oh, that's a great question. I think it would have to be pretty darn bad for them to get off of the path that they're on.
So like a number like so. What?
Pretty bad.
I bet if it was 40,000, that there'd be at least a number of people say, well, let's wait a month or something to see if this was a blip.
Listen, I'm going to give them the Price is Right thing, so I'm going to say 39,000.
39?
Undercut them.
I don't know. It wouldn't matter whether the labor force participation rate went up. I mean, obviously, we're talking in multiple levels of hypothetical here. But it seems as if, we're in this blackout period. So maybe if the market is at 100% and you do get a number weak enough, I guess maybe it's just an occasion for some second guessing by investors. Huh, Austin?
Yeah, that's what I think. I think you'd get some second guessing. I still don't think it would change the Fed. I mean, I said 40,000, but even if it was zero, I think you'd still have a lot of the people at the Fed saying, nah, this has to be a blip. We have a long trend. It might be more interesting to keep an eye on the pricing, and inflation. If you started getting some data that said deflation or we're going the wrong way, we're not getting near the 2%, then I think it might change their mind.
Drop off in wage growth, that sort of thing.
Austin, I continue to be interested, though, in this debate about whether we can get to above 3% GDP growth. We had Joe Lavorgnon on earlier today saying he believes it. Deregulation, in part, he's citing as one reason. Obviously, increased confidence in the business community. It will become important. Dynamic scoring on any of these important bills, and they go into reconciliation as to whether you really think you can get over 3%. Do you agree, Austin? Do you think this deregulatory environment is going to lead to that kind of growth?
No, well, look, let's split two different things. One is, in the next 1 year or 2 years, could you get to 3%? Maybe. But this direction that the Trump administration is headed is to instruct the Council of Economic Advisors to put 3.2% growth for the next 10 years. No, that will not happen. You got to remember, the population growth in the U.S., which is part of the growth rate, is dramatically lower than it was in the 1980s, let's say. So saying, hey, let's just go back to the growth rate of the 80s is to ignore the fact that the baby boom is retiring, and it's just confused.
I think it's dependent. I think it may be partially dependent on this, but that doesn't necessarily matter if the corporate tax rate is 20% or 25% or 28%. We're talking a portfolio policy. What I hear from Washington is we just need to massively deregulate, massively cut taxes, and it'll happen. I think that kind of stuff can help, but there's more to it than that.
Hey, Austin,
it's not a magic bullet, and so far it's been more like pointing the bullet and shooting yourself in the foot over and over.
Austin, one last point. We're going to ostensibly get some details on the new immigration order in about an hour as Secretary Kelly, Tillerson, AG Sessions speak. Have you done a lot of work on what that would do to growth? I mean, already we're talking about merit-based green cards and how that would affect tech.
Look, this is absolutely one of the bullets that I'm saying. There's no magic bullet for growth, but we can all agree that shooting a bullet in your own foot has a negative impact. And if you go try to restrict the growth of immigration into the United States, you have to deal with the demographic reality that of native-born the native-born U.S. population demographics look exactly like Western Europe and Japan. We will have a shrinking population and a severe limit to growth if we start restricting immigration. And if we start restricting high-skill immigration, it goes exactly the opposite of what Donald Trump seemed to be suggesting in his speech to Congress. So I just don't know what they're doing.
Jim, last word there?
If people want to do great things with their lives, we want them to think that there's no better place to do it than the United States of America.
Yes.
Jimmy, Austin, thank you guys. Good to see you both. Austin Goolsbee, Jim Pethokoukis.
Well, the GOP is expected to roll out a new health care plan, perhaps as soon as this week. Kayla Tausche is in Washington, and she has some details for us. Kayla.
Well, David, time is of the essence for House Republicans to unveil that draft if they want to stick to a self-imposed deadline of having it on the president's desk by Easter. Several meetings to that end took place over the weekend to work out some of these issues to try to finalize some of the language. On Friday, Budget Director Mick Mulvaney led a large staff meeting at the White House. On Saturday, there was a follow-up call with the director, with Speaker Ryan, with Energy and Commerce Chairman Walden, and HHS Secretary Tom Price, as well as a domestic policy advisor from the White House. And a senior GOP aide says the plan is in what he calls a very good place, with the goal of releasing a comprehensive bill early this week, still on track. But it's not one that is expected to deal with Medicaid separately. The goal is whether House leadership has been able to quiet the opposition from Tea Party lawmakers over the cost of the proposed tax credits in the existing plan. Yesterday on Face the Nation, Secretary Price said the cost of the plans for consumers and companies should go down because this time around they won't be one size fits all. Now, that had been one reason that insurance companies, Humana just the latest in the last few weeks, have been announcing that they would be withdrawing from the existing exchanges. But a lingering question for the industry, which may still not be answered this week, is when a law would actually be implemented, because the 2018 exchanges are already getting set, meaning it would be about 2 years before the end product for consumers would change. But of course, we'll see what is actually in the draft that is expected to hit early this week. The president is having dinner tonight with HHS Secretary Tom Price and the budget director. So we will see, Carl, what substantive details we get either today or possibly tomorrow.
Yeah, people starting to toss around terms like repeal plus and the like. Kayla, we'll see what happens this week. Thank you, Kayla Tausche. As we go to European car business, to Peugeot for $2.3 billion. Stocks at this hour, Dow's down about 83 now. S&P down 14. Back in a minute.
Hey, Gary, what do you got here? This bad boy is a mobile trading desk, so I can take my trading platform wherever I go.
You know that Thinkorswim seamlessly syncs across all your devices, right?
Oh, so my custom studies will go with me?
Anywhere you want to go.
The market's hot.
Sync your platform on any device with Thinkorswim, only at TD Ameritrade.
During the Lexus Command Performance Sales event, experience our most elevated SUVs ever, including the LX, GX, RX, and NX. Experience amazing.
QuickBooks introduces Jeanette and her new mobile wedding business. At first, getting paid was tough until she got QuickBooks. Now she sends invoices, sees when they've been viewed, and ta-da! Paid twice as fast for free. Visit QuickBooks.com.
On a premiere episode of American Greed.
We all assumed he was rich. We didn't know he was a thief.
High octane, low return.
Money was transferred back and forth, back and forth.
A $26 million scam takes investors for a ride.
People lost their life savings, their retirement.
And spins wildly out of control.
His son found him there and called the paramedics.
A premiere episode of American Read tonight, 10 Eastern. CNBC. Get yours.
Find the best opportunities right now. Our traders weigh in at tradingnation.cnbc.com. More Squawk on the Street coming up.
You know trading because you've always had that internal drive to know more. And that's why you trade with Schwab.
I'm thinking I want to buy on its next pullback.
Let's see. You could sell an out-of-the-money put.
That sounds interesting.
For unlimited calls to trading coaches, including option specialists whose only agenda is yours. Now get 500 free online trades good for an entire year. No more with Schwab Trading Services. Own your tomorrow.
The power of 100 of the world's top companies. The power of a proven 15-year track record. The power of an ETF. The power of QQQ. The thinking we put in, clients get out. Power your client's portfolio at powershares.com/QQQ.
Before investing, consider the fund's investment objectives, risks, charges, and expenses. Call 800-983-0903 for prospectus containing this information. Read it carefully. Distributed by Invesco Distributors, Inc.
Welcome back. Let's send it right out to Rick Santelli in Chicago for the Santelli Exchange. Rick.
Thanks, Mike. I'd like to welcome my first guest of the week, Andy Brown. You know, I'll never get off the topic. Last year, the Cubs won the World Series. All right. We're in first place a good chunk of the season, kind of the way the U.S. is in first place regarding the economies of the globe. And if we'd have lost a game or even a series late in the season, that wouldn't have really affected anything. So why is it that you and many others think that after almost a lost decade, rates are too low on the short end, that the Fed will raise rates, except for if the jobs number's bad? Are we still that close? I mean, think what that says. How micro viewpointed is that? Will this one number still potentially change the course of what ought to have been done already?
Well, first of all, Rick, I think the Fed should have been raising all through last year. You know, it's just with all the political on right now, with the French election coming up, the Dutch election, you know, as well as the timeline of the Trump tax plan just getting pushed out further and further. I wasn't so sure the Fed should actually go this time. But if you look at it, they really do have a window. You know, the French stuff is a little bit off the front page for the moment, and the economy is doing well. The Fed and all the speeches we saw yesterday, last week, was the recurring theme of, you know, equity markets are doing well, asset prices are doing well, and global economies are doing okay. So I guess they do have a window.
Isn't there also the issue, Andy, that our central bank showing some confidence in the economy can go a long way, considering that the fairy dust they could never artificial create through programs like QE is happening organically?
Absolutely, Rick, and we think it's going to happen even further. But I'm just a little worried that the equity market might be just a little bit ahead of itself at the moment, and I think that might curtail the Fed. Look, we think
Andy, let me interrupt you there. Because time's getting low. There's another area I want to cover. Andy, do you like to get together with your relatives around the holidays?
Absolutely.
All right. Can you imagine if all your relatives all were wiretapped, every conversation they had all year? Do you think your Christmas dinner would be more fun or less fun? If they all knew what each other said.
I think it would be less fun, Rick. I think that's a trick question, but go ahead. Where are we going on this?
Yeah, it is a trick question. You know what? I look at the landscape and I see all the things that need work done. And all I see on the front page of the papers, it's all the cloak and dagger. I don't know. If everybody in government has their conversations listened to by somebody, even for proper reasons, then when you get congressmen saying, hey, did you do this on this day? I can't remember what guests I had a year ago. Why doesn't Austin Goolsbee says it's too late for growth. Demographic time bomb, baby boomers. So what, over 95 million people that don't have jobs that are able-bodied? We just wash that away? If Austin's logic is correct, then why doesn't the party he favors start tackling entitlements and all the issues that the demographic time bomb's playing with? You can't have it both ways, can you? Finish this off, Andy.
No, I think Austin Goolsbee is 100% wrong. I think there's massive underemployment in this country, and I think Trump's, backing up the regulations, improving the tax plan is going to bring a lot more people into the marketplace, and we're looking forward to 3+, possibly 4% GDP growth, and I think he can do it.
All right, Andy, listen, thank you for taking the time. It's a dicey time to be in the markets watching all the craziness going on in the political world. Maybe they ought to just get some of these policies taken care of and let the fourth estate take a rest. Andy, thank you. David, back to you.
Thanks, Rick.
Okay. Thank you, Mr. Santelli. Let's send it over now to John Ford, who's got a look at what is coming up on Squawk Alley. John.
Well, David, Snap stock is off some 6% so far this morning. We're going to check in with Tara Swisher about what that IPO means for Silicon Valley. We're also going to check in on what Snap's IPO means for the broader market. And of course, we are expecting an immigration update from the administration coming up during the hour. All that coming up in Squawk Alley.
You're watching CNBC, first in business worldwide.
Snap strategies. Overheated stock or smart buy? After an eye-popping IPO, how investors are playing it now. Squawk Alley today, 11 a.m. Eastern.
Attention. Attention.
This is an urgent consumer alert from the Annuity Action Network. If you are currently getting or will be getting annuity payments, structured settlement payments, and lawsuit settlement payments, you may qualify for a lump sum of cash or an annuity exchange. You need to call 1-800-616-4881. Again, if you are getting or will be getting annuity or other payments from an insurance company, you may be entitled to a lump sum of cash. Federal and state laws have changed. Call us now to find out how they affect your annuity or insurance company payment rights and lump sum options. The number to call is 1-800-616-4881. To find out about your valuable annuity payment rights, you need to call the Annuity Action Network at 1-800-616-4881. The call is free. Call now for official information about your annuity payment rights. Call the Annuity Action Network right now at 1-800-616-4881. Or text the word ACTION to 99000 to get started today. This was an official consumer alert from the Annuity Action Network.
The goal of every allergy sufferer is 0 nasal allergy symptoms, and nothing gets you closer than Nasacort. It can relieve your worst allergy symptoms, even congestion. Because unlike antihistamines that stop just one cause of your symptoms, Nasacort stops more. And stopping more gets you closer to 0. Nasacort is scent-free, alcohol-free, and has no harsh taste. Nasacort, guaranteed or your money back.
Was there. Her company, of course, is familiar to anyone who's got young kids. It's an online platform that connects parents and babysitters. And I asked her this morning how the dinner went.
I think businesses have a huge responsibility when it comes to supporting paid leave with the government's support of making it mandatory, as well as child care tax credits, supporting these kinds of things that is making care much more affordable.
Now, Ivanka's plan would allow families to deduct the cost of childcare from their income and provides a refundable tax credit for low-income households. It also creates expanded tax-free savings accounts specifically for childcare. Now, there is some pushback, however, on this idea. The Tax Policy Center found that most of the benefits would go to households making 6 figures. Families making less than $40K a year would get just a $20 bump in their after-tax income. Sheila Marcello told us she's worried about that issue as well.
We actually believe instead that it should really be focused around an expandable, advance, and refundable credit instead of a deduction.
Now, Marcelo does support Ivanka's call for paid family leave, and she said that the government should find ways to encourage more companies to offer child care benefits. She also told me that she hopes the dinner with Ivanka was just the beginning of a deeper discussion going forward. Back to you guys.
Elon, thanks very much. Look, shares of Snap down 7%. 24.48 was where the stock closed at the end of the first day of trading. So it's retaining that first day pop, but that little bit of follow through on Friday, mostly away, but not quite. We'll have much more ahead. Stay with us.
Opportunities under the radar. The trends and money moves private equity titan Barry Sternlicht sees for the markets and investors. Squawk Box tomorrow on CNBC.
Alpha seems more elusive today. Is it because so many go at the investment managers at PGIM take a long-term view, teaming specialized active investing with risk management rigor to seek out global opportunities. We manage over $1 trillion this way, attracting many of the world's leading investors. Partner with PGIM, the global investment management businesses of Prudential.
When you have 495 online U.S. equity trades, you realize the smartest investing idea isn't just what you invest in, but who you invest with.
This car is traveling over 200 miles per hour. To win, every millisecond matters, both on the track and thousands of miles away. With the help of AT&T, Red Bull Racing can share critical information about every inch of the car from virtually anywhere.
Brakes getting warm. Confirmed. Daniel, you need to cool your brakes. Understood. Brake bias back 2 clicks.
Giving them the agility to act like AT&T.
This year, we've got 100 reasons for you to switch to Jackson Hewitt. Tell your online tax service to take a hike, and we'll pay you $100 to file with Jackson Hewitt. Plus, you'll get your max refund. So maybe it's more like 101 reasons. Switch to Jackson Hewitt and get $100.
The investment world is full of complex and expensive products. At Sector Spiders, we recognize the need for lower costs, more clarity, and greater focus. So we wrote a new chapter for today's investors. Sector Spider ETFs divide the S&P 500 into 10 distinct sectors. You can see exactly what you're investing in with full transparency. Each sector has the diversification of a mutual fund, the flexibility to tailor your investment strategy, the all-day tradability of a stock, and the tracking of an index. Sector Spider ETFs can be used to customize your portfolio allocations, overweight or underweight your sector exposure, and minimize single stock risk. Now it's time to turn the page to a clearer, more focused approach. Sector Spider ETFs, the next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Sectornomics is sponsored by Sector Spider ETFs. Visit them on the web at sectorspiders.com.
Welcome back to the Squawk on the Street. I'm Seema Modi. Let's take a look at technology. It is one of the worst performing sectors in today's trade, just down about 0.5%. Immigration, that's been a hot topic with the government late Friday announcing the temporary suspension of premium processing of H-1B visas, which are heavily used by some of the major tech companies like Apple and Amazon to recruit skilled talent from overseas, many times from India. Outsourcing firms Infosys, Tata Consulting, and Cognizant also use H-1B visas as well. This is a temporary suspension that goes into effect on April 3rd and could last as up to 6 months. Now, speaking of immigration, in just half an hour, the Trump administration is laying out the details of its new revised immigration executive order. Secretary of Homeland Security John Kelly will deliver remarks along with Secretary of State Rex Tillerson and Attorney General Jeff Sessions. Now, we'll send it back to Carl and the gang for Squawk Alley. Carl?
Thank you, Seema. We're going to get to that in a few minutes. Thank you. Good morning. It is 8 a.m. at Uber headquarters out west. It's 11 a.m. on Wall Street, and Squawk Alley is live. Good Monday morning. Welcome to Squawk Alley. John Fort and me at Post 9 on a busy Monday morning. We're going to get some new details this morning on the president's latest executive order over immigration, and event scheduled today at 11:30 Eastern time. Our Eamon Javers is at the White House with details on that as we get them. Eamon?
Yeah, good morning, Carl. Limited details for now. We'll have the full details at 11:30 when the White House rolls out its new plan. But for now, we can tell you that it looks like this second crack by this White House at this immigration executive order is going to just focus on 6 countries, not the 7 that they initially focused on. They're going to take Iraq off of the list. We'll wait for additional details, but I can tell you that this White House very much believes that its first crack at the immigration executive order was legal and proper and well handled. That said, the courts stepped in to block some of it, so they're taking another chance at it today. We'll wait until 11:30 to get all those full details, but so much attention focused on this issue in the wake of the rollout of that last immigration executive order. One of the focuses will be on whether or not the White House can do this now without provoking the kind of chaos and confusion that we saw at airports around the country as officials on the front lines day to day struggled with figuring out exactly who was allowed into the country and who was not. They've had some time now to process this and get the information out to all the people at the airport. So we expect that they'll be giving us the full details here in about a half an hour's time, Carl.
Eamon, don't go too far. We'll come back to you for more on that. Eamon Javers of the White House for more on that and the impact and risks to the rally as they stand right now. Let's bring in Scott Wren, Wells Fargo Senior Global Equity Strategist. Scott, it's good to have you this morning. Hey, Carl. You've been saying for a while market maybe was a bit ahead of itself on policy expectations. Dow's down.
Long time since last fall, we've been looking for the S&P 500 to hit its high somewhere around the middle portion of the year, somewhere at or above the top end of our target range, which is 2330, so a little bit above. That's where we are. It's come a couple months earlier than what we anticipated. So, I think we'll probably take another run higher. But for us, the big thing, the second half headwinds are going to be little inflation in 2018 over wages, maybe a little general inflation, maybe the Fed being behind the curve, those kinds of things. So I think net, we're going to be somewhere between 2230 and 2330 at the end of this year. It's going to work out to a mid-single digit type of return if you look at a total return. Nothing to panic about. I don't think the cycle's over, but this could be more of a stall year when you compare it to last year.
Scott, you said that you feel like the new administration is going to have very little to do with what happens with the economy in 2017. It'll have more of an impact on years out. Do you think the market is pricing that expectation in of, no big impact in 2017 the same way you are, or is that something that we have to reckon with in the coming weeks?
I think the market's really done a great job of not pricing in too much of what might and could happen. We would argue that the stock market finished the year at what we would consider fair value. And of course, we were biased. It finished the year in our target range. Our target range is just a little barely higher, less than 2%, 1.5%, something like that. So I would make the argument that until really about 2 weeks ago, the market was trading at fair value based on the fundamentals that are in place for 2017 as we saw them. But this last little run higher over the last couple of weeks, I think, there's some people starting to chase it a little. There's a little bit of pricing in of what might and could happen. But overall, these valuations aren't stretching. And we would argue that there's really not much of a Trump premium built into stocks at this level, and certainly a few percent below this, no.
Stephen Myro joins us this morning, Beacon Policy Advisors Managing Partner. Stephen, good morning to you.
Good morning.
We are expecting perhaps a view of the ACA repeal draft out of the House. And if we get that, I wonder if you think investors start to say to themselves, all right, the legislative wheels are turning slowly, not that much farther off. Does that encourage the market?
I think it will initially, but the ACA repeal process is going to be the most challenging one for the White House. It's the biggest political priority, but it's also the biggest political challenge. From our perspective at Beacon, we've been telling clients since soon after the election that tax reform is really much more of a second half of 2017 story.
Stephen, what seems like an eternity ago, you suggested that Paul Ryan has chased a couple of big policy unicorns, one of which was corporate tax reform, the other, or I should say comprehensive tax reform, the other entitlement reform, and you thought that wasn't going to happen if Hillary Clinton was elected president. Well, now it seems the Trump administration is pushing back on the idea of entitlement reform. Is that going to have any market impact? Do you expect uncertainty out of that? How do you see it now?
I don't see entitlement reform really being in play. I think once they can move past the political challenge of dealing with the ACA, the biggest fiscal stimulus move, at least out of the legislative branch, will be tax reform. The other piece that I think is critical for the market that maybe a lot of pundits are underestimating is not just the regulatory rollback, but it's the certainty that there will be no new regulations coming out of left field after 8 years of the market dealing with that. The real issues that I think the market are perhaps overestimating, at least in terms of timing and magnitude, is when we talk about infrastructure legislation or significantly increased defense spending. So you have to separate the fiscal stimulus measures based on the rhetoric.
Yeah. To that point, Scott, let me pin you down on a couple of sectors. Whether it's infrastructure and industrials, I see copper is at the lowest since late February now, or maybe it's healthcare or tech with the SNAP enthusiasm. To the degree your targets come into play for year end, where's the strength going to be?
Well, I think, Carl, for us, and like I said, I think we're going to be a little bit lower than where we are right now at year end, not meaningfully, but, we just backed off technology. We had been overweight for quite a while. I think technology is pretty fairly valued, but we continue to like industrials, we like financials, we like the consumer discretionary sector, and we like healthcare, which obviously have been beaten up, and that position hasn't treated us well from time to time over the last 6 months. But I think the pricing worries there are overblown. Pharma's good, managed healthcare. I think those are two industry groups that we like in there. So I think even though the market might be a little lower at year end, I think those are the ones you want to lean toward, the sectors that are still sensitive to the economy overall. You don't want to be defensive because I don't think this cycle's over. And based on our work anyway, 2018 offers some upside promise that would maybe be more significant than what we're going to see here in 2017.
Guys, good to get your take. Appreciate it very much. Stephen Myra, Scott Wren. We'll talk to you later. When we come back, it's a first for Snap. That would be a down day on Wall Street to the tune of 8%. Why Barron's called shares of the company, quote, ridiculously valued. More headaches for Uber's Travis Kalanick. We'll talk to Recode's Kara Swisher in a few moments. And then later, the rollout of the president's new immigration order that sparked all that controversy 6 weeks ago. We'll bring it to you live. That hearing scheduled at 11:30 a.m. Eastern.
4,000 companies run their business in the Oracle Cloud.
Pinterest is the world's catalog of ideas. We help people discover and do what they love. So partnering with Oracle Data Cloud has helped us demonstrate how we drive new customer growth for our partners, a concept that couldn't be more relevant in today's competitive retail environment.
Oracle, more enterprise cloud applications than anyone else.
When you have 495 online U.S. equity trades, you realize the smartest investing idea isn't just what you invest in, but who you invest with.
QuickBooks introduces Jeanette and her new mobile wedding business. At first, getting paid was tough.
until she got QuickBooks. Now she sends invoices, sees when they've been viewed, and ta-da! Paid twice as fast for free. Visit QuickBooks.com.
From the moment I arrived in this country, I've been an entrepreneur. I've invested in hundreds of successful companies. I'm being pulled in every possible direction. I think I need another me. My search for the partner starts now.
Marcus Lemonis offers the ultimate job opportunity in The Partner. Series premiere tomorrow at 10 and catch the first episode on demand now.
Planet Earth 2 comes to life on Dish. Planet Earth 2, all new. Saturdays at 9 on BBC America. Get a free preview February 14th through March 30th exclusively on Dish. And check out Planet Earth 2 in 4K.
Your insurance? No. I picked the wrong insurance company.
With Liberty Mutual new car replacement, you won't have to worry about replacing your car because you'll get the full value back, including depreciation. And if you have more than one Liberty Mutual policy, you qualify for a multi-policy discount, saving you money on your car and home coverage. Call 1-844-635-3386 for a free quote today. Liberty stands with you. Liberty Mutual Insurance.
Megan loves coffee, but she doesn't know that coffee has acid, which breaks down tooth enamel. Thankfully, she uses ACT Restoring Mouthwash with fluoride. It does more than freshen breath. It restores minerals to enamel for 40% stronger teeth. ACT. Smile strong.
Allergies can hold you back. Break through with Allegra 5-in-1 Relief. It starts working in 1 hour. Relief lasts 24 hours, and it's non-drowsy. Break through allergies with Allegra 5-in-1 Relief.
You've been complimentary of the company, calling them innovative. Your thoughts now that we have a share price to look at?
Well, I mean, I think there's good concern for worry about a stock price. I think, as I said before, everything depends on whether it can get the revenue going in a Facebook-like fashion, or else does it struggle in a Twitter-like fashion. And I think that's where the concerns are. Obviously, there's a lot of bullishness around it, a lot of personal interest by people because they like the product, and I just think it's a question of how they perform going forward with their revenue targets and their advertising and their other businesses, and that's where it'll all shake out. And I think that's what today's about. People are a little worried about that issue.
Carol, what do you think is the most important metric to look at when it comes to Snap? Because their whole argument has been, well, don't look at overall user growth. We don't care about users in far-flung places that don't have developed ad markets, for example.
Right.
And they call themselves a camera company, which to me is strange because if they're making money off of advertising, it's not the creators who we need to be concerned about. It's the people viewing. They should be a screen company, right? So what number are you watching to gauge the health of this company?
I think their revenue. I just think their revenue. If they can really monetize these users that use it, I think they're using super loosely compared. They're not like a GoPro, and they certainly don't want to be compared to GoPro, given their performance, their stock performance. But I think that what they are is in that people use their cameras to communicate and use it as a communications tool, and therefore presumably attract advertisers to that captive audience there. So I think it's just a question of how they do from a revenue point of view. I think that's what everybody should look at, not their user growth necessarily, but how they can monetize those users.
So when Needham, for instance, Kara, says even if Snap grows revenue eightfold by 2019, the share price would decline based on Facebook and Google EV to sales ratios. I mean, what do you mean when you say get revenue going?
Well, I think it's one of these growth stocks. I think people feel as if it's, anything could happen at this company, right? They could do anything at all. I mean, someone this weekend of all times, after it went public, said, well, now I guess they'll be bought to me. Someone pretty high up. And I was like, what? And I hadn't even thought of that. Like it could be grabbed by any of these companies now that it has a value, a specific value on it. It could, I think the issue is how do you get a piece of that advertising market in a market that's dominated almost completely by Facebook and Google? How do you get a thing in edgewise? And it doesn't mean someone can't do that. I just think these valuations are very lofty for it, and therefore they're going to have to grow into it in some fashion. And I think a lot of these people having worries is the right thing to be worried about.
Obviously, another rough week for Uber. Some new reports. Travis Kalanick looking to hire a second in command to help make decisions. That's according to the information. FT also has a report of a growing number of frustrated employees exploring ways to leave the company, like jumping ship to rivals. Have you seen a week for that company before, like the one we had last week?
Coming up, I mean, they've got a lot of things to come out. You know, bonuses happen on March 15th, I believe. And a lot of people, I've been getting emails from a lot of employees talking about leaving after they get bonuses. I think there's still a lot of shoes to fall around how they deal with their culture, especially around sexual harassment and sexism. They've got the report to come out. They've got to, probably they'll add another board member would be my guess, probably a female board member. You know, there has been talk about a number 2. It's not quite as far along as that. But at the same time, the question is how do you put some strictures in place around Travis Kalanick, the CEO, and that's being discussed by everybody there.
How bad does it have to be, though, for employees to be thinking about leaving Uber at a time like this, right after Snap goes public, has this huge pop? Uber is one of probably just 2 other companies that are seen as being in that league, Uber and Airbnb. You got the SVP engineering leaving after a piece that you at Recode wrote, and then VP of product also leaving, and then Kalanick caught chewing out an Uber driver who were supposed to be the strategic asset that everybody wants, the drivers, he's chewing them out. I mean, are things really that bad?
Well, we wrote both those stories about those executives, and they ended up in them leaving, which was kind of interesting. I don't think people leave if things are that good, right? And I don't think they didn't leave on their own volition necessarily. And so I think they've got to figure out how they're gonna keep those talented people. Those are 2 big jobs at that company: head of product and head of engineering at an engineering and product company. So that's going to be a question of how do they fill those jobs? Who goes in those places? That's one issue. The other issue is how do they, at the same time, fix this culture that results in these kind of behaviors, and how do they keep it to be a place where people want to work? You know, I get a lot of emails about Uber right now, and I'm not surprised, but all of them describe the same kind of toxic culture that has not aggressive culture. And I think that's more the problem than anything else, is the aggression in the culture is out of control.
Well,
and the question is, can they bring it into control?
Culture is one thing, but you have others suggesting that maybe they change their global strategy. Maybe they graduate to something where they play more in regions of the world as opposed to in every country. Do you think something like that is likely?
Well, you know, I think this has been a growth go-go country, although they have pulled back in China when what didn't make any sense, and that was a nice deal for them to get out of there and stop spending money there, and at the same time get a piece of a market. You know, I don't think they're going to be in every market. I think it's more of who is the leadership of this company and how are they going to lead it into this IPO. And I think right now there's almost no chance that you know, they could possibly IPO with the leadership they have there. They've got to really strengthen it. It's not, people keep comparing it to Sheryl Sandberg coming to Facebook. Mark Zuckerberg is a very different person than Travis Kalanick. Let's just say, like, by a long shot.
Is this a Twitter-level problem that they've got, the kind of poisonous boardroom atmosphere that Twitter had that seemed to keep them from focusing?
No, I think no. I just don't think they have a big enough board. I think it's very weighted towards Uber people. Obviously, that's a problem. They've got to bring out more outside board members and be willing to take suggestions. Now, these people have had a lot of success, and a lot of times you don't want to take suggestions, right? Like, we're doing great, so what? Well, unfortunately, this has been a long time thing that's been simmering at this company, and the question is, you know, they can't lose more executives. I can tell you that. Like, if you see more departures, it's going to be problematic for them. And then they've got to replace these executives because these are two major positions, and they've got interim people in place, but it's just not enough. You know, they really do have to have a strong executive team going forward that likes to be there and presides over a workforce that likes to be there. And right now, from the emails I'm getting, people don't like to be there. So we'll see.
But you're not suggesting they can't go to IPO with Travis as the head of the company?
No, I'm not. I don't know. I think not right now, obviously. Right now it would be a disaster. But I think that they have to bring in more executives that seem to create a better working environment and a better leadership. And I think that they know that. I don't think that this is not something that's new to them. And I think Travis knows that from what I can tell from people who have talked to him. I think he does understand that he needs help. And he said it. He said it publicly. He needs help. The question is, what kind of help is he going to get? And who is it going to be? And I've heard, and I'm going to have a piece on it, the names of the people they've talked to help him. But it's hard to figure out. I mean, I can't even just off the top of my head think of people who they could bring in. But there's a number of people that could help him. So we'll see.
Yeah, we're going to watch the evolution of that story. Kara, good to get your take on both of those, Uber and Snap. We'll see you soon.
Thanks.
Kara Swisher.
Still to come, as we've been discussing, the bears showing their teeth as Snap makes a sharp move lower, about 6.5%. But what does the IPO mean for the larger market? And what names should we watch next? We'll cover that when Squawk Alley comes right back.
Leadership is part intuition and part insight. With the right HR technology, you get total workforce visibility, whether you're on the other side of the wall or the other side of the world. True visibility into your people makes recruiting smarter, retention more strategic, and ensures that top performers are rewarded. Because no matter what business you're in the people business. Ultimate Software. People first.
Oh, not the smooch method. Come on.
What's going on here?
You know how GE technology allows us to fix problems before they...
It's slow production, yeah.
Well, no more catchy business acronyms.
Wait, we don't need to smooch?
I'm sure we can smooch a solution. We just need to hover over the problem until...
Just let it go.
Hey, sorry I'm late for team building. Smooth!
Yeah,
that felt right. What's wrong with you?
He's so trusting. So, you'll take our club straight to the course for just $39.
Yep, that's what we do.
And you guarantee they'll get there?
Yep.
That's great. I have 2 sets.
You know Shipsticks only ships golf clubs, right?
Honey, are we there yet? Ooh.
Shipsticks.
That hurt.
Investment opportunity doesn't sleep. It's always up, always working. It's 9 a.m. somewhere, and opportunity is there having its second cup of coffee. You could crisscross the world to find it, or let Franklin Templeton spot it for you. We have over 600 experts across the globe, on the ground where it's happening. So no matter where or when investment opportunity emerges, we're actively at work to help you seize it. Franklin Templeton Investments. Gain from our perspective.
We're at Lockheed Martin today to take a deep dive into the F-35 Joint Strike Fighter program. This is the most expensive weapons system in the world. Defense stocks have been hot. Investors are very keen to know what's going on in this sector. After years of cost overruns and criticism, most recently from President Trump, the price of Lockheed Martin's stealth fighter jet is falling. We have had incredible, unparalleled access to take in the scope of this weapon system.
In short, a declining day following a rampaging bull run is actually a sign of health, especially when it's associated with a gigantic yet well-run IPO. It should ultimately bring out more buyers than sellers.
Faraday returns.
Everything that I do well, it's overblown how great it is.
With Lefty himself.
And everything I do poorly, it's, oh, this is just catastrophic.
Faraday, tonight, 9 p.m. on Golf Channel.
Welcome back. Snap seeing a 44% surge on its first day of trading, but today the company seeing a sell-off, almost 7%. Will Snap's early success open the door for more tech unicorns to go public? For more, we're joined now by the founder of IPO ETF, IPO is what it's called, and Kathleen Smith of Renaissance Capital. Kathleen, welcome. I think the ETF has seen something like a 30% gain since the beginning of the year. Is that all over now? We've gotten Snap. Are there any other big names on the horizon to watch?
Well, there are big names, and we can talk about that. But this last year of returns on the IPO market were needed because the end of 2014-15 were poor returns, and that closed down the IPO market at the beginning of 2016. And once the market opened up, investors have been despite Snap, but very price sensitive. And the deals that have been done at reasonable valuations, and that's produced that very strong return. Question is Snap going to be the one that we start to think about internet bubble when we think Snap? I don't think so. I think we have a ways to go.
What gives you that confidence?
Well, we've seen the history of how it goes. Still, if you even put Snap into the equation, the average IPO so far this year has been priced below the midpoint of the range. And the returns have been positive, both from the IPO and also for post-IPO investors. So we think that there still is a lot of price sensitivity in the market, and Snap may be an opening for other unicorns, and there are some I can talk about, but I would say there are many other IPOs that are being done at fairly reasonable levels.
Please do, drop some names.
Sure. Well, I think it's important to note the next unicorn on the calendar. It's set terms today, called MuleSoft, an enterprise software company. It's pre-IPO. Its private valuation was $1.5 billion. It's going to try to go public at a proposed $1.8 billion valuation. Very high, going to take a good look at this, and we'll see if that continues the strong trend of really what has been the concern investors have had about how high the valuations have been in the private market, and that the public investors haven't been really willing to look at those, and the fear the private investors have of taking a markdown on their IPOs. So.
Is there are people, or is at least retail, giving a premium to names that have a consumer interface, like a Snap, maybe an Uber or an Airbnb?
That certainly is the case quite frequently. In fact, I would mention another very important IPO on the calendar, a consumer one. Canada Goose is going to be pricing next week. A high-end down parka maker. I'm hoping they'll get that deal done before the spring.
Yes.
I see those all over the path train, it seems like, every day.
That's right.
Kathleen Smith of Renaissance Capital, thanks for being with us.
When we come back this morning, obviously a live shot of Washington there. The White House unveiling an updated immigration and travel order that is scheduled to begin at the bottom of the hour. We might get some details in the next few minutes. Squawk Alley's back after a break.
What's the value of capital? What's critical thinking worth? A basketball costs $14. What's team spirit worth? What's it worth to talk to your mom? What's the value of a walk in the woods? The value of capital is to create not just wealth, but things that matter. Morgan Stanley.
I had so many reasons for not losing weight, for putting it off. Sound familiar? It's time to take control with Nutrisystem.
It's Turbo 10 from Nutrisystem. Lose up to 10 pounds and 5 inches overall in your first month. Lose weight now. Money back guaranteed.
You gain energy, you improve your health, and you lose weight. I'm Marie, and I lost 50 pounds on Nutrisystem.
Order your 28-day plan right now. With Turbo 10, you'll get specially designed meals, plus 1 week of new NutriCrush bars to crush cravings free, and 1 week of Turbo Shakes to bust belly bloat free.
Belly fat? Got that under control, too.
Plus, call or go online in the next 2 minutes and get our exclusive activity tracker free. Track your steps, miles, and sleep. This easy-to-use touchscreen tracker even gets caller ID and text messages, a $75 value free. Plus, FedEx shipping free.
It's time to take control.
Go online or call 888-685-SIZE right now and get Turbo 10 with activity tracker free.
If you love your friends and family, give them a meal that will truly be appreciated. The Omaha Steaks Complete Collection. It's filled with $242 worth of great food for just $59.99. That's 75% off only on this special offer. The Omaha Steaks Complete Collection includes 4 tender, mouth-watering filet mignons, 4 extra thick boneless pork chops, 4 juicy boneless chicken breasts, 4 gourmet jumbo franks, 4 classic juicy Omaha Steaks burgers, and golden brown potatoes au gratin. Dessert is 4 caramel apple tartlets. Your order will be delivered straight to your home or the destination of your choice for the perfect gift. As a special thanks from us to you, if you order right now, we'll include 4 additional Omaha Steaks burgers free. That's 8 total. You get it all. Omaha Steaks Complete Collection. A $242 value for just $59.99. Give everyone a gift they can appreciate. Give them the Complete Collection from Omaha Steaks today.
Good morning once again, everyone. I'm Sue Herrera. Here is your CNBC News update at this hour. European Union foreign ministers joining up EU defense ministers for the start of the Foreign Affairs Council meeting in Brussels. The bloc is set to approve the creation of a headquarters for its military training missions in Somalia, Mali, and the Central African Republic. Former Penn State football coach Jerry Sandusky has been moved from a maximum security prison to a medium security facility in Pennsylvania. No reason was given. He is serving 30 to 60 years in prison for his 2012 conviction of charges that he molested several boys. Another snowstorm hitting higher elevations in California. It comes after a weekend weather system blanketed several mountain peaks in snow around the Bay Area. And a Chinese-made underwater glider has broken the deep-sea dive world record by going down more than 20,000 feet below sea level. You're up to date. That's the news update this hour. I will send it back downtown to you guys.
All right, Sue, thank you very much. According to NBC News, the president has signed the revised immigration executive order on travel from now 6 predominantly Muslim nations. We are awaiting comments from the Homeland Security Secretary John Kelly, Secretary of State Tillerson, and AG Jeff Sessions shortly. Our Eamon Javers is outside the White House watching this and can give us a sense of what we might expect over the next few minutes. Eamon?
Yeah, good morning, Carl. The president signing that executive order off camera here. That gives you a sense of some of the stagecraft here that this White House is trying to do as they roll this out. They don't want the images of the president out there. What they want are these images we're about to see here of these other administration officials talking in concert about this new executive order. We've got some details here of the executive order that are coming off embargo right now. And let me give you a couple of the details that we now know. This includes 6 of the 7 originally mentioned countries. The one country they've taken off of this list is Iraq, and that's because administration officials say that the Iraqi government has been very cooperative with them in terms of getting them the information that they need to do the kind of screening they feel is appropriate for people coming in from that country. This is going to be effective on March the 16th, and there's going to be a 90-day period of time that starts at that date. It does not revoke currently valid visas. There's also no distinction here made for Syrian refugees versus refugees from other countries, and all refugee admissions are going to be halted for 120 days. It doesn't apply to green card holders as well. And on the call with reporters earlier this morning, officials at the White House and some of these agencies said that they've been able to work much more closely together government-wide than they did back on January 27th when they did the first rollout of this executive order. Therefore, they expect that people at airports and in frontline positions will be well briefed on what to expect here once this goes into place on March 16th. So that's the rollout here from the White House. We'll wait and see what these administration officials have to say as well when they take to the podium here. And we're told that they are not expected to take any questions, although, Carl, you can imagine that some of the reporters in the room will certainly try to shout out 1 or 2 questions at them.
Eamon, question. Has the administration given any detail on what the Iraqi government did to clarify, give more information that satisfied the administration, and whether the other 6 countries on the list were afforded the same opportunity to give more information that would make the administration comfortable with the people who would be coming into the country?
No, on the conference call this morning, all getting the kinds of information that they would need to vet and screen immigrants who are coming in from that country. They're also saying here that these other 6 countries, the people coming in from those countries tend to overstay their visas in disproportionate numbers. And they're saying that's one of the reasons to single out this group of 6 predominantly Muslim countries. But they're insisting here this is not a Muslim ban. This is simply an effort to limit immigration from countries where they feel there's a heightened threat of a terrorist attack. And they say that because of that track record of overstaying visas, that's one of the reasons why they're singling out these 6 countries.
Eamon, don't go too far. Joining us on the phone this morning, former Assistant Secretary of State, Ambassador Lincoln Bloomfield, now Chairman Emeritus at the Stimson Center. It's good to have you with us, Mr. Secretary.
Thank you. Good morning.
Whether it's the exclusion here of Iraq, the delay in the time it will take before it becomes effective, what stands out to you?
Well, I think this is the comparison to the first rollout. The first rollout seemed to provoke a sense that there was a lot of administrative sort of unintended consequences. With Iraq, we had military intervention in Iraq where many Iraqis sort of cast their lot with the American soldiers, took huge risks and we're now being blocked from coming to the United States after essentially being promised that we would cover, that we'd be there for them. And so I think that, I don't know for a fact that played into it, but because you had senior military people saying we can't do this to our allies, no one will ever stand with us again in the field, that may have had a role. And I'm sure we did engage with the government of Iraq. That stands out. I think the question here is how this plays out. There are a number of administrative initiatives that are listed by the White House. That there's going to be new standards established. There are going to be an analysis of the national security risks during this period. There'll be new resources, tools, and personnel are being discussed, country-by-country reviews, reports every 120 days, this kind of thing, biometric entry-exit system. So there's a lot of sort of policy that is being rolled out here. The question is this going to cause a lot more personal stories that hit the media about family members, skilled workers like doctors and technology experts, academics who are trying to come, who are needed here, investors who are very pro-U.S., who have no connection to terrorism. In other words, will it look like a policy, sort of a public affairs slam at the Muslim world for political reasons, or will it be a serious policy endeavor? We have to wait and see.
Ambassador, how important is it that we get more detail on what exactly Iraq was able to do in terms of providing more information to get themselves off this list? It seems that the argument has fundamentally changed. The initial argument was these 7 countries were on, albeit a different list that the Obama administration had, that they are inherently a problem because they're not providing certain information. Now that one country is off the list, the lawyers who were arguing that the Trump administration had not completely made its case about what exactly was the concern about these travelers, it seems to be a question again.
This is, look, the White House has to operate on 2 levels. I'm not sure I'm not a lawyer, but I'm not sure they will satisfy the precise questions of the lawyers. I think we have to wait and see what Secretary Kelly, Secretary Tillerson have to say about this. My sense is that you also have to, when there's a huge hue and cry because translators who served with U.S. military units now can't find asylum in the United States, and they're being chased down by hostile militias inside Iraq, and they want their families to be protected. That's a big story, and I think that had to have had that certainly had to have motivated the White House to take another look at Iraq and say, on balance, we probably need to work with them to find a way not to have them on the list. What was actually done? I mean, and that's a good question for Secretary Tillerson, I think, what was done. I hope that there was some engagement, but I also feel that our military will look at this and be satisfied that the White House heard what they said, that you just can't leave your allies in the field.
Mr. Ambassador, is any of this colored, the reception of this new order, is it colored by any of the allegations from the president over the weekend? Obviously, the story last week regarding the attorney general. How much does that move how this is accepted?
Well, there are other people who are probably more likely to talk about how to manage stories in the media. As someone who has served in the Pentagon and the White House and the State Department in the past, I want to see my government at work. So if this is a legitimate counterterrorism policy, I want to give them at least a chance to make their case, see how it starts to play out. If you find that there are a lot of sort of children and family members and humanitarian cases that are getting caught in the policy unfairly, that will certainly be seen. If this turns out to be perceived overseas as an anti-Muslim sort of position by the United States, that could adversely affect our ability to engage with allies and overcome extremism, which is of vital interest to the United States. So, I mean, I think we have to see how it plays out. But frankly, you won't hear me complain about the United States government sort of going to work and doing important work. We'll see how we'll have to judge the quality of this effort by what we see in the coming weeks.
Certainly we'll begin doing that in a few moments once this briefing begins. We hope you'll stick around, Mr. Ambassador. Take a quick break here. Dow's down 80 points. Don't go away.
More than 24,000 companies run their business in the Oracle Cloud.
At Arby's, we moved to Oracle's Planning and Budgeting Cloud. A few of the benefits Arby's has experienced include end-to-end visibility of our budgeting process, which has greatly reduced manual intervention.
Oracle, more enterprise cloud applications than anyone else.
Do you have a life insurance policy you no longer need or can't afford? Now you can sell your policy for an immediate payment.
We bought life insurance when our kids were young to protect their future.
Our young has just turned 40.
We come back from break early to the Secretary of State.
Thank you for joining us. The executive order signed by the President earlier today, protecting the nation from foreign terrorist entry into the United States, is a vital measure for strengthening our national security. It is the President's solemn duty to protect the American people. And with this order, President Trump is exercising his rightful authority to keep our people safe. As threats to our security continue to evolve and change, common sense dictates that we continually reevaluate and reassess the systems we rely upon to protect our country. While no system can be made completely infallible, the American people can have high confidence we are identifying ways to improve the vetting process and thus keep terrorists from entering our country. To our allies and partners around the world, please understand this order is part of our ongoing efforts to eliminate vulnerabilities that radical Islamist terrorists can and will exploit for destructive ends. The State Department will coordinate with other federal agencies and implement these temporary restrictions in an orderly manner. Our embassies and consulates around the world will play an important role in making sure that our nation is as secure as it can be. And the State Department will implement the provisions in this order that allow for the admissions of refugees when it is determined they do not pose a risk to the security or welfare of the United States. Upon the President's initial executive order issued on January the 27th, the State Department's Consular Affairs and Diplomatic Security offices immediately undertook a review in coordination with the Department of Homeland Security to identify additional measures that would strengthen our vetting of those seeking entry to the United States from 7 named countries. These early efforts were concentrated on Iraq. Iraq is an important ally in the fight to defeat ISIS, with their brave soldiers fighting in close coordination with America's men and women in uniform. This intense review over the past month identified multiple security measures that the State Department and the government of Iraq will be implementing to achieve our shared objective of preventing those with criminal or terroristic intent from reaching the United States. I want to express my appreciation to Prime Minister al-Abadi of Iraq for his positive engagement and support for implementing these actions. The United States welcomes this kind of close cooperation with countries in every region of the world who share our commitment to national security. This revised order will bolster the security of the United States and her allies. Now, we've spent the morning briefing the Congress, the press, and we will continue to talk with key stakeholders this afternoon. Experts from the Department of Homeland Security, the Department of Justice, and the State Department hosted an hour-long call with the media on this topic this morning. Our collective teams will continue throughout the day to follow up with the Congress, the media, and stakeholders to answer your questions. I'll now turn it to the Attorney General for his comments.
Thank you, Mr. Secretary, and good morning to all of you. One of the Justice Department's top priorities is to protect the United States from threats to our national security. Therefore, I want to discuss 2 points. First, the national security basis of this order, and second, the Department of Justice's role in defending the lawful orders of the President of the United States. First, as President Trump noted in his address to Congress, the majority of people convicted in our courts for terrorism-related offenses since 9/11 came here from abroad. We also know that many people seeking to support or commit terrorist acts will try to enter through our refugee program. In fact, today more than 300 people, according to the FBI, who came here as refugees are under an FBI investigation today for potential terrorism-related activities. Like every nation, the United States has a right to control who enters our country and to keep out those who would do us harm. This executive order seeks to protect the American people as well as lawful immigrants by putting in place an enhanced screening and vetting process for visitors from 6 countries. 3 of these nations are state sponsors of terrorism. The other 3 have served as safe havens for terrorist countries where governments have lost control of their territory to terrorist groups like ISIL or Al-Qaeda and its affiliates. This increases the risk that people are admitted here from these countries may belong to terrorist groups or may have been radicalized by them. We cannot compromise our nation's security by allowing visitors entry when their own governments are unable or unwilling to provide the information we need to vet them responsibly, or when those governments actively support terrorism. This executive order responsibly provides a needed pause. We can carefully review how we scrutinize people coming here from these countries of concern. Second, the Department of Justice believes that this executive order, just as the first executive order, is a lawful and proper exercise of presidential authority. This Department of Justice will defend and enforce lawful orders of the President consistent with the core principles of our Constitution. The executive is empowered under the Constitution and by Congress to make national security judgments and to enforce our immigration policies in order to safeguard the American public. Terrorism is clearly a danger for America and our people. The President gets briefings on these dangers and emerging threats on a regular basis. The federal investigative agencies, the intelligence community, the Department of State, the Department of Homeland Security, and the United States military report to the President. Knowing the President would best possess such extensive information, our founders wisely gave the executive branch the authority and the duty to protect the nation. This executive order is a proper exercise of that power. Now, I will turn things over to our able Secretary John Kelly of the Department of Homeland Security. John?
Thank you, Mr. Attorney General. Well, like the Secretary of State and the Attorney General, I welcome you here today. My comments will be relatively brief. Last week, the Department of Homeland Security celebrated its 14th anniversary, first opening its doors on 1 March 2003. This secretariat was established in response to the devastating attacks of September 11th, when foreign terrorists turned a beautiful but ordinary day into a nightmare. Those attacks taught us that we could not take our nation's security for granted, that Homeland Security must be our top priority, and that we needed to overcome our collective inability to connect the dots of intelligence and arrange them into a more comprehensive picture of the threats posed to America and our way of life. So much has changed over the past 14 years, both in the world that is more dangerous and at DHS, which is much better. The fact remains that we are not immune to terrorist threats and that our enemies often use our own freedoms in generosity against us. Today's executive order, which President Trump signed this morning, will make America more secure and address long overdue concerns about the security of our immigration system. We must undertake a rigorous review and are undertaking a rigorous review of our immigration vetting programs to increase our confidence in the decisions we make relative to visitors and immigrants that travel to the United States. We cannot risk the prospect of malevolent actors using our immigration system to take American lives. This executive order is prospective in nature. Its focus is on preventing the entry of new foreign nationals from the 6 designated countries. Accordingly, it is important to note that nothing in this executive order affects existing lawful permanent residents or persons with current authorization to enter our homeland. Unregulated, unvetted travel is not a universal privilege, especially when national security is at stake. The White House worked closely with the Department of Homeland Security, the Department of Justice, and the Department of State to create an order that addresses previous concerns and protects the homeland and every one of our citizens. The men and women of the Department of Homeland Security, like their brothers and sisters throughout law enforcement, are decent men and women of character and conscience. They are no less so than the governors of our states and territories, of our senators and members of Congress, of our city mayors and various advocacy groups. These men and women are sworn to enforce the laws as passed by the United States Congress and would be in violation of the law in their sworn oaths if they did not do so. We do not make the law, but are sworn to enforce it. We have no other option. We are going to work closely to implement and enforce it humanely, respectfully, and with professionalism, but we will enforce the law. I want to thank the President for his leadership on this issue and for his steadfast support for our important law enforcement, security, and counterterrorism mission. Again, as previously mentioned, I have spent much of the day today on the phone with members of Congress, the leadership, explaining the ins and outs of this EO, and I did the same thing last week. So there should be no surprises, whether it's in the media or on Capitol Hill. Thanks very much, and thanks for your time.
Is this an acknowledgement that the first order was flawed in many ways and not well thought through?
Mr. Attorney General, have you spoken to FBI Director Comey today?
Are Christians still given priority under this executive order for review?
That is Homeland Security Secretary Kelly, along with the Secretary of State, Attorney General Jeff Sessions, with a revised EO, temporarily halting entry for those seeking new visas from 6, not 7, Muslim-majority countries, effective March 16th. Eamon Javers, a more deliberate rollout this time. The Secretary of State arguing that allies should be understanding, and, of course, a full-throated defense of the president and what they're calling his executive power.
Yeah, that's right, Carl. The White House here very much saying that their previous executive order was lawful and proper, but nonetheless, they are issuing this new one, taking into consideration some of the concerns that were raised about the first one. So one of the things that you heard Secretary Kelly say there was that nothing here affects existing lawful residents or people coming in with current authorization. So that means that this won't be disruptive of those people who are currently in transit or have current authorization to travel to the United States. And then, as you point out, you heard that pitch there from Secretary Tillerson talking about the allies of the United States, particularly Iraq, which is fighting side by side with Americans against ISIS right now. That was very much an appeal to those allies to say, hey, look, we have to do this to tighten up security in terms of terrorism, but this is not meant to be offensive to you in any way. And we're working with the government of Iraq to make sure that we can get the information that we need as the United States to bring people from that country in. So that's why Iraq has been eliminated from this list of 7, which is now 6 countries, Carl.
Eamon, thank you. On the phone with us as well, former Assistant Secretary of State Ambassador Lincoln Bloomfield, Chairman Emeritus at the Stimson Center. A couple of things. You're highlighting the role of Iraq was right on the money. That got addressed directly. And then the Attorney General, you said the government getting to work, really pushing the idea of existing intelligence and refugees under investigation for terror in this country right now, numbering in the hundreds.
Well, that's right. I have to say we've been following the news cycle for days and days, and it's the storyline is more about politics and about Washington infighting than about foreign policy and about the work of government. But you just heard 3 senior officials laying out a fairly orderly rollout of a policy that the first time it came out, there were a lot of questions raised. This is the new improved version. And as I said before, I think we have to see how it plays out. But one way that it could play out better is if indeed they bring more process, more tools, faster processing, an ability not only to say no to people, but a faster and more reliable ability to say yes to people. That would be welcome. I sat in the morning staff meetings for Secretary of State Colin Powell a little over a decade ago after 9/11, and I have to tell you, it was really hard to get good people from certain countries into the United States because they couldn't get the databases matched up. Homeland Security was brand new, as Secretary Kelly talked about how much better they've gotten now. You had counterterrorism and FBI and CIA data files, and you had the State Department trying to figure out whether to,
How are foreign governments likely to receive this in contrast to the previous executive order? Is this likely to be seen as fundamentally different outside of the boundaries of the United States?
Well, it's hard to speak for outsiders. Some may say, look, they're just basically doubling down on sort of Muslim countries, and so there will be people who will try to take advantage of this and say that there's a certain singling out of the Muslim world unfairly. The question is, visas from 6 countries, are you creating such a much bigger haystack? And how many needles are really in that haystack? And I think that's really going to be the final question. But if, as I say, so there may be some questioning of this, whether it's the right countries, whether it's the right reason, whether there's terrorists really coming here from those countries, people will pick that apart. But if this is an opportunity both to get our senior officials on the field running their own policies, and secondly, to give them more resources and tools, we could end up actually improving the ability to have Muslim, people who want to come and invest, who have families here, who have business here, go to school here, become doctors and surgeons, technology stars. That could actually turn out well if you let Tillerson and Kelly do their job and give them more resources. This could actually improve the ability to separate the wheat from the chaff, and to help those countries, pick the winners and separate out the bad guys. And who doesn't want that?
That is surely the point. Mr. Ambassador, thank you so much for helping us through the half hour. Appreciate it very much. Ambassador Lincoln Bloomfield.
Thank you.
We'll take a quick break here. Dow's down 81. More on this after a short break.
Why do people invest? They invest for what's next. That could be a college dream, a new priority, an active retirement. Whatever next is, it takes smart investments managed by experts who actively spot risks and opportunities. Franklin Templeton has been doing that for over 65 years, helping millions of investors achieve what's next. Franklin Templeton Investments. Gain from our perspective.
Looking for a sign? At Vistaprint, we've got all kinds. The banners, posters, magnets, and more kind. The easy-to-design kind. And the help when you need it kind. The easy-to-display kind, and the absolutely guaranteed kind. So what is your business waiting for? Right now, one banner starts at just $11.99 when you enter the code BANNER at Vistaprint.com. Because your kind of sign is at Vistaprint.
We don't sell annuities. I would die and go to hell before I would sell an annuity. Most annuities have nosebleed level fees, don't do what the customer thinks they do, have tremendous tax problems, are hard to get out of once you're in them, and are extremely confusing with a contract that's about that thick. These products are not made to benefit the customer. The real winner is the salesperson. Anything you want to do with annuities, there's a better way to do.
Call now for your informative free report, Annuity Insights. Created for you by Forbes columnist and legendary money manager, Ken Fisher. Call now, 1-800-400-8909.
You can achieve your investment goals, and Fisher Investments can help you get there.
Call now for your free report and learn the 9 questions every annuity investor should ask. Call 1-800-400-8909.
We don't sell annuities. We'll never sell annuities.
Yeah, it's over, Larry.
What is?
The whole wheelie thing.
What do you mean? I just got this baby to get around the plant floor.
Right, but now GE technology monitors every machine.
Yeah, it brings massive amounts of information right to you.
So you don't need that.
Well, it makes me look young and with it.
Time to move on.
Well, I'll move on. Right into the future.
Backwards. We're going backwards.
Future's all around us. Not just on your little tablet, my friend.
You're watching CNBC, first in business worldwide.
Opportunities under the radar. The trends and money moves private equity titan Barry Sternlicht sees for the markets and investors. Squawk Box tomorrow on CNBC.
Welcome back. Reaction to the executive order out of the White House. Our John Harwood's in Washington. John, your thoughts?
A couple of things. First of all, on the potential legal challenge, the vulnerability has been diminished by the administration by eliminating the preference for religious minorities. That is one of the pieces of evidence for the fact that this was aimed at Muslims. The second is to Americans who are already here or have visas or have legal permission to be here. They limit the number of people who have standing to go after this. And then secondly, on the question you asked before the break about the president's tweets over the weekend, the credibility of an American president is an indivisible asset. And so as the administration tries to persuade the American people that they have information that tells them that dangers justify this executive order, that is more difficult if people believe the president less. And it's true not just on this, but also on issues like taxes or health care as well.
John, we appreciate that very much. Of course, as we're just gathering facts and opinions with the new EO. Again, the rollout not until the 16th, so agencies have some time to coordinate. Dow's down 80 points. We'll see what the afternoon brings. Let's get over to Scott Wapner in the half.
Welcome to the Halftime Report. I'm Scott Wapner. Our top trade this hour, the state of the Trump rally and why some of the smartest money on the street is now bracing for a sell-off. With us for the hour today, Joe Terranova, Steve Weiss, Jim Lebenthal, Josh Brown. Also with us on set today is Jim Cramer. He is the host of CNBC's Mad Money. And from Toronto today is Kevin O'Leary. He's the chairman of O'Shares ETFs. Let's begin with stocks lower today. All S&P sectors, in fact, in the red. Now the real question is over how much longer the Trump rally can last. Jim, I heard you say this morning, quote, people are feeling less stable. There's a lot of remorse. This can't be as good as it seems. Are we at a tipping point, do you think?
I do think that we're at a pausing point because I know that the Fed is going to take action. And I think that everyone is excited about the Fed raising rates until they raise rates. And that day, I think you get a sell in the news situation. I do believe that there's a lull in earnings that makes it so you start thinking, wow, what is going to get 3M to 192? Should I really be buying Boeing at 200? So what I find is that people are saying, geez, the tweets are a little insane, and the Janet Yellen, who knows what she's going to say? We don't have any news. Maybe I take something off the table. That is not radical. I think that's fine. It's a continuation of what we saw Thursday, and yet Friday turned out to be kind of a benign day. I don't expect anything big enough that you can get out and get back in.
Well, you said, you would ride through it.
Yes, absolutely. I absolutely want to ride through it.
You weren't going to fault anybody for taking something off the table.
Right. Well, but I want to ride through
the rally we had.
I want to ride through it because I don't know if you can get back in. I don't know how nimble people can be.
Okay, but we're talking about for investors at home, and I absolutely 100% agree with you. If you think the market's going down 35%, then you get out. Right. But I don't think the market's going down 35%. If you think there's a tradable little correction that guys like me can participate in, then clearly last Wednesday was a very euphoric type of day. It was either shorts covering or it was weaker hands coming into the marketplace. In either condition, that's not good for what's going to occur over the next week. So I think we're in the midst of a little bit of a sell any type of rally moment, but that's a tradable event more than anything else. I'm staying short.
It feels like the street is starting to get a little bit more cautious, right? There was a Goldman thing talking about maximum optimism. JP Morgan, Dubravko Lekos over there today drops a note that says the fundamental backdrop is supportive, but short-term downside risks are increasing.
Well, it's only natural to say that after the market's gone so far, so fast.
That's what I'm wondering, if it's like cautious time or if it's just pause and then we're going to pick up time.
Well, I agree in principle with both Jim and Joe. I don't think that the market's going to collapse here, but that's always when it does collapse. But I don't see that. To me, this is if you remember the movie and the play Damn Yankees, that's what we have here. So you make the deal with, and I'm not going to say Trump's the devil with the devil, but things you tolerate you wouldn't normally tolerate for that goal at the end, being on the championship team. And then things start to happen towards the end of the movie where he's not so sure it was a great deal. I think that's what we're seeing here. We're seeing that remorse. And the tweet that came out over the weekend, to me, is, I wouldn't say it's a seminal moment, but it says, do we really have control there? Right. And how long can this Republican coalition stay together?
Let me take it from then a step further. How long is the market, if it is, going to give that kind of stuff a pass?
Well, as long as the earnings hold up.
That's my point. That's my point. I think we're nearing it.
Well, that's what I mean.
The more radical it gets, more we're nearing. To me, this is a radical thing. Even if it's true, I'm not saying if it's true or not, you wait. Reasonable people wait until they have some evidence, there's some way to bounce off somebody. Don't go off half-cocked, not even talk to your staff. So that lack of stability that I see in the White House from that caused me pause.
Is that what the market is reflecting today?
I think
13 points on the
I think it's looking for a trigger to weaken.
Look, I think that we don't have any other news, so you come in and it's like Nixon, Watergate, and those of us who lived through Nixon, Watergate are kind of like, hey, President Chief, that's a tough one. Because it took forever to build that case against Nixon and Watergate. And you didn't just throw it out there. I mean, responsible politicians did not throw that out even against Nixon. And Nixon was guilty as all get out.
You're also getting a little bit of a deceleration in the buybacks. Remember, you had the buyback blackout window. Now you're getting towards the end of that period where they were coming in to buy, so you don't get that gravitational pull higher you did from that.
All right, well, several big-name hedge fund managers may be getting a little nervous about the Trump trade. Kate Kelly now with the New York Times did some great reporting over the weekend. Joins us here. It's great to see you again.
Great to see you, Scott.
I love the read. So what's the bottom line from the people you talk to?
So bottom line is, and I spent, a week or two talking to major money managers, talked to about 15 people, and I would say 9 of them, 10 of them were skeptical about the market rally right now. Now, they're quick to point out we have good economic fundamentals right here. A lot of things to be optimistic about legitimately. However, they think that 1 to 2% of the upside we've seen in recent weeks, and remember, we're up like 5% just since the inauguration, and is probably Trump optimism. And specifically, in terms of the policy agenda, they like what they hear in broad strokes, right? Like $1 trillion infrastructure spend, certainly rollbacks on businesses, like a rollback potentially of Dodd-Frank, as well as some of the other measures he's talked about, certainly corporate tax overhaul. But we don't have any details, and we also don't know what the time frame is. It seems to be shifting. To Jim's point, I think when you come in Monday morning and you're digesting the tweets from over the weekend, you may be thinking, all right, this is yet another distraction that's going to prevent us from seeing Obamacare repeal and replace anytime soon. And if that doesn't get done, then we don't have tax reform in 2017. It becomes a 2018 issue. Right. And then sort of the air lets out of the tires.
But if profits are okay, I'm willing to tolerate the damn Yankee. I'm willing to tolerate the light at the end of the tunnel.
That's your ride through it.
Yes,
exactly.
that's the ride through it. See, I just wish. Let's take Key. I know that O'Leary.
While you're doing.
Well, yeah.
Right?
I mean, I think O'Leary is going to. He doesn't like. I saw him talk last week about the regional banks, and let's take Key Bank. Key Bank was at 39 a decade ago, and it's what 18. It goes to 17. Maybe it sells at 12 times earnings. I need to get in there. That's a viable pullback. It's not a pullback that says, look at here comes Key going back to 12. I don't think Key goes back to 12. I really don't. I think business is better in the Midwest.
Right. So Kevin O'Leary, you want to respond to that and where your overall thoughts are?
Sure, it goes back to 12. Absolutely. I'll take the other side of that trade. It goes back to 12. Easy peasy. Here's how. If you don't think you're ever going to get tax reform, Dodd-Frank relief, more leverage on that balance sheet, or corporate tax reductions, and all you're relying on is the Fed to get a better spread on lending rates through rate increases, that goes back to $12 because half the animal spirit is on deleveraging or giving more freedom to these regionals. Look, I'm out of these regionals. I'm gone out of it. I took my profits. I even didn't get the high. But I'm telling you, Jim, if we're not going to get tax reform into late 2018, the air is coming out of those tires. And I want to make a comment about the tweets. I don't care what Trump tweets anymore.
watching Power Lunch with Michelle Carusa Cabrera, Brian Sullivan.
Savings, their retirement, and spins wildly out. A premiere episode of American Greed tonight, 10 Eastern. CNBC. Get yours.
Attention. Attention.
This is an urgent consumer alert from the Annuity Action Network. If you are currently getting or will be getting annuity payments, structured settlement payments, and lawsuit settlement payments, you may qualify for a lump sum of cash or an annuity exchange. You need to call 1-800-616-4881. Again, if you are getting or will be getting annuity or other payments from an insurance company, you may be entitled to a lump sum of cash. Federal and state laws have changed. Call us now to find out how they affect your annuity or insurance company payment rights and lump sum options. The number to call is 1-800-616-4881. To find out about your valuable annuity payment rights, you need to call the Annuity Action Network at 1-800-616-4881. The call is free. Call now for official information about your annuity payment rights. Call the Annuity Action Network right now at 1-800-616-4881. Or text the word ACTION to 99000 to get started today. This was an official consumer alert from the Annuity Action Network.
Welcome back to Power Lunch, everybody. North Korea launching 4 more missiles yesterday as that country aggressively moves forward with its nuclear program. But it begs the question, how does a poor country afford something as expensive as a nuclear weapons program? Where does the money come from? A report out of the UN today is providing new evidence on how the country makes a lot of money flouting UN sanctions, often with the help of the Chinese. And Michelle, what a weekend you had reading this report. And there it is.
Report. Yeah, it's super interesting. I highly recommend it. New report details how North Korea is making millions by selling arms to countries in Africa and the Middle East, and also billions selling coal and iron ore to China. One example, a ship seized by Egypt in the Suez Canal was carrying a shipment of 30,000 rocket-propelled grenades from North Korea. Destination unclear. They're in those crates underneath that tarp, underneath that dirt. Also, the report shows the country sells various armaments through a company called Glowcom, short for Global Communications. The company advertises on the internet and makes almost no efforts to hide its North Korean origins. And there are many front companies like Glowcom in the report, which are registered in Malaysia or China, in order to minimally try and hide their North Korean roots. North Korean diplomats have been repeatedly caught smuggling banned luxury goods such as gold bars, cash, watches, even this Bentley. Investigators also discovered that SWIFT, the international payment system, is still processing transactions for North Korean banks, even though some of them are supposed to be prohibited from using the global financial system. I've reached out to SWIFT and I'm waiting for an explanation. But in North Korea's biggest influx of cash, more than $1 billion, comes from selling coal and iron ore to China. China's promised to curtail those purchases more than once, but it hasn't happened. The UN has asked China for an explanation. So what should be done by the Trump administration in the face of the missile launches and this report? Joining us now is Anthony Ruggiero. He's with the Foundation for Defense of Democracies and a former Treasury officer. Good to have you here, Anthony.
Thanks for having me.
So the bigger issue is what to do about China and the fact that they seem tacitly complicit. But honestly, reading this report, I wasn't surprised by the China angle. What surprised me far more was SWIFT, an organization that our audience is very familiar with and came to know because of the Iran sanctions situation. I was startled to read they're still processing payments for North Korea. Were you as startled by that?
Yes, definitely. It was stunning to me. I don't understand how SWIFT could even rationalize having secure financial messaging services, not just for designated North Korean banks, but for any North Korean banks whatsoever. I mean, it looks like their response to the UN was, well, the Belgian government said that it was okay for us to get thousands of dollars in fees. It's not, I just simply don't understand, as you said, given their experience with Iran, how they could justify a country that is the U.S. has designated as a primary money laundering concern, that they would even provide any kind of services to North Korean banks.
Who owns SWIFT? Who runs it?
It's an international consortium. I think it's mostly owned by the banks, but I was on their website today, and you can still see some of the North Korean banks on that website. I think they've certainly read it over the weekend. I would also point out that this could possibly be a violation of U.S. law. And so I think given their experience with Iran, you would think that they would have known better than to provide these services to North Korea. But it is part of a larger concern, which is I think most people expect or believe that North Korea is isolated from the financial community, and they are not. Whether they're using China to process U.S. dollar transactions through the United States, or they're using front companies in other countries to access the international financial system. And that's what we need to be doing more of. With Iran, we were on them multiple times, designated more and more front companies, and we're just not doing that on North Korea.
I've read every book on North Korea, which is about 3, Anthony, and it's a country that you wonder every time we dig in, how do they continue to exist? I mean, every major dictatorship in the world tends to get toppled over time, but this family has been able to hold on for 60-some years. What's it going to take to get real change in North Korea, and how the hell they held on so long? It's an economy from 100 years ago.
Agreed on that point. I think the primary issue here is that the North Korean regime doesn't care about its people. All that money that we're talking about here is going to their strategic programs and to the elites. And they are able, the report over the weekend said they were able to get significant revenue from this mechanism. And how they've been able to survive is we are not closing these loopholes and these gaps to start to pressure the regime. I think people expect that we're doing that, but we're not.
That leads me directly to a question that seems obvious here. Do sanctions work?
Well, they're not working now because they're not well enforced.
But I can't think of a case where the sanctions have really achieved the objective. I mean, they didn't particularly work with Iran.
Well, they worked with Iran in terms of getting them to the negotiating table. I think that was the ultimate goal. We can have a debate of whether that's the deal itself was what we were looking for, but the goal was to get them to the negotiating table.
Would it help if the Chinese actually enforce the sanctions? I can't tell if the Chinese government willfully looks away or just pretends not to know from this report, but they could do more, couldn't they?
Exactly. I mean, given China's security services, it's hard to believe that millions of dollars of U.S. dollar transactions are occurring, and the Chinese know nothing about it. They'll claim they know nothing about it. They'll blame everybody else, but it's clear that the Chinese government has to be aware of. The banks themselves, the Chinese banks, are the ones responsible. They have to know, or they should know, what is going on with their transactions, and they have to do more to stop it.
Anthony, thanks so much for joining us.
Thank you.
Anthony Ruggiero.
All right, on deck, we are going to take a closer look at the potential impact on airlines and travel from the president's revised immigration policy. Plus, our first big interview from the CIRA Cambridge Energy Conference in Houston. The CEO of Chesapeake Energy will join us in the next. Look at that lineup. CEO of Chesapeake joining us the next hour. We are back right after this.
You're unbelievable. You're unbelievable.
The first stock index was created over 100 years ago as a benchmark for average. Yet many people still build portfolios with strategies that just track the benchmarks. But investing isn't about achieving average. It's about achieving goals. And Invesco believes doing that today requires the art and expertise of high-conviction investing. Translation? It's time to bench the benchmarks.
Why pause a spontaneous moment? Cialis for daily use treats ED and the urinary symptoms of BPH. Tell your doctor about your medicines and ask if your heart is healthy enough for sex. Do not take Cialis if you take nitrates for chest pain or Adempas for pulmonary hypertension, as this may cause an unsafe drop in blood pressure. Do not drink alcohol in excess. To avoid long-term injury, get medical help right away for an erection lasting more than 4 hours. If you have a sudden decrease or loss of hearing or vision or an allergic reaction, stop taking Cialis and get medical help right away. Ask your doctor about Cialis.
You can't predict the market, but through good times and bad, at T. Rowe Price, we've helped our investors stay confident for over 75 years. Call us or your advisor. T. Rowe Price. Invest with confidence.
I could tell right away ZipRecruiter was going to make hiring a lot easier.
Go to ZipRecruiter.com and post to over 100 job boards with one click. Then easily select the best candidates from one list. Try it for free today at ZipRecruiter.com/create.
Every day, Americans place their trust in big companies and the products they sell. We expect the cars we drive to be safe, medications we take to make us better, and products we use not to fail. But repeatedly, companies break that trust, causing real injuries. Where can Americans go when that broken trust leads to serious harm? To ClassAction.com, the place to learn your rights and hold companies accountable if you've been injured by a product, drug, or company. ClassAction.com. Information, protection, justice.
Hope you're having a great Monday. Welcome back to Power Lunch. Just going to check on the bond market right now, see how things are trading in treasuries. Rick Santelli is always at the CME just for you, Rick.
Well, thank you, Brian. You know, if you look at a 24-hour chart of 10s, before our time zone, looked like it was going to slip a bit, but it definitely started to forge ahead back towards that 250 mark. If you look at a 1 week of 10s, been there, done that, but it is hugging the top of the range. Maybe the most interesting chart. It certainly seems, though, in the old days, rates were the king. Now I still think it's equities. The 2-day of the S&P 500 versus 10s certainly looks like if we see a bigger correction really develop and hold in the equities, the fixed income's paying attention. As today, even in negative territory, less downside, the S&P's down, NASDAQ seems to have given rates another spurt to the upside. Dollar index, intraday looks great until you pair it up with Friday. The dollar index is having a tough time, especially trying to regain positive territory from where it closed 2016. Michelle, back to you.
Got it, Rick. Thank you. The Trump administration unveiling a new order on immigration just this morning. Let's dig in on two areas of the U.S. economy that could see an impact. Seema Modi's looking at changes to H-1B visas and what it means to the tech sector. So different from the EO this morning. Susan Lee is looking at how this order could impact travel. Seema, let's start with you. Seema.
Michelle, it may just be a temporary suspension on expedited processing of H-1Bs, but the impact could be significant. Silicon Valley is dependent on the H-1B visa to recruit highly skilled foreign talent. Over half of the 85,000 visas given every year go to the technology industry. We're talking about coders, designers, folks who work in software, hardware from countries like India and China. Outsourcing firms like Infosys, Cognizant, and Tata Consulting have been under pressure over the past couple of weeks over concerns around H-1B visa reform. But it's not limited to outsourcing. Big tech companies, Apple, Alphabet, Amazon, Microsoft, use H-1B visas. Analysts say any restriction or increase in salary requirements could result in big tech sending more jobs offshore. The suspension on those seeking the fast-track H-1B process goes into effect on April 3rd and could last up to 6 months. Some say this is just a temporary solution to what could be a broader overhaul of the visa program. Lawmakers arguing for reform say the visa allows companies to pass over American workers and bring over foreign talent at a lower wage. But tech lobbyists say the issue is structural and that the specialized talent needed simply cannot be found at home. And that's why, guys, H-1B visas is such a big conflict or point of contention, I should say, between Silicon Valley and the White House.
Yeah, I'll bet.
Seema, thank you very much. Now, let's get to the other side. Susan Lee joining us with the impact this might have on travel and travel stocks, the airlines. Some people concerned there. Susan. What's going on?
Well, the tourism and the travel industry, they account for roughly $1.5 trillion. That's what they bring to the U.S. economy, and is probably the largest export industry in the world and the easiest business that gives a country access to hard currency. And that's why a lot of nations around the world promote travel and tourism. Now, after a record year in 2016, despite the talk of a strong U.S. dollar, 2017 had actually started off positively, with business travel even picking up after lagging the past 18 months on global economic concerns. But after the first executive order that was signed at the end of January, travel has dropped off significantly, from bookings to searches. It's really an industry consensus that people are now less interested in traveling to the U.S. Business travel is especially key for a lot of the listed hotel operators and airlines as they fill up the front of the plane. And according to the Global Business Travel Association, that's down 8% since the initial travel ban, with $185 million in lost bookings already. It's a big deal. It is a big deal because every 1% drop in business travel results in a loss of 71,000 jobs and a loss of $5 billion to the U.S. economy and U.S. GDP. And the cities most affected, I'll even get granular here, Tourism Economics says Miami, San Fran, New York are the top 3 places that have the highest ratio of foreign travelers taking up hotel rooms in the city. And in New York's case, you've heard this, guys, the city's tourism arm is already predicting the city's first decline in 8 years because of the travel ban.
I'm confused. Do we really get that many people from Yemen?
Yeah.
And Iraq?
I mean,
it's optics and it's the messaging. It shows a lot of
people. So people from other countries beside those countries don't
here
come
to the U.S. You're right. It only represents 2%, right? Travelers from the Middle East. But it was a record year last year in 2016. And again, it's the messaging that you're giving the rest of the world.
Is it possible that after 8 years in a row of records that there might be a decline?
Yeah, and the dollar. We got to remember, if you're coming from Europe to America, you get a lot less for your money because the dollar has gone up against the euro.
That's why so many Americans are going to London.
Yeah, so I wonder how much of that is also just...
2016 was a record year in travelers despite the strong U.S. dollar, as I made the point. So,
coming from where?
Well, everywhere. Middle East, Asia, Europe even took a look at the U.S. Maybe not record numbers, but it was a record number in terms of travelers here to the U.S. borders.
So what you're saying basically is there's been a chilling effect, broad chilling effect across...
Sentiment has changed.
Across regions and nationalities that are not touched even by the travel bans.
Yeah.
Right?
Pretty much.
All right. Thanks, Susan. Overwhelmed grids, down power lines. We're gonna
sounds like New Jersey.
Really dark, yeah. Oh, you're getting warmer. Does America need a reboot of its energy infrastructure? We'll pose that question to the chairman and CEO of one of the country's oldest, biggest utility companies. Does business in New Jersey. That's straight ahead.
The Bond Report is sponsored by PIMCO.
More than 24,000 companies run their business in the Oracle Cloud.
Pinterest is the world's catalog of ideas. We help people discover and do what they love. So partnering with Oracle Data Cloud has helped us demonstrate how we drive new customer growth for our partners, a concept that couldn't be more relevant in today's competitive retail environment.
Oracle, more enterprise cloud applications than anyone else.
With E-Trade, you see things your way. You have access to the right information at the right moment. And when you filter out the noise, it's easy to turn your vision into action. It's your trade. E-Trade.
USAA gives me the peace of mind and the security just like the Marines did.
The process through USAA is so effortless that you feel like you're a part of the family.
I love that I can pass a membership to my children. We're the Williams family and we're USAA members for life.
Lockheed Martin to take a deep dive into the F-35. This is the most expensive weapons system in the world. After years of cost overruns, the price of Lockheed Martin's stealth fighter jet is falling. We have had unparalleled access.
I'm Chuck Hughes. I was a pilot for 36 years. As my wife and I approached retirement, I worried about outliving our money. So I started trading from home with just $4,600. Within 2 years, using my own unique strategy, I made over $460,000 in profits. That has now grown to an account that produces $50,000 a month in cash income for my family. And now, in my new book, I show you exactly how I trade. I reveal everything, even copies of my brokerage statements.
Chuck just won his 8th International Trading Championship, outperforming the competition by over 100%. And if you call or go online now and just cover shipping, you can get Chuck's new book, Trade Like Chuck, for free. Act now and you'll also receive a free copy of Chuck's Retirement Catch-Up Plan DVD. Call 1-800-296-5764 or go to tradelikechuck.com now to get your free book. That's 1-800-296-5764 or tradelikechuck.com.
CNBC News Update is sponsored by Comcast Business. Comcast Business, built for business.
Hi, everybody. I'm Sue Herrera. Here's your CNBC News Update for this hour. Tens of thousands of chickens have been destroyed at a Tennessee chicken farm due to a bird flu outbreak. 30 other farms within a 6-mile radius have been quarantined. The breeder supplies Tyson Foods, whose shares are down 3% today. Ukraine is taking Russia to the UN's highest court, accusing Moscow of discriminating against Ukrainians in the Crimean Peninsula. It's also asking the International Court to order Russia to pay compensation for the downing of a Malaysian flight back in 2014. A new study finds excess brain fluid may predict autism in high-risk babies. The MRI on the right is from a 6-month-old who was later diagnosed with autism. The dark space shows a large amount of fluid. 70% of the babies in that study who had this excess fluid developed autism by the age of 2 years. And a Chinese-made underwater glider has broken the deep-sea dive world record by going down more than 20,000 feet below sea level. It dove to the record in the Mariana Trench, which is the world's deepest known sea trench. You're up to date. That's the news update this hour. Guys, I'll send it back to you.
Very cool stuff.
Yeah,
no,
it is.
No pandas today, but tomorrow.
No pandas.
Don't let us down, Sue.
Okay,
right.
You got it, Brian.
Checking in on the markets right now. Stocks holding in the red a little bit, folks. The Dow is down 30-some points, 35 points right now. So we're talking a couple of tenths of 1%. Check out gold, too. People just not liking gold at all. Gold on pace for its 5th consecutive down session. My friends, that would be gold's longest losing streak since all the way back in November. Tyler.
All right, shares of PSEG are up more than 7% since Election Day. The company holding a big investor meeting today. Lots to talk about, from regulation to the new administration's relaxed stance on coal to, perhaps most importantly, tax reform. And joining us exclusively now on Power Lunch is Ralph Izzo, the chairman. So, welcome. Good to have you with us.
Thank you. It's good to be with you.
You have some ambitious capital expenditure plans, and I'd like to hear you elaborate a little bit about them, but specifically put those plans in the context of what may be a major tax reform. On the one hand, you may be able to completely expense immediately the total cost of capital outlays like that. On the other hand, you may well lose an interest deduction. How's it going to play out for you?
Yeah, so the fact that we can expense capital is not as important for a company like ours. Generally speaking, utilities don't have any difficulty attracting capital just given the regulatory system under which we operate. So while I can understand why that might be important to other businesses, and I'm not suggesting it's not something that shouldn't be done, it's really not of tremendous benefit to us, nor something that would be particularly valuable. On the other hand, the loss of deductibility of interest, just given the financial structure that most of us possess, where we're basically all of our projects are 50% debt financed and 50% equity financed, would greatly increase our costs, and those costs would be borne directly by our customers, our ratepayers.
So let's talk about another wrinkle in a proposed tax reform, and that is a border tax that on the face of it might not affect you very much at all. You're not exactly importing or exporting electric power, but you do import nuclear fuel. How would a border...
It's a significant issue. As you know, right now the nation is benefiting from some tremendous opportunities in shale gas, which is a wonderful thing for consumers. However, that is putting significant economic pressure on other forms of electricity supply, in particular nuclear. The fact that over 70%, 75% of nuclear fuel is either sourced from outside of the country or processed outside of the country because there are no such capabilities within the country. We're not, in the United States, the source of tremendous amount of uranium or fuel processing would add another burden on what is already a source of electricity, nuclear power. So that is something that we hope to be able to have a dialogue with tax reform advocates in Washington over unintended consequences.
So let's turn to coal. I gather you have been moving away from coal as a generating source, correct?
That is correct.
Are you doing that because coal is less economical than natural gas right now? Is that the primary driver here? And second question is, will changes in regulations pertaining to coal, as pushed by the Trump administration, will that change your thinking or equation at all?
No, that won't change it for us. There are some traditional pollutants that impose some significant costs on coal, whether it's mercury or acid rain gases or particulates. These are well-established regulations. They've been on the books for quite some time, in some cases a few years, in some cases a few decades. Those improvements, combined with the low cost of natural gas, make for some very tough headwinds for coal-fired power plants.
So what ultimately leads the company to grow? We've talked about all these potential regulations, et cetera. But, you know, for years, whenever we did the utility sector, we would say the Dow Jones, the interest-sensitive Dow Jones utility sector. And the thing is, you bought them when interest rates were low and you sold them when interest rates were high. Is anything changed?
No, well, yeah, I guess the one thing that's changed is in light of the fact that gas prices are low, and therefore power prices are coming down, and in light of reasonable interest rates, actually low interest rates, this seems to be a perfect time to make much needed improvements in the nation's electric grid infrastructure. So that's what has been generating our growth. I mean, we've enjoyed double-digit growth rates in our earnings per share in our regulated utility for that very reason, being able to take advantage of low
things that's driving growth in your industry is all the connected devices that we have, that all of which drain power one way or another. We spoke last week with James Woolsey, former head of the CIA, who painted a very dark picture of threat, of disruption to the electric grid coming. He hypothesized from North Korea if they explode some sort of electromagnetic pulse device over the northern hemisphere. How concerned are you about a major either cyber or other kind of unconventional threat to the electric grid? How are you prepared for it? How worried should we be?
So it would be more on the cyber front than on the electromagnetic pulse. The consequences of a larger electromagnetic pulse would be much more significant for human health and other forms of infrastructure than I would be worried about the grid. What you're basically talking about is a nuclear detonation. And I wouldn't worry about whether or not the lights are on there at that point in time. But the cyber threats are real. You know, interestingly enough, the connection of all these internet devices is not driving higher demand for electricity as much as it's driving higher reliance on electricity. So that's what's driving the need for major infrastructure investment to make the grid much more reliable, much more robust in the face of cyber threats. All of that costs money, even while demand for the service is not growing in terms of volume. It's growing in terms of value and in terms of quality.
So your biggest concern in terms of security is cyber?
Well, it would be cyber and physical security. What I was saying is it's not electromagnetic pulses.
Right. Okay. Mr. Izzo, thank you very much.
My pleasure.
Ralph Izzo, PSEG CEO.
It is the biggest event in the world for energy, and CNBC is there with exclusive access to some of the biggest names in oil and gas. Take a look at this lineup of interviews over the next couple of days. The head of OPEC, the Saudi oil minister, and a barrel full of oil company CEOs. It starts today. It goes through Thursday. Yet another reason CNBC is the worldwide leader in business news. We are back right after this.
Guys, what's happening here?
Hey, Nicole. This is my new alert system for whenever anything happens in the market. It's a natural.
But Thinkorswim already lets you create custom alerts for all the things that are important to you.
Alerts on anything at all?
Not only that, you can act on that opportunity with just one tap right from the alert.
Wow. I guess we don't need a kid anymore.
Custom alerts on Thinkorswim, only at TD Ameritrade.
Look closely. Hidden in every swing, every chip, and every putt is data that can make the difference between winning and losing. The Microsoft Cloud helps the PGA Tour turn countless points of data into insights that transform their business and will enhance the game for players and fans.
The Microsoft Cloud turns information into insight.
So what else is new? How's your mother? She's doing good. She needs more care, though. She wants to stay in her house. I don't know even where to start with that. First, let's take a look at your financial plan and see what we can do. Okay, so we've got...
We'll listen, we'll talk, we'll plan. Baird.
Home Advisor is a very easy way to find a home contractor, and for me, it's the only way.
Home Advisor instantly connects you with top-rated pros for any type of home project.
If you need it, Home Advisor has it.
And it's completely free. Go to homeadvisor.com now.
Hey, how's it going?
Who are you?
I'm Val, the orange money retirement squirrel from Voya. I represent the money you save for the future. See? We're putting away acorns to show the importance of being organized.
That's smart. Who's he?
He's the green money you can spend now. What's up?
Oh, you know, gonna pay some bills, maybe buy a new tennis racket.
Tennis racket for a squirrel.
He's got a killer backhand.
When it's time to get organized for retirement, it's time to get Voya.
All right, welcome back. Beginning today, CNBC is going to bring you exclusive access to Zero Week. It's Cambridge Energy Research Associates' huge oil and gas conference. We are going to speak to some of the biggest names in oil and energy. Power Lunch will be there tomorrow as well. Jackie DeAngelis, always ahead of the curve, is already there. She walked there this weekend. Jackie, what can we expect from Zero Week? You got some great interviews lined up.
Good afternoon to you, Brian. Well, as you know, this is the Super Bowl of the energy industry. Everybody's here. You've got big oil players in the U.S. You've got producers internationally. You've got international energy ministers as well. And they're all talking about what's to come for the rest of the year. Remember, prices have seemed to stabilize, but at the same time, there's some caution in the marketplace that we could see volatility. And right now, that seems to be the big theme as the sessions are starting to get underway. The sideline conversations, those are always very interesting. What's happening by the coffee pots? They're talking about politics. They're talking about Trump, his pro-energy policies, more infrastructure, rolling back some of the regulations, all being very positive for the industry. Now, of course, there's some concern there that you'll see more production. It could put us back in the same place that we were. But a lot of the CEOs I've spoken to this morning have actually said, and this was surprising, no, demand is going to be there to meet the increased supply. Of course, the Saudis are here and the Aramco IPO is in focus, and Secretary General of OPEC, Barkindo, who we'll be speaking to tomorrow, he also said that the monitoring committee is going to be meeting in March to talk about whether or not OPEC will extend those cuts. Remember, that's what's supporting prices right now. So many key issues here. And of course, later on in Power Lunch, we're talking to the CEO of Chesapeake, Doug Lawler. We're discussing technology, how that's made them more competitive and more efficient, and also his take on the pricing cycle. Brian, you better get down here.
I will do it if the airlines cooperate. You know, Newark is so great. Jackie, thank you. See you soon, literally. All right. Speaking of the oil market, crude oil trading a little bit lower today, but get this. Crude oil up about 18% since the election. The question is not where it's been, it's where it's going. Let's bring in John Kilduff, partner to Gain Capital, CNBC contributor. The themes, as Jackie excellently laid out as usual, which is, so you got OPEC, which for the first time in forever seems to actually be agreeing and listening to each other and adhering to these quotas, but
thanks to overachieving Saudi Arabia.
Well, we've heard a little bit this country, Russia, has been in the news lately, I know, but for a lot of other different reasons. Is Russia going to get on board? Do you think they're really on board with OPEC? Many people believe they are the world's biggest oil producer.
You know, it trades between themselves, Saudi Arabia and us, actually United States, depending on the month. But it doesn't appear that the Russians are rushing, pardon the pun, to live up to the obligations that they signed on for with this.
Do you think
OPEC.
They will trump OPEC, pardon the pun?
I think they're going to go their own way ultimately, yes. I don't see them sticking to the program.
So do you think oil prices are going to be headed down then?
I do. I see a lot of problems.
To what extent? How much?
I think you'll probably get back to the November lows, which was $42 a barrel. I think a lot of the themes that Jackie's going to be hearing about and you guys will be talking about, and I'm looking forward to hearing some of those interviews myself, are ring hollow to me, Brian, in that the Saudi Aramco IPO, right? So there's supposedly an incentive for the Saudis to keep the oil price up to get that to market. Well, they've been pretty bitterly disappointed with the valuation that they're getting from Wall Street. They had wanted upwards of $2 trillion, if not more. They're getting about half that. And they're not too happy about it, and they may be having some seller's remorse. So if they decide...
maybe the Aramco deal doesn't go... Maybe they don't go public because they're not getting what they want?
Exactly. And then so where's their incentive to try to hold up prices here in the short term when they can just break the back of the higher cost producers again? I think that's a real worry.
You got to have demand to force prices higher, it seems to me.
That's right.
Demand means growth. China just said growth isn't going to be as strong as it has been in the past.
I think you could argue that China has thrown in the towel on trying to really soup up their economy. They're trying to right-size it, I think partly because of the air pollution problems that have been so manifest there. They are dialing it back. They're dialing back their small independent refiner sector, and that's going to cause a drop, quote unquote, in Chinese oil demand. Now, that demand to me was already artificially inflated because they were producing probably double what the internal fuel needs were with that oil that they were using. So they were exporting in massive amounts of it to the world market that glutted the world market. So, you know,
The Chinese were,
yes. They became one of the biggest record exports out of China.
So there could be fewer, they could be exporting less, so they could reduce supply to counter maybe more coming from Saudi Arabia.
So you'll hear refined product levels go down, but the big story, the big headline will be Chinese oil demand falling.
Got it.
A big negative for prices, in my opinion.
Certainly. All right, John, thanks so much.
Thank
John
you.
Kilduff of Again Capital. All right, the 4 stock calls you need to hear about today. Your daily dose.
The CNBC Trend Tracker Live Data Board is brought to you by the CME Group. CME Group, where the world comes to manage risk.
The future of business in New York State is already in motion. Companies across the state are growing the economy with the help of the lowest taxes in decades, a talented workforce, and world-class innovations. Like in Plattsburgh, where the most advanced transportation is already en route, and in Corning, where the future is materializing. Let us help grow your companies tomorrow, today, at esd.ny.gov.
We needed to hire someone, but it was really tough finding people that had the right experience.
I was spending half my day just reading resumes.
To hire great people, go to ZipRecruiter.com and post to over 100 of the web's leading job boards with one click. Then easily select the best candidates from one list.
I'm seeing a lot more candidates with the right experience.
We have gotten consistently better results from ZipRecruiter than anywhere else.
Over 1 million businesses have already used ZipRecruiter. Try it for free today at ZipRecruiter.com/create.
Why do people invest? They invest for what's next. That could be a college dream, a new priority, an active retirement. Whatever next is, it takes smart investments managed by experts who actively spot risks and opportunities. Franklin Templeton has been doing that for over 65 years, helping millions of investors achieve what's next. Franklin Templeton Investments. Gain from our perspective.
You're watching CNBC, first in business worldwide.
Opportunities under the radar. The trends and money moves private equity titan Barry Sternlicht sees for the markets and investors. Squawk Box tomorrow on CNBC.
Oh, we're dancing.
Order stars today. Call 855-617-5728.
On the beautiful island of St. Lucia, only at Sandals can you stay at one resort and play around at all 3. Play around wherever you want. Play around as often as you like. Dine around at 23 gourmet restaurants. Enjoy unlimited rounds on us. Why, you can even sleep in the round. Sandals Resorts in St. Lucia. Get 3 vacations for the price of 1. Call 1-800-SANDALS.
All right, time for Street Talk analyst recommendations on the stocks that we think you need to know about. We're going to tell you.
And the first one is Dow DuPont. Jefferies has upgraded the combined company following the market rally that we've seen. With confidence that the deal is going to close, the analyst explaining that growth is now less chained to the industrial cycle. The analyst says only cautious optimism is baked into the stock price, and they bumped it to $96 a share, $80 right now, so more than a 20% increase, they think, in the price.
Yeah, second stock is GoPro. Goldman Sachs says you got to sell GoPro. They cut the target to $6. That's about 25% more downside than the stock is already seeing right now. They say the company faces significant challenge. They call the entry into the drone business disappointing, and Goldman sees negative free cash flow at GoPro until at least the fourth quarter. The stock is down 9% right now.
I wish they told us that at 17 instead of
thanks a lot.
at 8. Third stock, Hewlett-Packard. Wells Fargo upgrading it to buy. The firm notes that the core business is stabilizing. Wall Street may be underestimating growth in the supplies business. They're predicting margins have room to expand as well and liking the potential for 3D printing. Price target up to $20 to $22. Right now, it's at $17.
So investors will 3D print some money, according to that Wells Fargo. Fourth stock, that was terrible. EOG Resources. Tudor, Pickering, and Hold upgrading it to a buy from a hold. They said they have always been fans of the company, but valuation kept them on the sidelines. Stock's down about 5% of the past 3 months, so the valuation now looks more attractive to Wells Fargo. They think that EOG's guidance is conservative and that cash flows are okay at $50 to $60 a barrel. Of course, if John's right, that won't help. Their target is boosted on EOG to $133 a share.
That would be a 30% increase.
That's a big increase in EOG.
Tyler.
All righty, hoping to get the president's attention. There is always Twitter, but the National Retail Federation took it a step further. They produced a TV ad to get their message across. It aired on Saturday Night Live. I thought it was a skit. It wasn't. It was an ad. Is it working? That's coming up in the second hour of Power.
Street Talk is sponsored by Wisdom Tree. To learn more, visit wisdomtree.com.
More than 24,000 companies run their business in the Oracle Cloud.
At Arby's, we moved to Oracle's Planning and Budgeting Cloud. A few of the benefits Arby's has experienced include end-to-end visibility of our budgeting process, which has greatly reduced manual intervention.
Oracle, more enterprise cloud applications than anyone else.
Looking for a sign? At Vistaprint, we've got all kinds. The banners, posters, magnets, and more kind. The easy-to-design kind. And the help when you need it kind. The easy-to-display kind, and the absolutely guaranteed kind. So what is your business waiting for? Right now, one banner starts at just $11.99 when you enter the code BANNER at Vistaprint.com. Because your kind of sign is at Vistaprint.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
This car is traveling over 200 miles per hour. To win, every millisecond matters, both on the track and thousands of miles away. With the help of AT&T, Red Bull Racing can share critical information about every inch of the car from virtually anywhere.
Brakes getting warm. Confirmed. Daniel, you need to cool your brakes. Understood. Brake bias back 2 clicks.
Giving them the agility to have speed and precision. Because no one knows and like AT&T.
Now, CNBC brings business news to Google Home.
Okay, Google, I want to talk to CNBC about the news.
In economic news, we get a...
Okay, Google, how are the markets doing?
Stocks ended the day higher.
Google Assistant brings CNBC home.
Welcome to the second hour of Power Lunch. I'm Michelle Caruso-Cabrera with Tyler and Brian. 2 hours until the closing bell. Here's what we're watching at this hour. Stocks are down right now. One of the reasons, North Korea weighing on investors, but there's a lot. The four biggest risks to this record-breaking rally that we've had. President Trump's top trade advisor making cutting trade deficits a top priority. Plus, how much do trade deficits really matter when it comes to growing the economy? He thinks it's a big deal. Is he right? And the number of human cases of the deadly bird flu surging. Shares of Tyson Foods getting slammed. We'll have the fallout on that ahead.
All right, check out some of your market movers today. Snapchat shares down for the first time since its IPO. Shares down about 7%. It was another bearish call on Wall Street. Also, Barron's out over the weekend saying that Snap shares look, quote, ridiculously valued and that it could be cut in half. Meantime, General Motors down 1%, was down 2% earlier. The automaker laying off 1,100 workers at its Lansing, Michigan plant because of a production shift to Tennessee. And Deutsche Bank stock down about 4%. Germany's biggest bank planning to raise $8.5 billion worth of stock. This after reporting another huge loss. The bank also saying it will restructure its core business. All right, here's a big question. Do deficits matter when it comes to GDP growth? White House trade advisor Peter Navarro making that case that trade deficits are undermining U.S. security. Navarro speaking today at a major gathering of economists in Washington, D.C. So obviously Steve Leisman is there as well. Bless you, Tyler. Steve Leisman joining us now with more on Navarro's comments. Steve.
Yeah, Brian, this was a stark and stern warning from the president's top trade economic advisor, Peter Navarro, about the dangers of trade deficits. He said they sap economic growth as well as investment in this country. He went on to say he's concerned about foreigners buying up U.S. assets. Remember, with trade deficits, they get big stockpiles of U.S. dollars and U.S. treasuries that they can then return and purchase. He's worried about the food supply chain, the defense industry, as well as technologies.
If the current distorted market patterns continue, and to paraphrase Keynes, in the long run, we are all likely to be owned by foreigners.
Now, Peter Navarro disputes the idea that the Trump administration wants tariffs. He said what they want is a tax and tariff level playing field, which he says it is not right there. He said the Trump administration wants free, fair, and reciprocal trade.
One of the major goals of the Trump administration is to reclaim all of the supply chain and manufacturing capabilities that would otherwise exist if the playing field were level.
A lot of economists here at the National Association for Business Economics dispute these ideas and these fears. They say trade deficits help the U.S. be productive. They lower costs. They lower inflation, as well as they are simply a cost of doing business. And they note that when U.S. growth goes up, so do trade deficits because we import more stuff, Tyler.
Yeah, I'll take it, Steve. Larry Kudlow's made that point a lot. Stay with us. We're going to bring in Sean Golar. He's head of public policy research at Barclays. Good to have you here.
Thank you.
Peter Navarro says if the playing field were level, we would reclaim lost manufacturing. Is he right?
I think that's a little bit of a simple argument he's using. I mean, if the goal is to bring back domestic manufacturing jobs, I think they should worry about export competitiveness, thinking about education, growth, not restrictions on trade and immigration.
How about this fear of the food supply chain being owned by foreigners? Smithfield being bought by the Chinese was very controversial. Jokes, about bacon being owned by the Chinese and all this stuff. But ultimately, is it worrisome if our food supply here is owned by a foreign company?
The way you just said it, yes, it's very worrisome. And I think national security arguments play into this. The government does have a process for this. You have CFIUS. You have other ways of going about thinking about foreign asset control. And there are other ways you can reform that. But I think that idea of focusing on trade deficits for national security like that and as presented that way is a little too simplistic.
Steve, I understand the idea that you want to worry about technology. So a lot of technological purchases by the Chinese have been stopped by the U.S. government because they're worried about that technology going over to China and hurting our national defense. But the pigs didn't go to China when Smithfield bought them, right? I mean, the food supply actually stays here. Ultimately, we could control it if we wanted to, right?
Yes, exactly. As far as I know, it wouldn't make very much sense to export the pigs to China to re-import them as various cuts of smoked ham, I would imagine. Look, here's the story, Michelle, that I get, which is Peter Navarro makes a compelling case about individual aspects of trade where the U.S. may be not on a level playing field, where our competitors are taking advantage of free trade agreements. The issue becomes one of focus and direction. For many decades, the U.S. has been part of the engine behind the rise in global free trade and has brought many people out of poverty around the world and really helped out the U.S. The question becomes, is the focus of the Trump administration on just these small transgressions, or is it on a broader decline or shrinking of free trade in the United States?
Sean, Steve brings up a very good point. I listened to some of the things that Wilbur Ross and Peter Navarro talk about, and all the things that happen, that the Japanese do, that other countries do, that are outside these trade agreements. When stuff sits in port way too long because their customs officials are just doing that, that is one of these non-tariff barriers to entry that happen. Those things should be stopped. The Chinese are famous for these things. How do we stop those things which are justifiably wrong?
No, that's absolutely right. There are a lot of things that they should do to change it. I think, though, in their approaches, and Navarro talks about some 16 countries, and he baskets them all together, he really should separate that to China and everybody else, because I think the U.S. may want to think about an approach that's specific just for what's happening with China.
But here's the thing, guys. Steve, you got a couple options if you're Donald Trump. This is what you campaigned on. This is what you said you're going to do. You can't just say to the American people, you know what, everything we campaigned on, well, it's not really going to work, and therefore there are people, I think you went to college in Buffalo, right? There are people up there that have watched their city get decimated for 30 or 40 years. And
I watched it too.
This may not work. The border-adjusted tax may be a horrific idea. But you know what? For the men and women up there and in Cleveland and in Youngstown, they've got to do something. Try something.
Brian,
because that's what they campaigned on.
You have to be careful, Brian. You have to be careful not to overstate the problem. Let me take an example. In the town where the carrier plant is located, where Donald Trump went to go save all those jobs, the unemployment rate there is 3.5% and falling. Per capita incomes in Indiana are rising. The economy has a way of adjusting. If you hear Peter Navarro talk, what worries me the most about what he says, and I think he should fix all these things that are out there. What worries me is he says we need to have manufacturing jobs. The service surplus doesn't matter.
I remember data
he's very much talking about a government-directed. He's very much talking about a government-directed jobs program, which is troubling to me.
Which is definitely not in the conservative camp, for sure. But, Steve, I do remember data points when Phil LeBeau was live there, Brian, when you were live there, that wages in places like Indiana hadn't budged for 20 years.
I mean, some of those wages are good, but per capita incomes were rising. What's interesting to me, Michelle, is the economy, especially the U.S. economy, finds a way to adjust. And there are issues. What talked about here at this economics meeting are things like job retraining, but not getting in the way of market forces that essentially let a company in the U.S. get the cheapest possible product from overseas, sell it here more cheaply, take that income that an American was spending on something and put it over somewhere else.
So Mr. Navarro says the goal of the Trump administration is to return all of the manufacturing capabilities, i.e. jobs, that would have existed but for unfair trade practices. How do you do that? Is that an achievable goal? What is Nike going to do?
Right. With the way there
aren't shoe factories in this country able to make the shoes in the volumes that they make.
And if you look at, there's some compelling data I got from the Conference Board and elsewhere, and you look at average manufacturing for cost for compensation, it's well north of $35 in the U.S. It's about $6 and $4 for Mexico and China. You're going to close that wage gap just by immigration restrictions and by trade policy. That's really hard to do. At Barclays, our research team has looked a lot at this. And whether it's in the retail sector or financials, to close these sort of problems by those restrictive practices is not always a great way to do it. You often reduce the trade deficit by export competitiveness, finding ways to increase growth, not by trade restrictions.
For Steve Leishman and everybody on set, I want to issue a challenge right here on Power Lunch to our political ruling class. And I want somebody in politics to come out and say the truth about manufacturing in two ways. Number one, The only reason we had a middle-class manufacturing base in this country at all is because we decimated Japan and Germany, and China was a closed country. We basically had a monopoly on global manufacturing for 20 years. We had pricing power and wage power. It's a very short period in American history, even though we romanticized the 60s and 70s. I said a lot in 20 seconds. I'd like somebody to say that. And also, Steve, would you like to hear politicians say, we probably can't solve the problem, America, but you can, because you said the right word twice in one sentence, Steve Leishman, cheap. Until we stop our obsession with cheap goods, we're not going to have high wages and low value goods, are we? We're not going to have crap and have high salaries. It's not the way it works.
Just very quickly, I think that the key is to let market forces work, because the market ends up sorting things out the best way, and the government can be there to help people and help people pick up the pieces. What I worry about is the government that wants to get in the way of market forces. And I just want to underscore, Peter Navarro and Donald Trump should go out there and hit all of that patent and illegal unfairness as hard as they can. But ultimately, when you look at the charts of declining global poverty, then you see that there's a massive benefit to trade to billions of people in the world.
Got it. Thanks, guys. Thank you, Sean. Thanks for coming in. Thank you, Steve.
All right, geopolitical risks. We just talked about trade risks. Geopolitical ones, specifically North Korea, weighing on markets today after they launched 4 missiles. But there are other risks to the rally as well. The Trump agenda and how quickly or whether it will get through or how intact it will. A trade war. We just talked a little bit tangentially about that. Federal Reserve interest rate hikes. Which one should you, as an investor, focus on? Let's bring in Chad Morganlander, portfolio manager with Washington Crossing, and Mark Lucchini, chief investment strategist with Janney Montgomery Scott. Gentlemen, welcome. Good to have you with us. Obviously, there's a tremendous amount of optimism in the market these days. Records, 21,000 last week, maybe a little blowing off of steam or froth today. But is the market, Chad, building in that too much good stuff is going to happen quickly? That seems to me to be one of the underlying pillars here that might be most at risk.
Yeah, I happen to agree with you. The market is building in this expectation of revenue growth for the S&P 500, earnings growth, as well as economic acceleration, not only on a domestic front, but on a global front. That acceleration, I believe, will happen, but not to such a degree. So when you look at the valuations, market cap to GDP, some really elevated. When you look at price to sales for the S&P 500, elevated. So investors should take more of a cautious viewpoint. And when you look at the long-term forecasted viewpoint for the S&P 500, we're coming in more along the lines of a 4 to 6% annual total return for the next several years.
So, Mark, we identified 4 risks. There are obviously more. The Trump agenda not moving through as quickly or as intact as some think. A trade war, North Korea, which is really a placeholder for geopolitical risk, and a Federal Reserve that is going to be more aggressive maybe than we thought on raising interest rates. Which is the one of those 4 that worries you the most? And what would you suggest that I, as an investor, do to hedge against those risks? What are you doing?
Sure, Tyler. For me, it's the Trump agenda. I think North Korea at the moment is a red herring. I think the Federal Reserve is going to do what it's going to do likely next week. And then after that, it's going to be much dependent upon how economic activity unfolds. And the market won't be worried about it if the Fed's hiking rates into faster economic growth. So the real key is to take us out of this base case scenario in which we see economic growth advancing in this kind of 2% area. At least that was the last print from the Atlanta Federal Reserve. Is got to be some kind of legislation on the Trump agenda, which mainly was built around corporate tax reform and deregulation. And the longer that continues to get pushed out into the year, such that it may not even have an impact in 2017, becomes worrisome for me as an investor as I think about an 18 times forward multiple on the market.
Is there any way to hedge against that risk? In other words, it's either it's going to happen on a timetable, or it's going to happen on a slower timetable, or parts that we think are going to happen aren't, because we don't know the details. But how do I hedge against that? First you, Mark, and then Chad.
Sure. Well, again, for me, Tyler, I think the approach is to not abandon some of these defensive sectors of the marketplace that had been overwhelmed by the charge and cyclicals, which basically put a huge down payment on expectations that all this is going to come to fruition. So things like the utilities, things like consumer staples and healthcare, which was last year's laggard and now this year's leader, I think are areas that are actually quite ripe for investment because the valuations have swung to where they look relatively cheap.
Chad,
yes.
your thoughts?
So if you're a retail investor, you want to own a little bit of bonds as well as some gold with the expectation that if you don't get that economic vitality, long end of the yield curve will go lower and you'll get a flattening of that yield curve. And that's a non-consensus kind of theory there. Also, what we would do, like Mark, is we would move up the quality spectrum, look at staples as well as healthcare companies. We think that they're consistently growing, consistently profitable, and could do quite well in 2017.
Gentlemen, thanks to both of you, Chad Morganlander, Mark Lucchini. We appreciate it.
All right, here's what's coming up on the remainder of Power Lunch. Retailers, many of them are already struggling, malls falling out of favor. But now they're hitting back over a new threat, the border adjustment tax. We'll show you a commercial, rather confusing commercial, actually, that was rolled out over the weekend. Plus, huge energy conference in Houston this week. We're going to go there live in a few minutes and speak with the CEO of Chesapeake Energy. And Ivanka Trump's push for a measure that could have a big impact on your family. All that and much more coming up on Power Lunch.
You're watching Power Lunch with Tyler Matheson, Melissa Lee, Michelle Caruso Cabrera, and Brian Sullivan on CNBC. First in business worldwide.
Why do so many businesses rely on the U.S. Postal Service? Because when they ship with us, their business becomes our business. That's why we make more e-commerce deliveries to homes than anyone else in the country. Here, there, everywhere. The United States Postal Service. Priority you.
During the Lexus Command Performance Sales Event, experience our most thrilling models ever, including the exhilarating IS, GS, and RC Coupe. Experience amazing.
Who do you work for? Your boss? Yourself? Your family? Our financial advisors are free to realize a plan to fit your family's unique needs. We'll listen. We'll talk. We'll plan. Baird.
Opportunities under the radar. The trends and money moves private equity titan Barry Sternlicht sees for the markets and investors. Squawk Box tomorrow on CNBC.
John Lithgow talks about his new comedy.
Trial and Error is a travesty of real-life crime documentaries.
Where were you the night Margaret was murdered?
I went to get gardening supplies.
One shovel, one tarp, and let's throw in the ski mask.
Nobody knows whether I did the crimes, not even the cast.
Trial and Error premieres March 14th on NBC.
Your insurance company won't replace the full value of your totaled new car. The guy says, you picked the wrong insurance plan. No, I picked the wrong insurance company.
With Liberty Mutual New Car Replacement, you won't have to worry about replacing your car because you'll get the full value back, including depreciation. And if you have more than one Liberty Mutual policy, you qualify for a multi-policy discount, saving you money on your car and home coverage. Call 1-844-635-3386 for a free quote today. Liberty stands with you. Liberty Mutual Insurance.
I was on heroin.
I used crack cocaine.
We are the Addiction Network. And if you have a problem with drugs or alcohol, you need to call the number on your screen now. Addiction is a disease, and you can't go it alone. The call is free, and so is the consultation. So why haven't you called? What are you waiting for? Call the Addiction Network now. Get the help you need.
Call 800-844-0420.
Too much dough got you feeling low? Then you need the Bet Tax. The all-new Bet Tax is specially designed to make your disposable income disappear. You've got fails.
If you caught Saturday Night Live this weekend, you might have seen that commercial. It was produced by the National Retail Federation, meant to fit in with Saturday Night Live's storytelling humor. And
I
also
thought it was part of Saturday Night Live. I was absolutely now. This is after a little wine, but I was not.
Even sober, I think you could have been confused.
Oh, my God.
I think that was an SNL skit.
On a scale of 1 to 10, that ad gets a -1 because of exactly what you just said. If you, and you're a very, very smart man, Tyler. And if you were confused because you thought it was a joke or a part of Saturday Night Live, so was everybody else.
Here's the thing. You know why they picked to advertise on Saturday Night Live.
I almost called you.
Knowing how much I love talking about the word. They picked it because who watches Saturday Night Live besides you, Tyler?
A gentleman who lives at 1600 PA.
That's right. They know President Trump watches SNL.
Yeah,
He loves it too,
ineffective and weird and just it was awful, terrible.
No, we're having fun. Don't move on. We're talking about this. It's much
Sticking with retail.
Yeah. Moody's out with a new report showing the number of distressed American retailers at their highest level since the Great Recession. Moody's says those 19 names you see on our giant wall there, which include names like Gymboree, J. Crew, Rue 21, True Religion, and others, are nearing junk territory. Charlie, he said call you Charlie. O'Shea is the lead retail analyst at Moody's and the author of the new report. Here's the thing. We were obsessed with the oil story for years, and people said, why are you so obsessed with the oil story? It wasn't an oil story. It was a debt story. It was a debt bomb story.
Yes.
How severe is the debt story for retail now?
It's pretty severe. We cite $3.7 billion of public debt coming due over the next few years. That number goes up when you add the private companies in, and we obviously can't disclose those.
It doesn't sound that unmanageable.
When you layer it on top of all the other industries with their debt loads coming due, we've got a wall. You could use almost any adjective you want.
And don't forget
for
the
debt that's maturing.
The declining revenue part.
Yes.
Which makes it very difficult, right?
Yes.
Glasses half full.
Here's the thing, real basic when it comes to investing. If the bond is falling and you're worried about the bond getting paid back, the stock is probably worth zero, right?
I'll take the bond side. And when bonds are losing value, it means the company's in distress. And we've got, again, on that list, 19 names. We have another 13 that are in B3 category, which is one notch above CAA. So those are names that we're paying a lot of attention to as well. But the CAA category and CA category, those are the companies that are highly distressed. In this type of a retail environment, the pressure on them is far more acute than it's been in the past.
For laymen who don't know CAA and CA, is one junk and the other junk? What is
They're deep spec grade ratings. Our spec grade ratings start at BA1 and go down to CA. So you're at the absolute bottom.
It's a D minus. If their kid was getting a test score, they'd have a D minus.
You're at the absolute bottom of the rating scale.
Am I overstating it? Does it mean you're worried they might go bankrupt?
The probability of default is much higher and much more acute at that end of the rating scale, yes. And that's when liquidity really becomes important.
Well, so Charlie, when we look at that, and let's put the board back up at some of these names. Obviously, Claire's stores. These are names you see in every mall in America you go to. You know these names.
For now.
What happened? Is it to Michelle? Thanks. Is it to Michelle's point that these companies have just had a revenue issue and they're not selling anything? It's terrible. Or did a lot of them lever up private equity, buyouts, LBOs?
Too many stores.
A lot of them are LBOs. Claire's is an LBO.
Leverage buyout.
Yes. J. Crew is an LBO.
Somebody bought them using their own debt to pay for this.
A lot of debt.
And then they borrowed a lot on top of it.
Yes.
To take dividends out for themselves.
To pay themselves fee.
That's
which they
one
hope to
characteristic, yes.
Roll public.
And what you're seeing is with the debt from the LBO, things have to go pretty well for things to get better. And in this type of retail environment where we're seeing the transition online, Amazon, Walmart getting aggressive on price, Target now getting aggressive on price, the deck's stacked pretty heavily against anyone with not a lot of financial flexibility. And the more leverage you have, the more debt you have, the less flexibility you have, and it almost becomes a perfect storm.
Is there any other sector in the market that's this bad, or what's closest?
I focused on retail for this report, and I really don't know that.
Oil's gotten better. Oil's gotten a little better.
Yes.
Can you save Fairway Markets?
Because I like Fairway.
I like
going there.
Of all those, that would be the one that would be in the.
You don't want to go to Claire's for all the barrettes?
Or Charming Charlie's. I don't know. I don't know Charlie Charming's. Charming.
J. Crew's gotten a little bohem, I think. So.
It's a tough period of time for these guys right now.
Yeah, and when you have these stores go under, then you got an empty store, and then you got these clauses that let other people out of contracts, and it just becomes a downward spiral. So
guys from Moody's, they never laugh at the jokes.
Thank you. Charlie, thank you.
No
Charming
sweat.
Charlie.
Thanks, guys.
Thank you.
All right, we're going to stick with retail. Macy's is down today. We're going to tell you why, and we're going to show you a stock that's up 80%. The good, the bad, and the ugly are next, right after this break.
It's been over 100 years since the first stock index was created as a benchmark for average. Yet a lot of people still build portfolios with strategies that just track the benchmarks. But investing isn't about achieving average. It's about achieving goals. And Invesco believes doing that today requires the art and expertise of high-conviction investing. Translation? Why invest in average?
Today, I am helping people work better and also feel better. I am helping hospitals personalize treatments using billions of data points and working with Medtronic to predict the highs and lows of diabetes hours in advance. And I am working with Oracle to use biomarker data to boost the performance of athletes. Hello, my name is Watson. Working together, we can help everyone live healthier.
What are you doing?
Getting your quarterback. Fountains don't earn interest, David. You know I work at Ally.
I was being romantic.
You know what I find romantic? A robust annual percentage yield. That's what I find romantic. This is literally throwing your money away.
I think it's over there.
That way?
Yeah, a little further up.
What year was that quarter?
What year's that one?
98.
That's the one. You got it.
Nothing stops us from doing right by our customers. Ally. Do it right.
Let's get out of that water.
When it comes to getting help with home repair and improvement projects, millions of homeowners trust Home Advisor to find a reliable local pro.
We use Home Advisor for all our home projects. Installing the garage door,
remodeling the kitchen,
cleaning the gutters,
fixing the AC, any project.
Big or small.
Home Advisor's like a neighbor who knows all the great service pros in my area.
You can compare prices
and book an appointment right online. Home Advisor is completely free to use.
Go to homeadvisor.com or download the free app.
Home Advisor.
We've done well in life. With help from our advisor, we made it through many market swings. Sure, we could travel, take it easy, but we've never been the type to just sit back. Not when we've got so much more to give. When you have the right financial advisor, life can be brilliant. Ameriprise.
Rampaging bull run is actually a sign of health, especially when it's associated with a gigantic yet well-run IPO. It should ultimately bring out more buyers than sellers.
Welcome back to Power Lunch. Time now for the good, the bad, and the ugly in today's trade. First to the good, TG Therapeutics. That stock is up 89% after announcing positive results from its clinical trial for its treatment for leukemia. On to the bad, CSRA. The stock is down after Cowen downgraded it from positive to neutral, citing fewer favorable catalysts. CSRA is an IT company. It is lower by 4% today. Ugly day for Macy's. The stock is falling on reports that Canada's Hudson's Bay has yet to line up financing to make a bid to buy Macy's. It's lower by more than 4%. Tyler.
All right, Michelle, thank you. While most stocks have rallied so far this year, energy hasn't, and Chesapeake in particular getting hurt, down 25%. Coming up, we will talk to the company's CEO live from the big energy conference, the CIRA conference in Houston. And the thing Ivanka Trump wants her father to do that could have a big impact on your family. Power Lunch returns in just a moment.
Paid Equity Income Fund. Sourcing income is in our DNA.
E-Trade's powerful trading tools give you access to in-depth analysis and a team of experienced traders ready to help you if you need it. It's like having the power of a trading floor wherever you are. It's your trade. E-Trade.
The future of business in New York State is already in motion. Companies across the state are growing the economy. With the help of the lowest taxes in decades, a talented workforce, and world-class innovations. Like in Plattsburgh, where the most advanced transportation is already en route, and in Corning, where the future is materializing. Let us help grow your companies tomorrow, today, at esd.ny.gov.
No matter how the markets change, at T. Rowe Price, our disciplined approach remains. Global markets may be uncertain, but you can feel confident in our investment experience around the world. Call us or your advisor. T. Rowe Price. Invest with confidence.
Paid in Equity Income Fund. Sourcing income is in our DNA.
We're at Lockheed Martin today to take a deep dive into the F-35 fighter program. This is the most expensive weapon system in the world. After years of cost overruns and criticism, most recently from President Trump, the price of Lockheed Martin's stealth.
If you're approaching 65, now's the time to get your ducks in a row to learn about Medicare and the options you have. You see, Medicare doesn't cover everything. Only about 80% of your Part B medical expenses. The rest is up to you. So if 65 is around the corner, think about an AARP Medicare Supplement Insurance Plan, insured by United Healthcare Insurance Company. Like all standardized Medicare supplement insurance plans, they help cover some of what Medicare doesn't pay and could save you in out-of-pocket medical costs. So don't wait. Call to request your free decision guide and gather the information now to help you choose a plan later. These types of plans let you pick any doctor or hospital that takes Medicare patients, and there's a range of plans to choose from, depending on your needs and your budget. So if you're turning 65 soon, call now and get started. Because the time to think about tomorrow is today. Go long.
Hi, everybody. I'm Sue Herrera, and here's your CNBC News update at this hour. President Trump signing a new version of his controversial travel ban. The revised order leaves Iraq off of the list of banned countries. Secretary of State Rex Tillerson formally unveiling the new edict.
It is the president's solemn duty to protect the American people. And with this order, President Trump is exercising his rightful authority to keep our people safe. As threats to our security continue to evolve and change, common sense dictates that we continually reevaluate and reassess the systems we rely upon to protect our country.
A huge water main break in Maryland soaking a neighborhood this morning. That break actually looked more like a geyser, shooting up water 200 feet in the air, and that force was strong enough to create that hole in the road. And we end with a mascot dance-off occurring over the weekend at the Metro Atlantic Athletic Conference basketball tournament. No losers in this matchup. The fans enthusiastically taking it all in and rooting for both sides. That's the news update this hour. Ty, back to you.
All right, get ready for March Madness. It starts a week from roughly today. All right, let's take a look through the markets right now. 90 minutes to the closing bell, and it is a down day on Wall Street for the Dow, the S&P, and the NASDAQ, all lower across the board, not by all that much, about 0.33% for the S&P and NASDAQ, a little less for the Dow. Snap pulling back. You could say they're snapping back after euphoria surrounding its IPO. Barron says it is ridiculously valued and the price could be cut in half. Oil trading just wrapping up for the day, and oil closing ever so slightly lower. Let's get to Seema Modi for a market crash. Hi, Seema.
Erasing those gains, at least for today. All right, rising expectations of a rate hike not helping the financials after gains of about 2% last week. The S&P financial sector, worst performing sector in today's trade, and down nearly 0.75%. Major banks, Bank of America, JP Morgan, Morgan Stanley, down just about 1%. A lot of traders attributing this to news around Deutsche Bank. That's, of course, also weighing on the sector after the German bank confirmed it will raise around $8.5 billion in capital from shareholders. Tyler?
All right, thanks very much. Seema, big energy conference in Houston this week, CERA Week, where energy leaders and experts from around the globe gather to discuss the future of the energy industry. Brian will be headed there after the show. In fact, he's going to head there before the show ends, actually. You're going to notice roughly about 2:45.
The volume will come down by 75%.
Jackie DeAngelis is there now. And she's joined by Doug Lawler, President and CEO of Chesapeake Energy. Jackie.
Good afternoon to you, Tyler. Doug, thank you so much for being here with us. I want to start with the macro picture and get your view on the industry right now. A lot of people are wondering if this support range of $50 to $55 a barrel for oil prices is real or a head fake.
It's great to be here with you, Jackie. Thank you. So we believe it is real. I think we've seen a lot of progress around stability and pricing in the last few months, and our confidence is good going forward in that respect. What's very, very important is that I think particularly for the U.S. producers, a company like Chesapeake, that the strength of the company, the cost improvements, we're very well positioned in this $50 to $55 a barrel window to continue to invest and provide the energy that our country and the world needs.
And technology has been so important for you to bring your costs down, to navigate the last 2 years in the downturn. But at a certain point, those efficiencies become less powerful, right? When you bring costs down at a certain point, there's not that much more you can do.
Well, I think that's a conventional thought, Jackie, but actually the continued improvements in technology have been remarkable in the past several years. One of the comments I like to say is don't underestimate the ingenuity and innovation of the U.S. oil and gas woman. We've continued to make great progress on drilling, completion, cycle times, opportunities to reduce our cash costs as well as our capital efficiencies to make the U.S. more competitive.
Okay, so as prices go up, margins increase as well.
Well, as prices go up, margins will absolutely increase as well. The key is that the strength of our portfolio, the strength of Chesapeake Energy, is that we have great control of our costs, that we manage that cash cost structure and our capital efficiencies to drive greater value for all of our shareholders.
Okay, the election and the new administration, certainly part of this story as well. Pro-energy, bullish on pipelines. How does that help you?
Well, it helps us a lot. We look forward to working with the new administration. We're excited about the pro-business environment. The key for us is that we're going to do our very best to provide the most efficient and environmentally safe and sound way of delivering oil and gas to the U.S. as we can.
You have managed through the downturn. You've sort of turned the company around, really working on that balance sheet. Tell us what we can expect going forward.
So Chesapeake is a great transformation story. We've paid a lot of attention the past few years to improving our operations, improving our balance sheet and our financial strength. I'll actually argue today that Chesapeake is stronger than it's ever been. And I'll also say that we'll look back today, we look back, and in the future we'll look back and say that this lower commodity price environment is one of the best things that's happened to the company. It gave us the opportunity to focus on our costs, it gave us the opportunity to focus on our portfolio, and really optimize on how do we drive the greatest value from them.
All right, I'm going to send it to Brian Sullivan in Englewood.
Thanks, Jackie.
Hey, Jackie, thanks very much. Hey, Doug, question. You told us back in January that you were still considering some asset sales. What's for sale? Are you close to selling more assets?
So, hey, Brian, it's good to see you. We actually are continuing to look for the opportunities to sell assets. What's important to Chesapeake today is that we continue to improve our balance sheet, strengthen that portfolio. Asset sales and looking for a way to further reduce our debt and leverage is one of those things that we have to do. Important to note, we've reduced our debt and leverage by over 50% over the past few years. We need to continue to focus on that.
Quickly, then also pipelines. I know you're not a pipeline company. However, your products go through pipelines. Can we make all the pipelines in America with U.S.-made steel? You think that's possible?
I'm sorry, Brian, with that.
He was asking if we can make all the pipelines with U.S.-made steel as the president has ordered.
Well, I certainly hope so. I mean, we're certainly supportive of that and believe that that the strength of the U.S. and using the products in the U.S. is something that we absolutely need to do to the best of our ability.
Final question to you, Doug. You know, we talked about some of the challenges moving forward, how you are nimble in an industry that can be so volatile. And you did tell me that you expect more volatility this year. Rank for me what your top priorities are and how you get through the rest of 2017.
Certainly, Jackie. So the first and top priority is our financial discipline and continuing to improve and restore our balance sheet. The second is the most efficient operations in every basin in which we operate. And the third is the use of technology. Make no mistake, the success and strength of Chesapeake today is driven on technology improvements. We'll take what we learn and share that across our portfolio and drive for better results
All right.
for the industry.
CEO of Chesapeake Energy, we've got Doug Lawler. Thank you so much for joining us today. Guys, I'm going to send it back to you in Englewood. Brian, I'll see you in Houston.
Yeah, see you in person tomorrow, Jackie. Thank you, and Doug, thank you very much. All right, well, President Trump is working on travel bans and health care and tax reform. His daughter Ivanka is pushing for a tax credit for working families. Ilan Mui has that story. Ilan.
Hi, Brian. Ivanka Trump is turning to female CEOs for advice on her signature issues, childcare and paid family leave. She invited those executives to a dinner party recently. Sheila Marcello of Care.com was there. Her company connects parents with babysitters. If you've got young kids, you've definitely heard of it. I talked to her today about how that dinner conversation went.
I'm very hopeful and inspired that as a first daughter, she's speaking up about these issues.
Ivanka's plan would allow families to deduct the cost of childcare from their income, and it provides refundable tax credits for low-income households. It also expands the tax-free savings accounts that are dedicated for childcare. But there is some pushback, however, to some of the details of her proposal. The Tax Policy Center found that most of the benefits go to wealthy households. And Sheila Marcello pointed out that many poor families won't get anything at all.
The policy actually doesn't necessarily impact 45% of Americans because 45% don't have a tax liability or they have a negative income. So a deduction isn't helping them.
Marcello does support Ivanka's call for paid family leave, and she said that government should find ways to encourage more companies to offer child care benefits. Marcello told me she hopes the dinner with Ivanka was just the beginning of the discussion between the business community and with the White House. We've got more on this at CNBC.com. Back to you guys.
Elon, how possible do you think this is? It's the conservatives, the Republicans who are in charge of corporate tax reform and tax reform in general, and there's a belief that you should go to a much simpler tax code and remove all the kind of nanny statism that's been put in place over the years, and this would fall right within that kind of thinking. Does it have any chance?
Yeah, I mean, just the fact that there's a packed agenda here on Capitol Hill alone is going to make this issue tough to break through. But it's got a really important advocate, and that is Ivanka Trump. You heard President Trump mention this issue, affordable child care, paid family leave, in his conversation, in his speech to Congress last week. So, you know, she definitely has the ear of the president, and we'll see how far she can get with this.
So would one way to redress the fact that most of the benefit goes to the upper and upper middle income people who A, itemize on their tax returns, and B, have enough income where they have deductions to take. Doesn't a refundable tax credit go a long way to addressing that?
It does. So if you expand the amount of the refundable tax credit, expand sort of who can qualify for that, that's one way to ensure that lower income families do receive more of this benefit. Sheila Marcello also said that it should be monthly. You know, many families pay for childcare out of pocket every week or every month, so giving them a tax deduction that they get at the end of the year doesn't help them make ends meet throughout the rest of the year.
She wants the IRS to write checks monthly?
Well, that's one of the plans under the House GOP Obamacare plan, right?
Wow.
For the refundable tax credits for age-based versus income-based. So, you know, this is something that does have precedent.
But monthly checks?
Potentially.
Wow.
Potentially monthly checks. You have to beef up the IRS in order to do that, right? Not with the types of budget cuts we're seeing out of the IRS and out of the Treasury.
Thanks, Elon.
Elon,
sure, no problem.
It is like really nanny stating if you think about it.
Get it? It's paying for the nanny.
Sorry. Financial
state
stocks.
pays for the nanny.
Financial stocks pulling back today, but have had a great run under President Trump. With an interest rate hike possible next week, will the rally in financials resume? Trading Nation is next.
You're watching Power Lunch with Ryan Sullivan, Tyler Matheson, Melissa Lee, and Michelle Caruso Cabrera on CNBC. First in business worldwide.
We're working actually with a global agribusiness, and they operate in one of the emerging market countries that are at a high level of digitization. And we've worked with this company to actually build analytic capabilities so that they could see and have visibility into what that government was doing with their data.
More than 24,000 companies run their business in the Oracle Cloud.
Yeah, I think the biggest benefit that we get from Oracle ERP and EPM cloud products is that we have an integrated financial planning and then accounting system that's also tapped into Oracle BRM for our billing system.
Oracle, more enterprise cloud applications than anyone else.
Are the credit cards in your wallet actually the best ones for you? At NerdWallet, we sort through over 1,700 credit cards to find the top cards for balance transfer, travel, earning rewards, and other perks. Using your unique info to narrow the search, NerdWallet makes it easy to find credit cards that work harder than the ones you have now. Stop missing out. Visit nerdwallet.com to find the cards that are made for you.
I joined the Army in July of '98. I did active duty 11 years and 2 in the reserve.
Our 18-year-old was in an accident. When I called USA, it was that voice asking me, "Is your daughter okay?" That's where I felt relief.
It actually helped to know that somebody else cared and wanted to make sure that I was okay. That was really great.
We're the Rivera family, and we'd all be with USAA for life.
USAA. We know what it means to serve. Call today to talk about your insurance needs.
Hey, Gary. What do you got here? This bad boy is a mobile trading desk, so I can take my trading platform wherever I go.
You know that Thinkorswim seamlessly syncs across all your devices, right?
Oh, so my custom studies will go with me?
Anywhere you want to go.
The market's hot.
Sync your platform on any device with Thinkorswim, only at TD Ameritrade.
The job opportunity of a lifetime.
I'm looking for a leader.
$500,000 contract.
This is a contest.
Equity stake in Marcus Lemonis' empire. Who will it be?
Tell me why you should be the partner.
Series premiere tomorrow at 10.
Financials, the biggest sector lagging today, even as a rate hike looks more and more likely. Let's trade the banks with the Trading Nation team. Rich Ross, Evercore ISI, Eddie Elfenbein with Crossing Wall Street blog. Eddie, first to you. Is this a short-term pullback here, or is the Trump bump now done?
I think it's just a short-term pullback. You know, the financial stocks have had an amazing run since the election. Also, last Wednesday, they had a tremendous gap up. The financials have been very strong, and with an interest rate hike almost certainly coming next week. Also, there could be another one within another 6 months. So I think this is a minor pullback for the financials. They look very strong right here.
All right, very bullish view fundamentally. Technically, Rich Ross, how do the banks and the financials look?
Yeah, Brian, the financials remained the bedrock of the post-election reflationary rally. I'm going to give you the setup and the key to unlock that setup. Bring up the chart of the XLF, if you would, please, and you can see really a textbook pattern and form here, Brian. Sure, we've pulled back over the last few sessions as a response to Wednesday's explosive move in the broader market. We closed that gap down to 2450, but what really gets us excited is that bullish flag formation. That projects upside to as high as 2728 on that XLF ETF. And if we go to the next chart, you see that 10-year yield. Of course, the macro kicker to unlock the setup. They're a very similar flag, not surprisingly. 250 has been somewhat stubborn resistance, but we do see a break above that 250 and an extension of the move in 10-year yields up to 270. That's your first stop. Ultimately, you're going north of 3%, Brian, somewhere around 310, 312. That's going to continue to drive the reflationary narrative and the financials.
And housing, maybe. Rich Ross and Eddie Elfenbein, thank you both very much. Folks, a reminder, you can go to our website, tradingnation.cnbc.com. And guys, if he's right, if Rich Ross is right, the 10-year above 3%, I think we might have ourselves a real estate story on our hands at some point, because Americans, you know, we love to pay higher rates for everything.
Oh, yeah, we do.
We do, yeah. So if he's right, mortgage rates are going to creep up as well. That means if you haven't bought a house yet, folks, buy one today. Sight unseen, 100% equity financing.
Okay.
All righty. Why Tyson, yeah, lock in your home equity line, too. Why Tyson food shares are falling today. That's next on Powerline.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
When markets get volatile, consider using limit orders. They allow you to specify the maximum price you're willing to pay when buying a stock. Additionally, they let you set the minimum price you're willing to accept when selling a stock. But mostly, limit orders can help you avoid unpleasant surprises.
You know trading because you've always had that gear, that internal drive to know more, to know how things work, why things don't, and who has the answers to all kinds of questions, the little ones, the tricky ones, and the vital ones, all the while never too proud to stand up and just ask.
That is a really good question.
That need to know more is why you trade with Schwab.
I'm thinking I want to buy on its next pullback.
Let's see. You could sell an out-of-the-money put.
That sounds interesting.
For unlimited calls to trading coaches, including option specialists, whose only agenda is yours. Now, get 500 free online trades good for an entire year. No more. With Schwab Trading Services, own your tomorrow.
Investment opportunity doesn't sleep. It's always up, always working. It's 9 a.m. somewhere, and opportunity is there having its second cup of coffee. You could crisscross the world to find it, or let Franklin Templeton spot it for you. We have over 600 experts across the globe, on the ground where it's happening. So no matter where or when investment opportunity emerges, we're actively at work to help you seize it. Franklin Templeton Investments. Gain from our perspective.
Clarity returns.
Everything that I do well, it's overblown how great it is.
With Lefty himself.
And everything I do poorly, it's, oh, this is just catastrophic.
Clarity, tonight, 9 p.m. on Golf Channel.
You had a long, stressful day, and now you need a little help falling asleep. Time for Unisom Sleep Minis. The little capsules work fast, so you get a good night's sleep and wake recharged. Unisom Sleep Minis. A stressful day deserves a restful night.
Becca doesn't know soda breaks down tooth enamel. Thankfully, she uses ACT Restoring Mouthwash with fluoride. It restores minerals to enamel for 40% stronger teeth. ACT. Smile strong. And try new alcohol-free ACT Restoring Mint Burst for strong teeth and refreshingly fresh breath.
Allergies can hold you back. Break through with Allegra 5-in-1 Relief. It starts working in 1 hour. Relief lasts 24 hours, and it's non-drowsy. Break through allergies with Allegra 5-in-1 Relief.
When I got to be 50, my doctor told me enlarged prostate happens with most guys my age, with frequent urination day and night. He suggested Urinozinc, reduces frequency, and most important, supports a healthy, normal prostate. Take Urinozinc and take care.
Tyson food shares falling today because a flock containing 73,000 birds was impacted by bird flu. Morgan Brennan joins us now. Morgan.
Hey, that's right. So Tyson is one of the worst performing stocks in the S&P today, and that is after government officials confirmed over the weekend that a Tennessee chicken farm supplying the poultry and pork producer tested positive for a strain of avian influenza that's very lethal and very contagious to birds. Now, the first case of bird flu in over a year, the 73,000 plus flock of breeding chickens is currently already being culled. We've got no affected birds entering the food system, and the roughly 30 farms in a 6-mile radius are currently under quarantine. So Tyson saying it's, quote, responding aggressively to help contain this virus. It has tight biosecurity measures in place, adding that, quote, based on the limited scope known to us at this time, we don't expect disruptions to our chicken business and plan to meet our customers' needs. Still, South Korea imposing a ban on U.S. poultry exports today. That country has been importing American products amid its own worst ever bird flu outbreak. The U.S. itself has been little affected since 2015 when 50 million chickens and turkeys were destroyed in the worst ever outbreak here in this country. This is a single case for now. But the concern, the U.S. is the world's top producer of poultry. 16% of that is exports. So if we see more cases, heaven forbid, or more countries putting bans in place, that's what could dent companies' earnings. And that is the reason you see shares of Tyson down more than 2%, as well as Sanderson Farms and Pilgrim's Pride, all top poultry producers in this country. That's why they're falling today. Back over to you.
Got it. Thank you, Morgan. Joining us now by phone is Robert Moskow. He's food analyst with Credit Suisse. Robert, you have a brand new note out today on Tyson. How much are they going to be impacted by this bird flu? Are you worried about it?
Well, no, I'm not, and I don't think it will have a material impact on Tyson's operations. I don't think it's going to have a material impact on domestic demand. I guess it's possible that more countries might apply restrictions on U.S. exports as a result of this breakout. But historically, these issues kind of just blow over, and we look back at the last two outbreaks that were publicly a big deal in 2004, 2015, and we found really not much of a material impact on chicken prices, and we found that Tyson stock bounces back pretty quickly.
Any kind of scare like this, I think back to Asian stocks when you had the issue with SARS. Anytime something like this, or airlines when they were worried about whether or not people were going to get on planes, they've always historically turned out to be a buying opportunity because the companies recover pretty quickly. That kind of reiterates what you're just telling us now.
That's right. And I think that the chicken industry has done a pretty good job of assuring the public that you're not going to get sick as a result of these avian flu breakouts. You can't get it transmitted to you from the food supply, even if it were in the food supply. It only affects the birds, and you'd have to be working at a chicken operation in order to get sick, and that's frankly, why these issues are a bigger deal in Asia. There's more people working in agriculture there.
Have you paid attention at all to this Peter Navarro, who is one of Trump's trade advisors, about his concern about the U.S. food supply chain being controlled by foreigners at some point? Would that take anything out of these stocks if you're worried that like a Smithfield food deal bought by the Chinese a couple of years ago couldn't happen in the future?
I don't think so. I don't think anyone's quite sure what the Trump administration is going to do with respect to just about anything. So, I think that that a deal like Smithfield might have more trouble getting through today in that type of environment. But as far as like how it affects domestic supply, I don't think so, no.
What does it cost if they have to destroy 73,000 chickens that are, I gather, breeding stock as opposed to the stock that would show up in grocery stores? What does it cost them?
It costs you less than you think to destroy 70,000 birds, so it's immaterial to their financials.
Like a buck a bird, 50 cents a bird? Any idea?
I'm not in the business of destroying birds, but in the context of Tyson's market cap, this is a very small financial impact. The bigger risk is that they find more facilities where the outbreak occurred, and that would it might snowball into something. But the biosecurity at these places are really, really strong. And I think the probability of that is just very low.
All right. Thank you, Robert. Tyler, I thought the birds had been culled, not destroyed.
Culled. I think that was a very artful term there.
Is that what that means?
Let's go to Seema Modi for a market flash.
Hey, Tyler, we got our eyes on GoPro, the action camera maker, near its lows of the day. You guys hit this call in Street Talk. Goldman Sachs cutting its rating on GoPro to sell and setting its price target for the stock at $6, citing significant challenges, including saturation in its core market. You just take a look at volume. More than 8.5 million GoPro shares have exchanged hands today. That's more than 3 times its average volume over the past 10 days. Tyler?
Seema, thank you very much. Check, please, is next.
Professionals don't wait for great opportunities. They go looking for them. In North America, Europe, and Asia. In stocks, options, futures, forex, and bonds. Dozens of markets. Hundreds of brokers. How can you stay on top of them all? You don't have to. Interactive Brokers lets you enter low-cost orders 24 hours a day in 24 countries, 22 currencies, and 110 markets from a single account on any device. Interactive Brokers. Whether it's bringing cutting-edge Wi-Fi to 35,000 fans or keeping a hotel's guests connected, businesses count on communication, and communication counts on CenturyLink. CenturyLink, your link to what's next.
So with our Ally Cashback credit card, you get rewarded for buying stuff.
Like what?
Like a second bee helmet with protective netting. Or like a balm, Or a cooling ointment for the skin.
How about a motorcycle?
Or some bee repellent. I'm just spitballing here.
Nothing stops us from doing right by our customers. Ally, do it right.
Told you not to swat them.
Dentech knows teeth grinding can feel like 250 pounds of pressure. Stop the painful grind with Dentech Dental Guards. Dentech's snug top layer and protective bottom layer end the grind. Protect with Dentech.
Where's Frank? It's league night.
Save money on motorcycle insurance with Geico going up the country, bowl without me. Frank.
I'm going to get nachos.
Snack bar's closed.
Yeah!
Geico Motorcycle. Great rates for great rides.
Check, please.
If you're watching Saturday Night Live, the National Retail Federation spending the big bucks to run an anti-border adjustment tax commercial.
Too much dough got you feeling low? Too much cash breaking your back? Then you need the Bet Tax. The all-new Bet Tax is specially designed to make your disposable income disappear.
That is my check, please. They advertised on SNL because they know Trump watches it.
Yeah, I think that's, and he's a big fan of SNL, as we all know.
Lately, I hear.
Yeah, lately he's really like. They're debating in Parliament over in Britain, apparently, a regulation that that an employer put in place that mandated that women wear high-heeled shoes at work. It started in 2015 when a woman who worked as a receptionist at PwC in London was sent home without pay for wearing flats. Apparently, she was employed by a contractor doing business with PwC, and their rules say 2 to 4 inches minimum.
When it comes to, you and I talked about this a little bit in break. What a total waste for Parliament to be debating high heels.
A waste of time.
That being said, I am of Latin extraction.
Yeah.
I wished I emerged from the womb wearing high heels. They are my uniform.
They are mandatory.
Good shoes. I can't imagine life without high heels, Tyler.
No, and so there's the regulation.
But mandating it, probably too much.
Probably too much. All righty, thanks for watching Power Lunch, everybody.
Closing bell starts right now with Kelly in her high heels.
Boy, are they high heels today. Wow, are they high heels?
They're a kitten heel, so to speak.
Actually, they are.
Proud of this. I felt.
Let me just, for the record, we are the same height. It's only the shoes that makes the difference here. Yes, we have measured
You're
it.
free to participate in the high heel.
We back in the 70s, I sold shoes in college, and I sold those platform tennis shoes that guys would come in and claim they were buying for their girlfriends. But anyway, yes, so I never wore them.
I'd like to see those shoes come back.
Where were we now?
We were talking about the closing bell. Welcome, everybody. I'm Kelly Evans at the New York Stock Exchange.
And I'm Bill Griffin. So it was 8 years ago today that the S&P hit its low point, 666.
Yeah.
Discuss that for a while, okay? The market has, of course, come a long way since then. In the past 8 years, the S&P right now is around 2375. We're going to look at what's behind the pause that's going on right now.
Well, some travel stocks are getting hit as President Trump signed a revised executive order temporarily banning travel into the U.S. from 6 countries. We'll get you the full details.
And snapping its win streak, we have the first down day for the hot IPO of last week's Snap. We have more on what's behind that lower move today, down 8.75% right now.
And cutting back on Apple. TD Ameritrade clients have been selling shares for 7 straight months. We'll debate whether that means now's the time to sell as those iPhone 8 leaks begin to trickle out.
iPhone 8, we haven't even gotten to see the iPhone 7 yet. Yeah, we'll talk about that coming up. Let's start with President Trump. Eamon Javers at the White House with the events there today. Eamon?
Yeah, hi, Bill. This is a very buttoned-up White House today in the light of the signing of this executive order. The president signed it this morning behind closed doors. They wouldn't allow reporters or cameras into the room when that event happened. And Press Secretary Sean Spicer just briefed reporters, but only off camera. They wouldn't go on camera with the press briefing today. So the one official we did hear from today, though, is the Attorney General, Jeff Sessions, who described the need for this president's second executive order on immigration. Here's what he said.
We cannot compromise our nation's security by allowing visitors entry when their own governments are unable or unwilling to provide the information we need to vet them responsibly.
Group effort that everyone had worked on it. And
so what we know here is that this is now not 7 countries, it's 6 countries. They've taken Iraq off the list of countries that's affected by this because officials here at the White House say that the Iraqi government's been very cooperative in terms of getting them the data and information that they need to secure travelers coming from that country. This is going to be effective on March the 16th. They want some time now to implement it and roll it out to all the line officials who will be dealing with it at airports. It does not revoke valid visas that are in place right now. There's no distinction here made for Syrian refugees, and all refugee admissions overall are going to be halted now for 120 days, and they say it does not apply to current green card holders. So a revised second take at the executive order here after the rollout mess that the White House saw after the January 27th EO. They say this one is going to go much more smoothly because there's been a lot of coordination now between the Departments of Homeland Security, State, and officials here at the White House, guys.
Eamon, if they're exempting green card holders, what is the substance of this actual ban now once it goes into place?
Well, the ban is in place now for 120 days. They're going to stop the refugee program for 120 days. They're also going to give a multi-day process here whereby they give these other countries the opportunity to provide information and then get off this list. And we'll see whether those countries will cooperate and will provide the kind of information that the White House is looking for. Sean Spicer saying today in the briefing that they feel that something might happen over the course of the next 90 days after this is put into place, whereby maybe some more countries can be removed from that list in addition to Iraq.
All right, Eamon, thank you. Bringing us up to date at the White House. That's Eamon Jabbers. North Korea did launch 4 more ballistic missiles as that country moves forward aggressively with their nuclear weapons program. How does a poor country afford something that expensive like a nuclear arsenal? A new report out of the UN today provides new financial evidence on how the country is flouting UN sanctions, often with the help of its patron China. Michelle Crusoe-Cabrera has more. Hi, Michelle.
Hi there, Kelly. Yeah, the new report details how North Korea makes millions by selling arms to countries in Africa and the Middle East and billions selling coal and iron ore to China. One example, a ship seized by Egypt in the Suez Canal was carrying a shipment of 30,000 rocket-propelled grenades from North Korea. Destination unclear. They're in those crates underneath that tarp, underneath that dirt. The report shows the country sells various armaments through a company called Glocom, short for Global Communications, which advertises on the internet and makes almost no efforts to hide its North Korean origins. There are many front companies like Glocom in the UN report, which are registered in Malaysia or China in order to try and hide their North Korean roots, but not very well. North Korean diplomats have been repeatedly caught smuggling banned goods such as gold bars, cash, watches, and even this Bentley. Investigators also discovered that SWIFT, the international payments system, is still processing transactions for North Korean banks, even though some of those are using the global financial system by the UN sanctions. I've reached out to SWIFT and am awaiting an explanation. North Korea's biggest influx of cash, however, more than $1 billion, comes from selling coal and iron ore to China. China has promised to curtail those purchases more than once, but it hasn't happened. The UN has asked China for an explanation, guys.
You anticipated my question. It was, I looked it up, February 18th, when China said again that they would not be buying any coal from North Korea.
Right.
Yes. And
keep in mind, that's the second time. That's the second time they've said that. They said that back in the middle of last year, and then we've seen actually their coal imports go up, went up even higher than what they had said before. So this second time, a lot of people are worried that it actually won't mean very much when they say it.
And Michelle, China's also reportedly, some of its travel agents there, for example, are boycotting South Korea, because it's upset about its anti-aircraft missile defense system. But when you have stuff like this happening, in your backyard, it's hard to blame them for wanting that kind of technology.
Sure. When you read the report, you realize that North Korea broke its own record last year with 26 ballistic missile launches. That's not including what we've seen in the last couple of weeks and the 4 that were last night. So they've become very, very aggressive. They say out loud, very different from Iran. Iran says we want a nuclear program, but a peaceful one, and it has nothing to do with weapons. North Korea makes no bones. We have a nuclear weapons program, and we want one.
Scary.
Yep. Michelle, thank you. Let's talk more about this. The market not seeming to mind the political risks going on overseas. In fact, we've seen quite the rally up until the last few days, and gold it's up 60 cents today. We're not seeing the usual lift there either.
Yeah, joining us now are Halima Croft from RBC Capital Markets, who's over there at Post 9, and Fred Kemp from the Atlantic Council. So, Halima, how does the market just keep, digesting these risks as if it's no big deal?
I think the problem is right now, and we've had North Korean ballistic missile tests going on for some time, so it's not really seen as an elevation in the North Korean threat. The assassination of Kim Jong-un's half-brother got some attention, but I'm not sure the market is really appreciating the real risks that could be involved with this North Korean regime potentially going forward, for example, with an ICBM test, a missile capable of hitting the west coast of the United States. So right now, I think it's pretty blasé in terms of looking at these political risks.
We should point out, Halima, you're a former CIA analyst, so, that's your street cred on this particular story here. Fred, how scared are you? How worried are you about what the North Koreans are doing right now?
Less worried than I am fascinated to watch the dance between China and North Korea. A year ago, the uncle of Kim Jong-un, the leader, was assassinated. He was the intermediary to China. Then recently, the brother was killed. He was being protected by China as kind of a fail-safe option if anything should happen to Kim Jong-un. And now you have, and Michelle's report was excellent, you have talk about the coal embargo. That is the key thing to watch, is will this coal embargo happen? And then the other key thing to watch is how does Donald Trump communicate with Xi Jinping, the leader of China, during this period of time. It's very interesting that the White House has been as muted as it's been today.
Halima, 60 Minutes also featured this issue not long ago, just a couple of weeks ago, about North Korea. Went there speaking with the military operations the U.S. has in South Korea, where they said, listen, we could do a lot of damage in a very short period of time if we needed to. Do you get any sense out of this administration that they would ever strike preemptively?
I mean, I do not think this administration wants to strike North Korea preemptively. I think this administration, they have a lot of heightened rhetoric on issues like for Iran, for example, but are not looking to pick that fight right now. But the problem is what happens in the event, again, like you do get an ICBM test. What is going to be the response to this administration? I do think that this is where the issue of staffing vacancies in key departments in Washington, the problems with the CIA and the White House, that comes into play in terms of the policy response.
Halima, why don't you think we're seeing market response to any of this? I mean, you know, in the past, and I mean a pretty distant past now, because we haven't seen much lately in the markets, you'd see gold go higher, for example, as an example of, you know, the fear factor. The VIX, as we all know, in the stock market has been multi-year lows for several weeks now. What do you make of that in the context of what's going on overseas?
I mean, I think people just view this as just noise. Again, if we see something really significantly stepped up, again, like an ICBM test, if they're seen as a clear threat to South Korea, I think the market would take that seriously, but it almost has to materialize for it to be really digested. I think the same thing with Iran.
And Fred, you know, when you talk about the kinds of testing that we're seeing come out of North Korea and hear how common it's begun and wonder how the international community has just stood by and let this happen and let it get to a point where we're even speculating about these outcomes and what's next, what further pressure can anybody put on North Korea save China? And who needs to put more pressure on China to get this all to stop? How can we do something to put more pressure on North Korea to end this kind of behavior?
You know, anyone talking to senior Chinese officials these days knows they have lost their patience. They've lost their patience with the nuclear program. They've lost their patience with the leader. But what's their alternative? What they don't want is they don't want to collapse with hundreds of thousands of refugees coming across their borders. And they don't want an unplanned, or they don't really even want a Korean unification, where it could end up that South Korea is the leader in this unification and it lands somehow in the West. So it's a very complicated calculus. So it really is only the Chinese putting pressure on themselves. Obviously, if it was ICBM, that's a good point, because that's an intercontinental ballistic missile, meaning it can reach the United States. Had this been a test of an ICBM, I think you'd be seeing a lot more pressure from the U.S.
But why are we waiting for that to happen? Why are we waiting for North Korea to test an ICBM?
Well, this gets to the whole question of political risk and geopolitical uncertainty. The great Chicago economist writes about the difference between the two of them. Risk is something you can calculate, and people are looking at Donald Trump and they're seeing deregulation, they're seeing tax cuts, and so the markets are buoyant. The political uncertainties, you can't measure the risk there, and that's where we are with North Korea. You don't factor them in the markets because you're sort of wishing they don't come true, and we're looking at the Middle East, same situation. You're looking at the elections in Europe. You have an accumulation of political uncertainty that the market has not priced in.
Yeah, that was the point I was going to make, Halima. If there's any time to be rattling sabers, it's now. With the seam that we've got here in the United States, the transition we're going through here, the Brexit crisis in Europe and so forth. I mean, this is the time if they're going to make a move, right?
No, I mean, I think this is we have to be very worried at this moment. I think that's why we are seeing not only tests from North Korea, but we're continuing to see more aggressive behavior from Iran with missile tests, with activity in the Straits of Hormuz. I mean, I think this is anything but, placid waters in terms of political risk.
But here again, we're not seeing any of that in the markets, right?
No, again, I think we have to see something significantly stepped up to see it priced in, whether it be, in terms of gold or whether it be in terms of the oil price because of the Middle East. So again, we can talk about the fear factor, but we actually have to see something materialize for the market to get nervous.
Halima Croft, Fred Kemp, good to see you both. Thank you for your insights today.
A little more than 45 minutes to go today. Markets are lower. The Dow's down about 30 points. It's back below 21,000. The S&P is down about 6 points. The transports are down 75. The Nasdaq's down 18. The Russell's down 10 today.
Do you think we'll be like this all week until the jobs number on Friday? What do you think? I mean, it's early.
You know, this is a market that just still feels like it wants to go higher, but we'll see. As we were just discussing, plenty of reasons why it might be taking a pause.
Meantime, Snap posting its first decline since going public last Thursday. We'll tell you what's pressuring the social media company shares when we come back.
And General Motors laying off workers at a Michigan plant. Plus, it's selling its European Opel division to the French maker of Peugeot. We'll discuss GM stock coming up. It's down 1% today. You're watching CNBC, first in business worldwide.
More than 24,000 companies run their business cloud.
Pinterest is the world's catalog of ideas. We help people discover and do what they love. So partnering with Oracle Data Cloud has helped us demonstrate how we drive new customer growth for our partners, a concept that couldn't be more relevant in today's competitive retail environment.
Oracle, more enterprise cloud applications than anyone else.
I'm Andy, and I lost 30 pounds on Nutrisystem.
Listen up, guys. Want to shed a few pounds? Got a beer belly going on? Can't fit into your pants? Then you need Nutrisystem for men.
I'm Essex, and I lost 43 pounds on Nutrisystem.
Lose weight now with Nutrisystem's Turbo 10.
I'm Brian, and I've lost 75 pounds on Nutrisystem.
Put down the pie, pick up the phone, and get with the program today. Lose 10 pounds and 5 inches overall in your first month. Lose weight now, money back guaranteed.
The food was delicious. This is perfect for men, especially guys who don't want to cook.
So get off the couch and order Nutrisystem for Men right now. You'll get 1 week of all new Nutri-Crush bars free and 1 week of Turbo Shakes free. Call or go online in the next 2 minutes and get our exclusive activity tracker free. Track your steps, miles, and sleep. This easy-to-use touchscreen tracker even gets caller ID and text messages. A $75 value, yours free.
It's not that hard. You eat the food, you lose the weight.
Go online or call 877-598-THIN and get Turbo 10 with activity tracker free.
We're at Lockheed Martin to take a deep dive into the F-35. This is the most expensive weapons system in the world. After years of cost overruns, the price of Lockheed Martin's stealth fighter jet is falling. We have had unparalleled access.
When I got to be 50, my doctor told me enlarged prostate happens with most guys my age, with frequent urination day and night. He suggested Urinozinc, reduces frequency, and most important, supports a healthy, normal prostate. Take Urinozinc and take care.
It's IHOP's National Pancake Day, and to celebrate, we're giving away free short stacks of our world-famous pancakes. Join us in supporting Children's Miracle Network hospitals. Free short stacks on March 7th from 7 a.m. to 7 p.m. IHOP, eat up every moment.
I was on heroin.
I used crack cocaine. We are the Addiction Network, and if you have a problem with drugs or alcohol, you need to call the number on your screen now. Addiction is a disease, and you can't go it alone. The call is free, and so is the consultation. So why haven't you called? What are you waiting for? Call the Addiction Network now. Get the help you need.
Call 800-844-0420.
Slight down day, the Dow down 31 points, and look at Snap, a minus sign. It's the first time since going public last Thursday that we've seen some selling. Needham initiated coverage of the stock with an underperform rating, noting that Snap's total addressable market is 80% smaller than that of social media rival Facebook. It has a $19 to $23 price target on Snap, Needham does, and Barron's once again negative on Snap, calling its shares, quote, ridiculously valued after they shot up from their $17 a share IPO price. Today, $24.63.
Well, guess what? Today also marks 8 years since the stock market hit its very bottom. Markets fell to multi-year lows, with the Dow dropping to 65.47 intraday. The S&P fell as low as 666. The Nasdaq was down to 1268.
But certainly the markets have come a long way since then in the past 8 years. The Dow hit that 21,000 level a few weeks ago, did it again last week. Joining our closing bell exchange today with more, Michael Farr from Farr Miller in Washington, Kenny Polcari from O'Neill Securities is with us here at Post 9, and Rick Santelli at the CME in Chicago. What a run it's been. Huh?
What a run. And, you know, and I was here, we were all here when that was happening, right? When the S&P was trading at 666. It has been a run. Most of it, though, I think, fueled by the monetary policy that we saw at central banks around the world, more so than economic policy. Be it as it may, I think it is what it is. Now we're into a new chapter. Now I think this latest run and this latest move is much more focused on reform. Tax reform, economic reform, and real kind of fiscal policy, not monetary.
With all due respect, though, we've been saying that for a while, right? I mean, this has, even as the market's gone higher the last 8 weeks, we have come up with a myriad of reasons why it should go down at some point, right?
And I think it will go down, but I don't think it's going to crash at all. I think an adjustment or a pullback, digestion in prices, you know, a 3 or 5%, even a 7% pullback would almost be welcome. Actually, I think people are hoping that happens, but the more you hope, the more it goes the other way, right?
And that's what I was going to say. So, Michael Farr, how do you invest in this environment?
I think probably very carefully. You know, one of the things that concerns me about what Kenny was just saying is we're making a shift of just watching one area of government for another area of government. I mean, we've been watching the Fed for 8 years and what they're going to do and how it's going to affect markets. Now we're watching Congress and fiscal policy and the Treasury to figure out how they're going to drive markets. I kind of long for the old days, and I know Kenny does too, when we would actually look at earnings and balance sheets and fundamental growth and top-line growth and these sorts of things. So I think you take a look at maybe some of the companies that are going to benefit from some of the tax cuts and domestic tax cuts. Companies like a CVS, for instance, domestic operations will benefit from lower taxes. I like the industry. It's got beaten up in healthcare. Or even a Sprouts farmers market is a different kind of a retail investment that I think still looks cheap at about $18 a share. Their produce is 25% cheaper than most of the other supermarkets, even a discount to Whole Foods. So I would be careful and I wouldn't be too aggressive. Markets making two all-time highs. It's a time to be cautious.
Hey, Rick, I'm just looking at a chart of the 10-year yield going back 10 years here. So I'm looking at that time frame around 2009. It actually went to 2 3/4 or thereabouts. But then it hit 4% before it started moving precipitously lower. So we've seen, quite the move in the Treasury yields as well over this time frame, right?
Absolutely. And the thing, Kyle, the stock market is multiples of what it was back then, but yet interest rates are still multiples in the other direction in terms of their smaller size. 2 points I'd like to weigh in on. First of all, none of us truly know that if there was no Dodd-Frank, there was no crisis area issues going on or policy, outside of a few of the early Fed programs I thought were good, the asset-backed program, some of the liquidity that was needed, that was addressed by the Fed, that was all good stuff. But the notion of going to 65, 6,600 and policy bringing us back, we would have come back anyway, just like a TARP vote. The worst move is always followed by a reversal. And many always underestimate how the animal spirits they call that crossing the creek. You have a big break, it's like going into a canyon. Many times markets come back a large part on their own, but it's a counterfactual. But what really strikes me is so many of our guests have believed that the number Friday is going to make or break whether we see a tightening in March. After the multiples we've all just discussed, I think it's kind of silly after all these years that it still boils down to one number. That's wrong way thinking. And on Michael's one comment, maybe the best way to get back to fundamentals is to actually embrace policy changes. We are reversing the things that work against fundamentals, whether, revamped tax policy, good regulations. These aren't meddling with the ultimate multiples down the road. These are getting them back in line. The distortion's been the last 8 years.
But Rick, it's still a shift from monetary policy to fiscal policy easing, right? I mean, this is a stimulative fiscal policy we're looking forward to here. I'm not saying it shouldn't happen. It should
because
happen,
we're taking saddlebags off. We're taking saddlebags off. I know we're all using stimulative. I look at it as normalization of policy. We had bad policy, regulations that made no sense. We were regulating small entities the way we were regulating very large balance sheet entities. All of that coming off is a good thing. A good thing. Less government in certain ways. In certain areas it's needed, like immigration. But in other areas, it isn't as necessary, and I think we're making the right call.
Which is Rick, which is exactly my point, right? The last 8 years have been really stimulated with monetary policy and central bank policy around the world, not just in this country, but really around the world. And that's right. And we saw rates negative in parts of the world, and so people were forced. They were forced into the market and to put money looking for yield, which is what really drove so much of the move that we've seen off the lows. Now, that being said, normalization is going to be a good thing, and so maybe there will be a correction, and there should be a correction. But once we get back to normal, then we will start to focus, like Michael said, on the fundamentals and what really matters.
All right, guys, we got to go at this point, but we'll leave with everybody nodding their head at the same time. That's a good ending point right there. Thanks. See you later. 37 minutes left in the trading session for this Monday. To begin the week, the Dow is down a mere 27 points right now. It was down 93 at the low, but we've come off those lows here.
Well, General Motors is lowered today after announcing plans to lay off some workers in Michigan. Plus, it's selling its money-losing unit in Europe. We'll have all the details next.
And Tyson Foods trading lower after a bird flu outbreak at one of its suppliers. We'll have details on that coming up.
The Bond Report is sponsored by PIMCO.
All right, listen up. You know your strategy, and we back-tested it all year long. Casting. You need to visualize your trend line and set your exit. If you see an opportunity, you go long on the play. You guys all understand what absolute return means? You gotta have fire in your belly to maximize your yield. There's no put option on winning. It ain't like that.
You know you're ready for TradeStation. Seize opportunities with real-time alerts and custom trading tools, even on the go. Traders trade with TradeStation.
With the Home Advisor app, it's easy and free to find home pros for any project. From a simple repair to a major remodel. Tell them what you need and get connected to top-rated local pros. Start your next project with Home Advisor.
Attention homeowners age 62 and older. One Reverse Mortgage has a great way for you to live a better retirement. It's called a reverse mortgage. Call right now to receive your free information kit with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. Plus, when you call now, you'll get this magnifier with LED light absolutely free. When you call the experts at One Reverse Mortgage today, you'll learn the benefits of a government-insured reverse mortgage. It will eliminate your monthly mortgage payments and give you tax-free money from the equity in your home. And here's the best part. You still own your home. Call now. Take control of your retirement today.
Call 800-383-7144 to get your free information kit. Call now and also get a free magnifier with LED light.
The power of a low volatility investing approach. The power of smart beta. Power your client's portfolio with Power Shares. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Call 800-983-0903 for prospectus containing this information. Read it carefully. Distributed by Invesco Distributors, Inc.
From the moment I arrived in this country, I've been an entrepreneur. I've invested in hundreds of successful companies. I'm being pulled in every possible direction. I think I need another me. My search for the partner starts now.
Marcus Lemonis offers the ultimate job opportunity in The Partner. Series premiere tomorrow at 10. And catch the first episode on demand now.
Shares of General Motors trading lower, down about 1% right now, with the auto giant saying it plans to lay off 1,100 workers at its Lansing Delta Township assembly plant in Michigan. That'll happen in May. That as General Motors then shifts production of a vehicle to Tennessee, where it added 800 jobs last year. Separately, the auto giant is selling its loss-making European arm, Opel, to France's PSA Group in a deal valued at $2.3 billion. Opel owns the British Vauxhall brand, and PSA makes Peugeot and Citroën vehicles. PSA says it plans to return Opel to profitability, targeting a 2% operating margin within 3 years. Opel recently notched its 16th straight full-year loss. Wow. Today's deal makes PSA Europe's second biggest car maker by sales, behind only Volkswagen.
And it's that latter point which is most interesting about this. All of a sudden, Peugeot vaults to become one of the biggest automakers in the world. I think the CEO was with, knows Marchionni, maybe worked with him in the past, but what he's done with Fiat Chrysler, the alliances he's formed, and the way he's made that into one of the world's leading automakers, Now you've got Renault and Peugeot kind of jockeying for leadership and the European, from the European point of view, but GM receding. And by the way, the biggest automaker in the world, a crown which has gotten a lot of different people, Toyota, Volkswagen, in trouble chasing it over the years. So if it can improve profitability by leaving the continent, fine, although there are others who point out that the continent in terms of auto sales is on an uplift, while the U.S. and China arguably might have peaked.
How is Opel still in business if it's had 16 years of losses?
Because of GM. I think they've sunk $20 billion into it over that period that you mentioned.
Crazy.
Well, so they're pulling the plug.
Cut that off now. We have a sudden news alert here on ESPN. Julia Borston, what's going on?
A source close to the situation tells me, Bill, that ESPN plans to lay off a small percentage of the roughly 1,000 ESPN employees who are forward-facing talent, either on-camera reporters, writing for ESPN.com, or creating podcasts or radio reports. Now, my source tells me that while costs are always a concern, what this really is about reshaping ESPN for the digital generation, figuring out what kind of talent they need to have in place to create content for new products and new platforms. We reached out to ESPN, who gave us this comment saying, quote, "We have long been about serving fans and innovating, create the best content for them. Today's fans consume content in many different ways, and we are in a continuous process of adapting to change and improving what we do. Inevitably, that has consequences for how we utilize our talent. We are confident that ESPN will continue to have a roster of talent that is unequaled in sports." Now, there's no word yet on what percentage of those 1,000 employees will be cut. They say this is still early. My source close to the situation says this is still early days as they evaluate what they need to create more of this digital content. Guys, back over to you.
Julia, do you get the sense this is imposed from Disney at all, as that company has been saddled with trying to right the ship at ESPN, or is this just ESPN itself having to make some difficult choices?
Well, I think those two things can't really be separated. I mean, certainly ESPN is part of Disney, but I think it's really interesting. ESPN has talked a lot about how they're changing show formats. They're trying to figure out what type of content works best on different platforms. I mean, just last week I reported about how ESPN has been doing a lot for Snapchat, and they've been creating a lot of content for that platform. So as they are included in these over-the-top bundles, as we saw with their inclusion in the YouTube TV bundle that was announced last week, they're trying to figure out what kind of content people are going to want to watch on their smaller screens and as they move between screens. And it's a very different kind of show that you'd create for Snapchat than you would for traditional television.
The irony to me is they've had an exodus of talent at precisely the moment they're doubling down on this personality-driven format. So it's a tricky transition period for them, Julia.
Certainly a lot going on right here.
That's for sure.
Thank you for bringing us the
Thanks,
story
Julia.
of our Julia Borston in L.A. Time now for a CNBC News Update with Sue Herrera. Hi, Sue.
Hi, guys. Here's what's happening at this hour. Israeli police say a Palestinian militant has been killed in a shootout in the West Bank. The man headed a group planning attacks against Israeli targets, and when Israeli forces tried to arrest him, he opened fire. Newly confirmed HUD Secretary Ben Carson speaking for the first time to his employees at the agency this afternoon. He had some interesting things to say about his health care as a boy growing up.
I loved everything that had to do with medicine. I even liked going to the doctor's office. So it tells you I was a strange kid, I would gladly sacrifice a shot just so I could smell the alcohol swabs, but
A panda cub being extra cute, becoming an online sensation on Chinese social media. The baby cub, after failing to attach herself to not one, but two breeders, resorting to standing in their way and rolling around on the ground in hopes of gaining their sympathy towards her. She's known to do this. This is a trick that she does frequently, apparently. They call her the clingy panda, and she doesn't give up. There she goes again.
I know I'm going to alienate myself to a bunch of people.
Are you saying that doesn't work?
I don't get the panda
love
thing.
I think they sped up that video.
When I go to the zoo, I much rather watch the chimpanzees.
No.
They are fascinating. I love the chimps.
Pandas,
they're cute, but
pandas do it for me.
Give me chimpanzees any day.
Creepy.
They're cute.
Chimps?
Yes.
Yes.
Oh, they're hilarious.
Oh, no, I stay away from
That's like watching an
They're
Abbott and Costello
dangerous.
movie.
When I was traveling in India on assignment, there was a note on the desk that said, do not engage with the monkeys, they bite.
Well, I don't engage with them. I just like watching them.
There were fun ones in
All right.
Gibraltar.
Thank you. I know. I'll be hearing from all the panda lovers out there.
You'll be hearing from the panda contingent.
I'm sure I will. Thank you, Sue.
Sure.
See you later. 27 minutes left here in the trading session. The Dow hovering right now. We're down 41 points. Airline stocks have been under pressure today after one of the major carriers sounded an alert on the cost increases outpacing revenue growth. And you probably guess where the biggest cost increase is coming from. We'll have details on that coming up.
Also, bird flu striking a Tyson Foods chicken supplier. We'll tell you how that company is dealing with the outbreak. Its shares down 2.25%. When we come right back.
When you need help with a home project, there's only one place to go, HomeAdvisor. The free way to find trusted pros in your area. Other websites say they're free, but charge you for most of their features. HomeAdvisor is always free. Free to get matched to top-rated pros. Free to read reviews. Free to check the project cost guide. And free to instantly book an appointment. HomeAdvisor is so much more than a list. It's the best way to get help for all your home projects. Go to HomeAdvisor.com.
HomeAdvisor.
In short, a declining day following a rampaging bull run is actually a sign of health, especially when it's associated with a gigantic yet well-run IPO. It should ultimately bring out more buyers than sellers.
I'm Chuck Hughes. I was a pilot for 36 years. As my wife and I approached retirement, I worried about outliving our money. So I started trading from home with just $4,600. Within 2 years, using my own unique strategy, I made over $460,000 in profits. That has now grown to an account that produces $50,000 a month in cash income for my family. And now, in my new book, I show you exactly how I trade. I reveal everything, even copies of my brokerage statements.
Chuck just won his 8th International Trading Championship, outperforming the competition by over 100%. And if you call or go online now and just cover shipping, you can get Chuck's new book, Trade Like Chuck, for free. Act now and you'll also receive a free copy of Chuck's Retirement Catch-Up Plan DVD. Call 1-800-296-5764 or go to tradelikechuck.com now to get your free book. That's 1-800-296-5764 or tradelikechuck.com.
Welcome back. We have our eye on shares of GoPro today. They're down 7.5%. They're trading around $8.18 right now, and they've fallen today to their lowest level yet. Goldman Sachs downgrading the stock to sell from neutral, cutting its price target to just $6 a share from $9.50. The analyst at Goldman citing the saturated market for GoPro's core action cameras and its disappointing entry into the drone market. Bill?
You could shoot a lot of chimpanzees with that GoPro camera. You'd get great video with that. 24 minutes left in the trading session here with the Dow down 24 points. I'm here with Peter Costa from Empire Executions. I know you're putting on a good face.
Yes, I always do.
You're not in this market. You're waiting for a pullback. And I think you should be speaking to the people out there. A lot of people who are in the same situation. They're not there. They're waiting for that pullback to get in. But
well, you know what, Bill,
are you waiting for Godot?
That's a good question. I think that I'm going to have to put some sort of time frame on it because I think that I don't really see the market accelerating again like we had right after the Trump election. I mean, if we do go up, it's going to be very deliberate, very slow movement. If we don't get some sort of pullback in the next couple of weeks of something of substantial, maybe I'll jump in and I'll bite the bullet and I'll say it on, to the 25 million people watching on CNBC. that I may, I missed something. But
what are you going to buy? What would you think would be the financials? You think it would lead the way?
I'd buy the energy stocks. Although I don't think they're going to lead the way, but I do think that when the financials, when we get around to earnings period, I think the financials earnings will be better than what they were expected. And I think that, there's some movement on the upside. There's not a lot of groups right now I think are cheap. I think the energy stocks are.
Okay. He's smiling on the outside.
Yeah.
Tense on the inside.
Oh,
Thanks,
boy.
Peter. See you later. Kelly?
Thank you, guys. The first confirmed case of bird flu this year hitting the biggest chicken meat producer in this country. Morgan Brennan is at Tyson's Trading Post here at the Stock Exchange with more on this story. It sounds like a different strain of bird flu, Morgan.
It is, but it is a strain that is also very lethal and very contagious to birds. So this is why this is really coming under fire. Now, so I want you to take a look at shares of Tyson. We're down about $1.40 on the day. We're off the lows of the day, but still down about 2%. And this after government officials confirmed that a Tennessee chicken farm that is contracted by Tyson did test positive for this strain of bird flu. This is the first case in the U.S. in more than a year. So the 73,000 plus birds are already in the process of getting destroyed. No birds that are affected are going to be entering the food system. The roughly 30 farms that are within a 6-mile radius are already under quarantine. Now, Tyson putting out a pretty lengthy statement on this, saying that it's, quote, responding aggressively to help contain the virus, adding that, quote, based on the limited scope known to us at this time, we don't expect disruptions to our chicken business and plan to meet our customers' needs. Tyson, like other poultry producers, have had pretty tight biosecurity in place for several years now. Still, South Korea imposing a ban on U.S. poultry exports today. That country has been importing American products amid its own worst ever bout of bird flu. In the U.S., we've been little affected since 2015 when 50 million turkeys and chickens were destroyed in our own worst ever case of bird flu. So this is just a one-off right now, but the concern is that you see more countries ban exports or imports, I should say. You see more potential cases. That's the reason you're seeing shares of Tyson, also Pilgrim's Pride and Sanderson down today.
All right, Morgan, thank you. I'll see you later on the closing countdown as we head toward the bell. In fact, that's coming up in about 20 minutes, and the Dow is down 25 points right now.
Yeah, the S&P is slower by about 5, but again, we were much weaker earlier in this session, and we only have 20 minutes to go. With an iPhone overhaul on the horizon, we'll see up next if now is the time to put your money into Apple. Stay with us.
Professionals don't wait for great opportunities. They go looking for them. In North America, Europe, and Asia. In stocks, options, futures, forex, and bonds. Dozens of markets. Hundreds of brokers. How can you stay on top of them all? You don't have to. Interactive Brokers lets you enter low-cost orders 24 hours a day in 24 countries, 22 currencies, and 110 markets from a single account on any device. Interactive Brokers. Whether it's connecting one of the world's most innovative campuses or bringing Wi-Fi to 65,000 fans, businesses count on communication, and communication counts on CenturyLink. CenturyLink, your link to what's next.
Why do people invest? They invest for what's next. That could be a college dream, a new priority, an active retirement. Whatever next is, it takes smart investments managed by experts who actively spot risks and opportunities. Franklin Templeton has been doing that for over 65 years, helping millions of investors achieve what's next. Franklin Templeton Investments. Gain from our perspective.
What's the value of capital? What's critical thinking worth? A basketball costs $14. What's team spirit worth? What's it worth to talk to your mom? What's the value of a walk in the woods? The value of capital is to create not just wealth, but things that matter. Morgan Stanley.
I could tell right away ZipRecruiter was going to make hiring a lot easier.
Go to ZipRecruiter.com and post to over 100 job boards with one click. Then easily select the best candidates from one list. Try it for free today at ZipRecruiter.com/create.
Finally. Ron, they're finally taking down that Schwab billboard.
Oh, not so fast, Carl.
Oh no, Schwab again. Index investing for that low? That's 3 times less than Fidelity.
And 4 times less than Vanguard.
What next? No minimums?
No
minimums.
Schwab has lowered the cost of investing again, introducing the lowest cost index funds in the industry with no minimums.
I bet they're calling about the Schwab news.
Schwab, a modern approach to wealth management.
On a premiere episode of American Greed, high octane, low return. A $26 million scam takes investors for a ride. American Greed, tonight, 10 Eastern. CNBC. Get yours.
Look at some of the movers on Wall Street today. Deutsche Bank trading lower with the German banking giant announcing plans to raise $8.5 billion in the coming weeks to improve its financial health. This will be the bank's fourth capital increase since 2010. A stock sale is viewed as dilutive to existing shareholders. Meanwhile, airline stocks have been trading lower. During a conference in Florida, Delta said that it was cutting its operating margin forecast for the year. Carrier saying that it expects cost increases to outpace revenue growth. A lot of that will be fuel costs. The news taking other airlines lower as well, including American, JetBlue, and United Continental.
Well, shares of Apple are slightly lower today, but the stock is still less than 1% away from its all-time high. And while TD Ameritrade clients have been net sellers of the stock for 7 consecutive months, it's still the #1 holding.
So why have so many retail investors been selling their positions? Let's talk about that, among other things, with J.J. Kinahan from TD Ameritrade, and Jim Suva's with us. He's an Apple bull from Citi, both here at Post 9. A net sell over the last 7 months, even as the stock was hitting highs here.
I don't think it's a bad thing, Bill. People look at it and they say, well, your clients are selling a stock that's going higher. So think about the rap on retail clients for so many years. They were all in, they were all out buying highs, selling lows. So I think what you're seeing is a really interesting time where our clients sold Apple, because it's 52-week highs, and they've been doing so as it keeps hitting these highs. To me, it's a great story, actually. And they've been doing the same things with, Tesla, which had a 52-week high. So as these stocks go up, I know we want to talk about Apple in particular, but the retail client, especially those who will engage, are much more intelligent than giving credit.
Jim, that's what makes the Warren Buffett thing so interesting. So he didn't say he was buying at these levels, granted, but obviously he's not in it for a 5 or 10% upside, which is roughly what we've seen so far this year. So what's the case for shares of Apple going appreciably higher and maybe getting retail investors excited again?
Well, it's a great observation, and we really think that near term the iPhone 8 is going to be a huge upcycle. In fact, when we think about the iPhone 8, we expect the build plans to be strong and the news to start to come in more and more positive into the iPhone 8. And we actually call it a super cycle. Near term, a super cycle. Longer term, people push back and say, hey, there's not room to growth. We actually see areas in content and geographics areas such as India as great upsides.
Do you think, I can't believe we're already talking about the iPhone 8. We just got finished with the iPhone 7 introduction, and now we're already anticipating the introduction of a phone that won't be out till the fall, right? Do you think there'll be fatigue by the time we get there?
Well, that's the exciting thing about the stock market. We always look forward. What's next? What's next? And what's next? And with Apple hitting all-time high stock prices, we do see what next is being the iPhone 8. Yes, September of this year is when we see it launching. And we believe with the screen, better battery processor, better camera, dual-facing cameras, better processing, people will like it. They've held onto their iPhones a long time, and now for many self-employed people like Uber drivers and things like that, it's their primary computing device. We think they'll pay up for the device.
Still, that flagship model is going to be $1,000. But JJ, here's one thing I've been wondering about pertinent to this discussion. How much do retail investors follow Warren Buffett or Berkshire and what they're doing?
Well, I think Warren Buffett, let's face it, he's probably the biggest celebrity in our industry, right? So people are naturally going to follow what he does. With that being said, you will see when he speaks about a particular stock, people go into it. But I think one of the things that retail clients have started to sort of discern is Mr. Buffett has a little more money where his time frame can be a little bit different, and so they're just trying to make, in many cases, a decision for a few months. It could be for a few years. Obviously, everyone has their different time frames, but I think you have to be a little bit careful when you go in. Not that he's not one of the most brilliant people, but matching up time frames with Mr. Buffett's time frames. Are your
clients, they tend to be more like traders, what we would call a trader, as opposed to an investor?
Well, I wouldn't say that. We're pretty, split. But one of the things I would say, if you look at this index, it managers, people who have engaged at least once a month with the market, because if you're taking as much more time planning your vacation this year than you are your financial health, it's going to be a little bit rougher. People who engage once a month, we know they're taking it seriously. They're at least, hey, I should be planning. I should be doing things. And I think that's the most important message out of all of this.
By the way, the mobile phone made Snapchat possible. How many people are trading Snapchat IPO?
IPOs in general, I can't talk.